Good morning. It's Friday, and we're back on Forex Focus on Tasty Live. I'm Glenn Freiberger. Pete Mollmat, how we doing?
Glenn, fantastic. Great to see you, my friend. Wild week. You and I were able to navigate it well, so this has been great.
Scary week.
Yeah.
It's,
Yeah, it's been great. But the weekend's almost over. I know you probably got some big plans. What do you got on for the
Oh, man.
Hey, hold on one second, my friend. John, I'm hearing like an echo. I don't know if you can do anything about that. But you've got a young guy like you, man about town. You got not a girlfriend, right? She's not officially a girlfriend.
I do have a girlfriend.
Oh, is she now a girlfriend?
Oh, yeah. This is a recorded line. Let's not get anyone in trouble here.
Okay.
I've had a girlfriend, and I still do.
No. I didn't know it was the exclusive. You had gone to that thing. I go through this drama with my daughter every 3 months.
I don't know what I'm doing this weekend. I've really been only thinking one day at a time. Nothing big. Oh, I have to do my taxes. Are people still doing those? I saw IRS audits are down. Oh, but I should get money back.
Don't do it.
Right.
Yeah, no. You've got 4 days to do it.
I think I get money back, so I think I want to do them.
You should probably get money back, I would think. Yeah.
It's not like I made a bunch of money in my extracurriculars. Those are
right. Both Fed and state, you should probably get money back.
All right.
So, and I think you can file. I think you can file that easy form, which is like 2 pages.
Okay.
So
does that take into account my crypto hedge fund? What do I do with that? My investors.
But you've been paying the miners in cash. So
this is true. Yes. Okay.
Again,
all under the table.
Glenn and I have partnered in a company mining crypto where we have miners underground. So for your sake, so
and the carbon
are we just paying
with the
farm? Are we just paying them in food, like in food? Yeah,
exactly.
Both of them deductible. Yeah, I don't know. Now, will you go use like a TurboTax or something, or will you just do the paper form and mail it in?
I think I'll do TurboTax. Last I spoke with my mother, she said we could download it on multiple machines, so she'll just give me she'll let me do it through her account.
Okay.
I'll give it a go.
All right. Be careful with that one though, because it's nice because it'll automatically pull in your W-2.
Right.
Populate it, and it'll run some checks over it, but every 4th click is an upsell. You want TurboTax, Elite, TurboTax Pro. No, I don't want to talk to some guy in a call center about my taxes. They're 2 pages. So just
okay. Thanks.
Keep clicking no and make it as simple as possible. Hopefully you'll get out for under $75.
Nice. I can take that.
Yeah.
How about yourself?
This should be a pretty straightforward one. Mine were done.
Your trade, but your weekend. I know you're home today, so you can have all 18 monitors in your trading layer. What do you got this weekend? Markets are closed.
Yeah, it's weird. It's funny because I wake up at the same time, like 3 a.m. on Saturdays.
Insane.
And it's almost like Pavlov's dog. I do go to the screen to look, and it's like, oh yeah, there's nothing going on. So what movie am I going to watch for 2 hours to make sure I'm quiet and don't wake the dogs or my wife? Because that is that goal during that window.
That's awesome.
We're at Tasty FX going through company-wide evaluations, so I've got these feedback things that's a good time to knock out some of these feedback things.
Fair.
But we don't have a lot planned. I ordered a new barbecue and a Weber, and I didn't realize this. Everybody had it at exactly the same price, and I had a coupon at Home Depot for like $50 off, so I'm like, well, I might as well order it there.
Nice.
The barbecue doesn't show up. A big freaking huge box shows up with assembly required. So
yeesh.
I don't know. So, because the place we usually go to, you pay a little bit more, but they deliver you a barbecue. So I'm like, all right, this is going to be, because like anything, it's not going to be hard to put together, but it's still probably going to take 3 hours because I've never done it before.
Exactly.
Where
and you'll never
if
do it
I was
again.
doing right, if I was doing 3 of them, by the third one I'd have it down to 30 minutes.
Yeah.
So poor choice on my part, being penny wise and dollar foolish, because 3 hours on Saturday could be better used in so many different places than assembling a barbecue. But that's the highlight of
right.
what
That's
I'm
great.
doing. It's still cold.
Yeah, I know. Sunday I think it's supposed to warm up, but Saturday,
Yeah, not warm enough to shoot yet. Skeet shoot or sporting clays. So I don't know. It's kind of that we're not quite in spring yet. It's not that great. So
needs to
work on that. Yeah, it's really boring. I just, you know what? I've got to schedule more like interesting things to do. Part of the challenge is getting back downtown. Like when I come down in the morning, it's 18 minutes to get downtown.
Yeah.
When I go home at night, it's an hour and a half. And so if I want to come downtown like normal hours, like 10 in the morning, it's going to take you an hour plus to get downtown. They're doing construction. So it's really hard to say, let's go downtown, because it's like honestly, a slog both ways. I don't live the life like you in a penthouse right in the middle of everything. So
honestly, the Metro is the biggest cheat code in the city, especially from where you're at. That thing's like 15 minutes.
You're absolutely, well, no, it's half an hour, but you're right. And that is poor form on my part.
It'll drop you off right next to the Lyric Opera, which is what you're going for anyway, right?
Not quite, but you're right. We should actually take the train, but yeah, don't do that.
All right. Well,
train and Uber.
Until Friday at 4 p.m. It looks like it's going to be another barn burner.
Boy, absolutely. We got to start with Euro.
Yeah, I mean,
115, 17, or no, 115.
113.5 right now.
Right, with a high of 114.
Yes.
What was the high there? 114.
75.
What's that? 75. Right.
Yeah. Wow. Yeah. We got close, and futures were above 115 briefly.
So almost 200 pips at the high.
I mean,
of top to bottom after what we did the previous day. So
insane.
Clear.
Over 3% move yesterday. This candle looks, it's very large, but looks relatively normal. If you go to the hourly, you'll see exactly how much fun it was. Really no reprieve throughout yesterday at all. Overnight, a little back and forth, but if you went to sleep here, you never saw anything lower. Just a wild run from Wednesday afternoon.
Great time frame here, Glenn, because we talk about, you want to buy value. You don't want to pay the top, but when you see tape action like this, and that you're stretching it across that entire time period there from. Sorry, I'm just having a.
No, this is Wednesday.
Let me make this
Wednesday morning to where we are. Each candle's an hour.
Yeah, let me just get that a little bit better. But starting at when we breached 110, green bar. We had one little pullback towards the afternoon at the end of the day. A little bit of pulled off the table at 112. Never a lower low, always higher highs, never a lower low. And then another extension early into Asia, a little bit of pullback, relatively, but that pullback nowhere near challenged where we had gone out the previous day to
an aggressive open for Asia.
And then around 4 o'clock, another push of almost 150 pips to the upside. Now, we've come off that a little bit, and that move up there, those last 30 pips where the market got wide and you could see just chunky stuff going through, and then some selling would come, and then big chunky buying would go through. There's a sense that when you move this far, this fast, well, all I could do is sell. Who can buy an 800 pip rally. Well, you and I can. If we're trading this product on a shorter term basis, we're going to accept the market structure we have. And what this market structure is telling us is that it's giving you very few pullbacks that last a very short amount of time. Now, is this last big fat candle a blow off top? I don't know. We're off 100 pips from the highs, and it's a huge number. This is one where I think it's going to be a little bit tougher today. If we start to regain any portion of that move back up through 114 or today, is this? Go back to hourly if you could, Glenn. If we hold on to 113 and we start getting back up into that higher end towards 114, I wouldn't be surprised if we go out at the highs of the days. And you could say this run is way overdone. We know when FX gets to new ranges that they haven't seen in a while, the prices get very elastic. This is like super elastic, super volatile. But the tape action is telling you that, yes, we've had a huge run from 102 to 110. We pulled back to 108. We challenged 110, took it out. You can play the contrarian here, and if you're careful, you've been able to catch, after that run to 111, you've been able to catch some really nice pullbacks. But you should not be afraid of looking for buying opportunities here. There is, again, we accept the markets as they are, and you constructively look at the way the tape is working. There hasn't been a lot of damage done to the market right now, even at these upper end levels. It's Friday. It's going to get a little bit, probably slow down a little bit. And this may be, we'll see. This may be a session where the bulk of the move took place overnight. If you're an early bird, you caught part of it. But I still think there's going to be stuff to do on both sides of the market. If you are that, 1,200 points and 15 trading days is too much, which statistically I think we would say it sits at the 3 standard deviation, whatever. It statistically is.
But you have to factor in your time frame, especially here, because it is Friday. You're up against the weekend. Who knows what the weekend risk will be? Of course, there's always gap risk. I can't even tell you if this weekend more than others there is. But there seems to be a fair amount of uncertainty baked into every weekend as of late here. So yeah, really time frame, because it's so easy psychologically to look solely at prices. Say 114 euro, that's got to pull back.
Right.
But when? And we've seen this. Of course,
that's a great point.
In the Australian dollar, a lot of people's perceptions just getting blown out the door. But a market like euro, where you watch it a lot more perhaps, and you feel like because of that you have a greater sense of command, is will we revert off this 114 level? In the long term, it's very likely that we see prices fall once more. But over the short term, I mean, especially this Friday with such aggressive moves up, it's hard in my mind to picture a scenario where this kind of just drifts lower. I think we need a real shock on a Friday to get back down to 112, 111, because it has been so elastic. So what kind of is the case for a large drift downward, other than these just 50-point pullbacks at the most?
And you hit on a great point. Is 114 rich? Yes. Will we probably see a pullback? Yes, but it could be from 116.
Exactly.
So are you ready to ride that roller coaster?
And be stuck. That's capital you're tying up.
Right.
Where you're in a market with a lot of opportunities, but hard to pin. But
no.
All what you
and
want.
I think this is one where if you want to maintain a short bias longer term, use some distance. And I mean, anywhere back up here to 113.70 or 60, or you could start to layer in very small sizes for whatever your size. If you're a 5-lot trader doing 0.2 at a time, and that is going to be your long-term reversion play. Maybe you scale that up every 20 pips, letting the market come to you, building some short deltas. But I think, if you have two accounts, it's great to put that away in one of them, and in the other one, if you want to be able to trade both sides, you should, because we've had 140 pip pullback off the highs this morning. We still haven't violated anything down to the downside. In other words, some of that action we saw in U.S. equities last couple of days, where they have these huge runs up, and then they take everything from up to actually net change down on the day.
You look at
that really challenges conviction. Here we haven't challenged conviction yet.
Yeah.
So
you talk about the stock market moves, and you have to pull up the Australian dollar. I mean, this one, especially hard to wrap your head around it personally, just because all the headlines, very China specific, hasn't really cared about the specifics behind the China back and forth with U.S. and has really been moving on U.S. equities primarily, and
perfect chart.
Also capitalizing on just U.S. uncertainty. So surprising to me that this has been Australian dollar's been so strong, and you talk about tape action looking pretty sad a lot in this Australian dollar. Here you have a similar chart to the euro, a little more volatile, a little more opportunity to trade both ways, but still higher highs and not as low lows.
That solid green candle on Wednesday putting you to a new level.
Yep.
Never giving any portion of that back.
And that's 2% right there. That's huge.
Right. And which would be, again, that's your 2.5 standard deviation move.
Right. Normal day.
Right. And fading that, there's nothing wrong with fading that, but you have to think, okay, I'm going to fade it, and you're going to make the same decision. Where am I getting out when I'm right? Where am I getting out when I'm wrong? Because if you had faded any of those rallies over the past 3 months, you'd done very well, because they went to town going back against those run-ups. But here we have 3 days of just what we saw in euro. Little pullbacks, but each ascending little wave there to the upside. Never goes back to test the lows, those previous lows of those little intraday moves. And we have another one, a little bit of pullback, but that pullback low right there at 62 cents never challenged the previous ones. And we're off to mark that up. So until this is 3 solid days of upside tape action, sure, we would have all loved to be long sub 60. And some guys who like to play the extremes maybe caught that. When I look at tradable opportunity, here I can, for the first time, we've talked about this, I can all see far more constructive tape action, that I'm not afraid to look at buying this as well as selling it. And I can't pull buy. I don't want to pull buys off the table because I didn't pin the low.
Right.
You've got to take what the market gives you and work within that range. And you've got, again, 62 cents, 61.80 is a value level. If we get a dip down there, that's great. Even if we start to challenge these highs early in the U.S. session, you've got to be mindful that that may be, again, for a contrarian, it's always hard to do momentum plays. But for me, I still look at 62 cent Aussie as cheap Aussie over the last 6 months. That would be one where, okay, there's got to be some pain on these shorts. I might be willing to buy that and look for a little bit of an extension the way we saw 2 hours earlier in euro. Let's take a look at Canada.
Yeah, man, now more than ever, and especially in a market like Canada or Australian dollar, just so important in my mind, I think, upon entry to hold yourself accountable with stop losses and take profits, because like me personally, I've changed my thinking intraday, and you really want to hold on to what your bias was when you entered the trade. Yeah. But these circumstances and the price levels that follow are really elastic and the situation's always changing. But if you're stuck on headlines and you think, hey, I'm not fundamentally, nothing's changed fundamentally from my mind. It's gone against me so far. I don't see any reason to change my bias now. But the price action now can make it hurt a lot worse. And so risk management upon entry, I think at least holds you a little more accountable in some of these markets where they'll go up 2%, and that'll be a complete reclassification. It'll trade from there, and you're just, if you are stubborn, then you're stuck holding losses,
Yeah.
but then not able to trade with that capital.
Right. And
anymore.
not being able to, and I always say this, you want to be able to trade both sides of the market. And some people are like, well, that means you don't have a conviction. You don't have a bias. Sure, you have a bias. But if markets get to levels, I don't want to be so jaded that I've been buying this dip and I can't turn around and sell it because I've invested so much being long. How can I turn myself around?
Right.
Because that would make no sense. You want to come in, you always want to have a bias, but you want to come in every day where that bias, there is a level that is interesting for you to buy and an interesting level for you to sell. And if you take one of those off the table, you're probably taking the one that has the highest probability given structure, and you're really putting yourself in a tough spot. So make sure those losses, as you said, are always manageable so you can come in not clouding your opinion by what happened in the past. Nobody likes having a losing day. It stings. It stinks. But when that bias starts affecting what you do moving forward because of the size of it, that's problematic. So always think about keeping that in context. And you're right. Every news story this weekend will be the de-dollarization of the world.
Yep. Heard that on
so
the
every
Financial Times
chucklehead
this morning.
every chucklehead who was talking about, I mean, we had one huge rally in the SPOOs off of a tweet that they took 2/3 out of yesterday.
Brutal.
And that one rally caused three major economic firms and the brokerages to change their forecast. We're no longer having a recession. It's like, wow, you
Redacted.
guys really don't have a lot of conviction. And now they're all backing like, oh, maybe it will be bad. We don't know. But I do know that the news cycle will all be about this, oh, the dollar's no good now. Well, we'll see. But it's certainly elastic. It's providing us a lot of opportunities for back and forth. Where do you want to end on? Unrelenting dollar yen? Or
I think it's worth bringing up because
yeah,
there's a new every time I check the platform, we're down another 100 pips or up.
Yep.
We're in a new 100 pip range. Yesterday, 2.5% move, and just compounding on that early this morning, and getting a lot of strength. Actually, you know what I want to pull up too, really quickly, is Swiss franc. Holy smokes! This one, I think it gets a less news coverage, but I mean, 81 cents. Anything under 84, I'm
right.
Like we are through. We're through. This is the weekly chart.
Yeah.
We're through any pandemic sort of nonsense. We're through all the way to 2015, the depeg to the euro, and have spent no time here since 2011. This is insane to me. I mean, this week, down over 5%. This is the standout to me, in my opinion. Dollar, Swiss franc.
It's a great call, because one of the great things is you can go through here and you can find, again, as big as that move in euro was, this is an outsized move to that.
Exactly.
So,
and pretty relentless. I mean, even more so than the euro on Thursday. I mean, this one.
This is old school Swiss, which is relentless is the perfect world. It will just pound and pound and pound. And you're absolutely right. It is relentless. So it will be an interesting day to see if we shape up here. If we go out quiet, I think there's a couple more moves left in FX here. And it may be the euro settles a little bit, and maybe Canada and Aussie and Kiwi, which again, 58-cent Kiwi is certainly higher than 55-cent kiwi, but in terms of new range, we're nowhere near. We're technically right up to some challenging levels, but we're nowhere near getting back to where we had been. So I think this may be one where I'm going to keep an eye on Canada kiwi and see if there are little pullbacks that might give me an opportunity to get some longs on. If you want, I completely respect the guy who says I'm going to trade the range till it breaks, and it hasn't broken yet. Then you'd be fading it. But I think you're fading it with the idea that if it doesn't, for me, if that doesn't pay you in the first 3 hours of today, you're going to be trapped with everybody else who faded that high and having to make a decision over the weekend. Right. So be mindful of management. But there is so many great setups out there, and FX is giving you that opportunity to look at very different market structures across different pairs. So let's wrap it up for this week. Glenn, thank you so much.
What a week
it's been. A blast doing this with you, and look forward to seeing what next week brings us. But coming up next is Tom, Tony, and Vanetta, and we'll be back with you next Monday for the early edition of Forex Focus at 6:30 a.m. See you then.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Friday to us both, Sosnoff. How are you today? It's like I'm sleeping in here now, Soz.
Seems a little, I know, I think 5 days for you is a record.
This is actually 10 days, 9 days in a row. 9 days. 9 days in the office. It's almost like a freaking job.
Goddamn record.
This is becoming like a job, Sosnoff. I didn't sign on for this. I mean, this is a job. 9 days in a row.
Uh-huh. Look at you.
Yep.
Pikachu.
Yep. Well, I had to set an example of my son who was filling in for you when you were gone. But now you're here, Sosnoff.
Those deadbeats. Those kids are deadbeats. Seriously, there's not a single... Younger generation right now, not a single person knows how to work.
No, you got a good crew. You got a good crew of young kids here, Soz. You really do. You know you do.
I've trained this crew.
I guess so. You were the leader, so you got to get the credit because you would get the reason default. So you got to get the credit. So yeah, I give it to you. I give it to you.
Oh, wow.
And I don't know if I give you the rest of the market. I mean, we're 5,300 on the E-mini S&P, Sadnov. And since you've come back, we have rallied. I mean, we've had some downturns.
Yeah. I mean, we even touched, in the 4,900, 40.
Yeah,
we touched 4,800 this week, but 4,900. But yeah, we've pretty much been. I've come.
But it doesn't feel like it was going to be the last part.
I've come back to right the ship, and no question about it. I've come back to normalize things. But it's weird. Like, why is Vol up over?
Vol, it's funny. Somebody asked me a question like, "What do you think?"
Up $1.50 this morning. Now it's up $1.
Yeah. Yep. VX up 55 cents. VIX up more. Yes, of course. Yep.
Yeah. I mean, I've got probably more emails on VIX futures trading and VIX in general than I've ever got.
Volatility is bid across the board, Thomas. No better time than to be trading very small if you're looking to do anything.
Well, the problem with volatility being bid, let me give you a really strange example of something.
Sure.
So last night, I had a bunch.
I was in our account when you were doing this, by the way. I was watching you do this, and
so I'll tell you,
bonds rallied. Oh, go ahead.
For everybody else that wasn't in my account, that doesn't have access to all my personal information, as my wife would say, she goes like, "Does anybody not have access to everything we have?" I'm like,
somebody has to watch it.
Is there anybody that works for you that doesn't have access to our stuff? I'm like, not really. But I was doing crazy day yesterday. I did like 3 podcasts, a couple webinars, all this stuff. And late last night, I did Victor's show, which was fun, but it was a little intense. And then I did somebody else's private, the webinar they were doing. I just was a guest. And when I was doing it, the bonds were trading down to 112.22.
Mm-hmm.
Right now, they are 113.12.
Yep.
They're
full point higher, right?
About 20 ticks, 22 ticks higher than they were last night. And the bonds looked really ugly.
They were on their butt.
They were on their butt.
Even the S&Ps were down almost 100 at the time.
Even the S&Ps at the time were down 70. I was watching like it was.
I was watching like I was talked to.
Okay. So E-mini S&Ps were down. They were fluctuating between down 56 and 72. And the one tick, they ticked down 92. But for the most part, they were sitting down around 70.
Thank you for validating me. But
and the bonds were trading at 112.23. And people go out there, they're like, how do you guys remember this stuff? Well, it's the same thing. If all you do is announce like sports games and you're a sports reporter and you go like, there was a guy in Chicago. I don't know if you remember him, but his name was Les Grobstein. Remember him?
Yeah,
Robber.
Yeah, sure.
He was a sportscaster. He used to do the overnight on sports talk radio, and I think he went to every Cubs game for like 40 years.
Mm-hmm.
And he could almost tell you every pitch at every Cubs game for 40 years. It's like. Do you remember when
you're living it, you're watching it, you're breathing it?
I know, but he goes, do you remember when Kerry Wood was like, he had a 3-1 count? This is like 1992.
Right.
Do you remember when Kerry Wood had a 3-1 count and he threw a slider and then they lost the game 2-1 to the Pirates? And they'd feel like, what? Like what's wrong with you? And I'm sitting here thinking, yeah, I mean, I could basically tell you every single quote, which is really sad and sick, crazy. Mm-hmm. Anyway, so make a long story short, I'm watching the bonds. I'm in the middle of doing a webinar, but it's like I'm not the only person talking, so I got some downtime. So I'm like, you know what? I want to get a little bit long bonds here because I think, but I don't feel like buying bonds outright because it hasn't really worked.
Yep.
So I decide I'll sell a strangle where I'll sell a $2 put, a $2 put and a $1 call.
Leaning long. Basically like a quarter of a future.
Yeah. Quarter of a future. Quarter, third of a future. Each one lot's like a third of a future.
Yeah. High implied volatility. Delta long.
IV rank 115.
Right. Yep.
Okay, that's why I did it, because I got crazy high IV rank, get some long deltas, blah, blah, blah. So this morning, I did a couple times, a couple tranches, and then filled it at mid-price. Very proud of myself.
Mm-hmm. You waited them out.
Because I
had to move it a tick.
Because I don't usually trade that many bond options at night. So it took a while to get filled. Took 20 minutes to get filled. So this morning I see bonds are about 3/4 of a point higher.
Mm-hmm.
It's like 24 ticks higher.
Beautiful thing. How did Daddy do it?
I nailed it. Perfect. So I'm going to take it off and take a profit. Okay. I log on and I'm like, hold on, what am I doing wrong here? Like I never once considered that the trade would be a loser. I was just trying to figure out, why is it showing me that's a loser when I played this for this exact thing?
Because vol is just exploding everywhere.
And the spread that I sold, let's say at 305, is now trading at 320. So I'm out 15 ticks on the spread, and it did exactly what I wanted to do. And I'm like, hold on, I must have done the wrong strikes, or I must be looking at the wrong stuff.
Sure.
But I'm not.
I mean, listen, that would be the first thing I would be thinking about if I was you too, because usually you have the wrong strike.
I'm like, what did I do wrong? Did I buy something? Like, what did I do wrong? Mm-hmm. And I'm looking at this trade, and I'm like, I have never lost 15 ticks.
Yeah, you have, but go ahead.
No, stop.
I know.
I've never lost 15 ticks on a directional trade that I bet going. I had the direction right, and I did it at night at the highest implied volatility levels, and I lost 15 ticks in the morning, just what volatility did.
Yep.
Overnight, 15 ticks.
I know.
So you're saying, did you put more on? And I'm like, no, I did not. Yep. I'm just going to wait. But
you got producer price index. You got PPI coming out at 7:30 or whatever. Well, that's probably why the bonds are staying bid. But I agree with you.
15 ticks. I've been trading bond options for 40 freaking years. I have never lost 15 ticks when I was right in an overnight session ever, just on volatility expansion. Plus, we're already in the stratosphere.
Yeah.
I'm like, and I didn't sell it in the hole. I wasn't hitting bids.
I know.
Oh my God. I was like, holy crap.
Before we get another sob story from Sosnoff, 855-238-2789.
This is not a sob story. I'm trying to explain what volatility is doing this morning. It's crazy.
And across the board. I mean, vol's up almost 2% in the equities too. But 855-238-2789 or 855-BE-TASTY. That's the phone number.
So have you ever seen volatility expansion this orderly? Actually, I don't know if it's this. I'm trying to decide. So
I mean, I don't know if it was orderly. 2 days ago, we got into the 25 handle in vol on that big rally up, and I thought you could put the fork in volatility.
Of course.
And I have not. I'll answer it this way: for a nothing vol, I've never been 5 or 6 handles wrong so quickly.
Of course. And there were 2 earnings plays that we did last night.
And it ticked me a little bit. It dinged me.
There were 2 earnings plays we did last night because we had already had positions on. They didn't actually do an earnings play. JP Morgan and Morgan Stanley, I already had some strangles on.
Yep.
So
small move in both. JP Morgan looks like it's about $2.
$2, $1. They're way inside the expected move.
Yep.
I wonder if these trades
make money.
So they're a fraction of the expected move. This is going to tell me whether or not we can trade earnings.
Moving forward, yeah. Or you're going to have to be directional because you did both sides on these. You know.
Yeah. There's no.
Right. Yeah.
They're both, under normal circumstances, they both be huge winners.
A couple of banks got some upgrades. American Express got an upgrade from Bank of America.
Nobody should ever upgrade American Express. That company should be put down. They should be. Remember, we were talking about criminal organizations. That is one.
I was going to name them, but I don't really have anything against.
I forgot about American Express.
I don't have anything against them. Stocks up. I don't know, maybe $2-3. You got
I hate that
Bank of New York, where my grandfather told me I had a vault, but I think he lied to me. Also got had earnings or something like that too. Came out with small. Anyway, yep. And JP Morgan.
I'm absolutely convinced that American Express is a criminal organization. It's a global criminal organization. It should be shut down.
It's global.
It's global. It's a global criminal organization. It should be shut down. They have no right to ever to do business in the financial world with anybody.
You want to go to phone lines real quick? We got a couple on the line. Maybe we can get through them and we can get back to.
We will. I just wanted to. Before we go to the phone lines, I kind of wanted to give everybody a little bit of a scoop of what we're trying to do this week. We tried to change up the show just because we felt it was important that, so many people have so many questions, and trading is such a kind of lonely, independent business that we thought it'd be good if people had a chance to just, call in, vent, ask questions.
Your sounding board, yeah.
Just to call in, peace of mind type thing. And all that was super important to us. That's why we changed up the schedule this week. We only did one day of kind of like fairly normal programming. Today we're kind of mixed. We're going to bring in Victor Jones from Victor's in Singapore. We're going to bring in Victor Jones at 8 a.m. this morning, and we're just going to talk a little bit about what he sees, because he gets a different press perspective. He gets a different
being in Singapore
Singapore is 80% Chinese, about 20% Indian. That's, I think, how the breakdown in Singapore goes. And so Victor's closer to kind of like the Chinese, I guess, just the way people, the way people talk and think. And I think getting a little bit of context from Victor is, Singapore is definitely not China. But Singapore is closer to China than the U.S. is, and I think he's got an interesting perspective. I did his show last night. It was really interesting. If you listen to it, thanks. It was a little heavy on the political side, but it was also a really good back and forth conversation. And if you missed it, I think it's still in the archives. You can check it out. We try to shake things up like that. We did that at 5 to 6:30 last night. But we'll have Victor on at 8 o'clock, just for about 15 minutes or so. We'll also have Scott come on. He's in a place that's the furthest away from China possible, which is Phoenix, Arizona.
Yes.
But Scott will come on from Phoenix, and we will talk to him for a few minutes. And at about 9:30 this morning, Central Time. The rest of the morning, Tony and I are going to go through, talk markets. We'll probably jump off the phone lines a little bit right around 7:30 when the numbers come out, just because there might be something to do. And, we had a decent range overnight of, I want to say, I saw us down 90 and up 50, so 140 points or so.
High to low, you're looking at 100 on the E-mini S&Ps, 173.
173.
Yeah, E-mini S&Ps traded up to 53.79, which would put them about 50 handles
Let's take a look right here. So this morning, just to put some context around the 0 days today, SPX 0 day, 140 points is the expected move today.
High and down from about 160 points last couple of days. So you can expect the same.
So I just want to put just a tiny bit of context around that before we start. 140 points is the expected move today in the SPX. A normal Friday in April, looking back over multiple years, SPX expect to move probably about 30 handles. Would you say it's probably fair?
Yeah, for sure.
Probably about 30 handles.
So think about that for a second. Let's just say it was 50 handles. Who cares?
Let's use about 30. Yeah.
Okay, and now you have 150. That means options are going to be priced 3 times as expensive.
4
times expensive. I extrapolate out. I was just trying to do easy math, extrapolate out for people. Yes.
That's where my losses are.
Yes.
But that's where a lot of losses are currently buried.
Yep.
That's where the bodies are buried in the volatility expansion at 3, 4, 5x what it usually is. But just to put context around, what's happened here, an option that was priced at $2 is now $8.
That's correct.
Just because
and warranted, because we have
totally warranted. Yep. Will it stay like this? Of course not. But
only the shadow knows.
Yeah. When will it revert back, or when will it change? That's a damn good question. And as you can see from last night, a couple of years ago, if you had a move where you were down 90 overnight to up 50, you'd be like, wow.
You'd be so surprised.
Now you're like, oh, that's normal.
Yep.
That's what we love about this business, is that it surprises you, but it's never the same. And you can never rule anything out. It's the old fooled by randomness. So pre-market, just looking around, what's interesting to me is there's a couple tech stocks that are actually higher this morning, like NVIDIA. I saw some other ones too. I wasn't
NVIDIA 108, 109. I mean, Thomas, $1.
No, I understand that. But there's a couple of tech stocks that were higher. I only bring that up because last night, NVIDIA was trading when I was looking at about 105, 106, in the evening. I guess my point is that nobody really knows. Like, there's not like this, you can say whatever you want, but nobody really has a clue.
Sure. That's right. That's right. When it comes to direction, 100%.
All right.
Let's go to the phone lines, 855-238-2789 or 855-BE-TASTY. Going to go to Chicago. You called a couple of times last week. Good to hear from you again. Ajit? Sorry.
Tommy's got it. All right. Well, it's a little bit of a Debbie Downer morning. You guys didn't have your political rants this morning, so, man, what a way to start a Friday again.
Hey, I got spent last night with Victor. I mean, we had political rants for about 4 hours yesterday. You got to give us a little bit of a break here. Yeah.
Fair enough. But anyways, Tom, do you still have your gold short on, your gold silver trade, gold short, silver long?
Yes, I do, and it has not worked. I actually added to the position yesterday at 10.
Short gold, long silver.
Yeah, I did the ratio spread at 102.75, which is the highest that I've seen it, and 102.75. Let's just see. It's definitely higher this morning.
It's higher this morning.
These numbers are. I mean, the gold is absolutely insane. Let's see. Where's gold? 32.34.
Well, I'll tell you one thing, Tom. So I look at things from a very technical perspective, and I will tell you from a 30-minute chart, from a 78.6% retracement to a 423.6% extension overnight. And again, this is over the span of a couple of days, not just.
I saw your tweet. He's looking for a big retracement here, Sadnov, because it filled everything that it needed to be done. You're going to know what he has to say.
The gold silver ratio, I did it at 102.75. It's currently trading at 102.99. Let's call it 103 right now. So it's moved a little. It's moved a little bit. But again, this is about 12 points higher than I've really seen it for the last couple of years. I told Tony this morning, I think gold's going to drop by $200 to $400 in like 2 days coming up, but who knows when. And so far,
it's gone up. It's gone up that much.
So far, I'm going to need that to break even.
Yeah, right.
Well, I mean, look, I'm looking at a first target of 3,200, then 3,150, and then I'm looking for a flat 3,000. So, I mean, we are right on point on that one. Again,
well, we could be on Ajit. We could be on as much point as we want, but
in the agreement. But
we could be in as much agreement as we want. But so far, Gold's giving us.
Your number has been taking you to the cleaners.
Yeah, they're giving us the finger.
Yep.
Yeah, no, I hear you. But the thing is, like, from this technical level right here, very, very, very high probability that it will pull back a deep correction here. But again, nonetheless, let's get to the question actually. Because yesterday I forgot it.
All right, you got to move quickly. Move quickly. Go ahead.
Okay, so Donnie T's team, he's going to be meeting with Iranian officials over the weekend. So oil is in play. Right now, I'm looking to the long side here. What are your thoughts on that for next week?
Oil 60.24.
I mean, to be fair, with all the different opportunities out there, oil is probably the least interesting to me of any commodity right now.
Agreed, but I put on a little long delta in oil, so let the man talk if he thinks it's going higher, okay?
Okay.
Go ahead, I'm just kidding. Ajit?
I'm looking. Yeah,
I feel like my bullets can be used best elsewhere. I don't play like a fundamental game, and I don't feel like oil is.
It's his game.
I don't feel like oil is at enough of a price extreme for me right now. I mean, if anything, I would agree with Tony, and I'd probably lean a little tiny bit long, but I'm not. I'm actually not that interested here. It's of all the different commodities, it's the least interesting to me.
Oh, fair enough.
Why? What do you want to say? What do you like it or hate it here?
I like it because it's had a very, very deep pullback right now. Now, look, he's not going to really get anywhere with Iran. They can bark all they want. We all know that. I look for things to really escalate with Iran, and I mean that really sets up to the downside here. But it's had a very, very deep pullback just this week alone. So I like it to the long side in the very short term. Again, just in the upcoming week.
Yeah. Okay.
But again, we'll see what happens, though.
Yep.
So I'm looking for about a 6-7 point move to the upside.
I hear you. We got to let you go, G.
Thanks, brother.
Thanks for
Appreciate
the
it. Thank you for all your support. Appreciate you on Twitter.
Thank you.
We're going to go to Florida.
Absolutely.
I got Junior in Florida. What's up?
How you doing, guys? I love you so much. You, both of you are my heroes. I know it's okay here, and now I'm going to start a job in a restricted area in the airport. So I have very quick questions after this. I don't want to talk anymore. I want to listen to you. One day, I would like to know what is if you guys can do the quantify statistical analysis about inverse and direct correlation with the index currency and the other thing, the statistical analysis of zero DTE strangle, sell and back month, the buy strangle statistical analysis of that. I want to say I want to be your rising star in 1 year from now. I don't open an account yet, so I would like to know if the requirement for the capital requirement for open account for a corporation is going to be the same as an individual account. I'm going to listen to you guys because I cannot talk so much right now. I'm going to start a job. I love you so much. I want you guys to do this for 100 years together. Thank you so much for everything.
Thank you, Junior.
Thank you.
I would let Tony answer it, but
I got some of it. I'm not going to lie. I got some of it.
Some of it.
Was he talking about a 0-day strangle that he won?
I think he was talking about essentially like a strangle swap.
Yeah, front month, back.
Yeah, front month, back month, and how much capital would be required. Junior, that's what I think you said. Front like a selling front month, 0 DTs, buying back month, some longer duration, and how much capital is required.
No, apologies. No, not like that because I already listened to you guys. I already know everything. So it's something different. Like a CODT, sell strangle, back month, right? Also a sell strangle.
Oh, okay. Sell.
Which one will be the statistical analysis of that because that data is not being presented yet.
Yeah.
Also, I would like to know the capital requirement for open account with you guys as a corporation or individual account because for tax benefits, I'm thinking, open account as a corporation.
Yeah. So
and the last question, apologies because I don't have time. The last question is if you guys can do more show about the quantified data because I don't think that you guys doing any more show about this thing, specifically about index currency. What is the positive correlation and inverse correlation about currency index, for example, Euro, GBP, I know they have inverse correlation, but I'm interested to see which one will be the statistical analysis of that. And I want to know your opinion about this because I have a low capital. I listen the capital. I know the capital efficiency is very good in future options. So what do you guys think about me specializing just in that?
Okay, I got it.
Thank you.
I think I should win an award for this.
Yeah, you get one in my book.
Hey, the capital requirement, it doesn't matter. We don't care if you're a corporation or if you're an individual. But what you should recognize is in the business we're in, you prefer to be an individual over a corporation. And the reason for that is because individuals don't pay for data, but corporations have to. And the way the exchanges view any kind of a non-individual account, it's considered a professional/corporate account. So you don't want that because that means you have to pay for data. And we would rather give it to you for free as an individual. So that's why you'd prefer, if you have the choice, you prefer to be an individual. The amount of money required is just the FINRA minimum, which is $2,000 to have a margin account. But if you do that, you're not going to be able to do anything naked. If you're going to do something naked in the SPX, it's going to require over $100,000 in the SPX and over $10,000, let's say, in the SPY in the 0 days. But if you're going to do defined risk or any kind of sell front month, buy back, you were talking about sell front month, sell back month. In those cases, in order for it to have some capital efficiency, you have to buy something else. But the account minimum is only $2,000. But if you're going to do naked stuff, it would be in those particular products from 10 to 100,000. Does that answer the question?
Well, because I have a low capital, I was going to focus in future options because it's no pattern rules. So for tax benefits, it will be different if I
just understand, you get the tax benefit anyway if you trade SPX because that qualifies under 1256, which is a 60-40 max. So it's a max 27-28% tax. It doesn't qualify as long term, but it's 60% long term, 40% short term because it is an index product. It's like it's taxed like a future. Hey, Junior, we got to get on to the next call because we're about to get the economic numbers coming out. But thanks for the call and call back anytime.
And appreciate the very kind words.
Thank you.
Yeah, appreciate it, man.
Bye.
Yeah, appreciate it. Thank you very much.
Bye.
We're just gonna let's just wait 1 minute, Tony, before we take the next one.
Yeah, we certainly could. Even the S&Ps, we got about a minute and a half. Even the S&Ps up 20, NASDAQ up 70, Russell basically unchanged, and the Dow up 125. Volatility up by 45 cents, kind of odd. Market up, volatility up, continues to be up.
Bonds have sold off a little bit.
Bonds down 16 ticks, 10 years down 9 ticks or so, kind of moving step for step with each other. Bitcoin's up $2,700. Oil's up about 12 cents. It's kind of a mid-range for its most recent move. And gold is at the top of its range, new highs, up $64. Silver up 63 cents, doing the same as gold, running in tandem right now. And the euro, let's take a quick look at that.
It's exploding.
Its rally.
Oh my God, the euro's just been out of control.
Yep, continues its rally. I think you need a little bit of euro weakness to get a little bit of help in the hour market and maybe even the bonds.
Yeah, the U.S. dollar has not had a good week. It's got to be, this week is probably going to go down as one of the worst weeks in the history of the U.S. dollar.
The bond move to the downside is something like the biggest to the downside since 2008 or something like that.
The bond move, U.S. dollar move, there has been, I've talked about this multiple times. There's a few cracks in the armor this week.
Changes for sure.
Yeah, there's a lot of nervousness about U.S. dominance right now, and so I don't think the dollar is going away as being kind of the reserve currency by any stretch, but there's no question. Let's see what we got here.
I've never seen you so excited about a number before.
Well, I just thought it might move the bonds. I thought it might move the bonds. It really didn't.
It didn't move the bonds.
Didn't move the bonds at all.
He's ticked up for a second here. They're up 30.
Well, I wanted to show everybody something that happens when you have this kind of volatility. The earnings plays and the economic numbers are essentially rendered useless because everything is just already in volatility.
Yep.
Everything has come down to, hey, you know what? We've essentially taken all the old games away and we've given you a little bit of a new game. And I think that's important because sometimes people have trouble going with the flow. And when there's nothing going on, the flow is really simple. It's whatever you can find to make a story out of something. When there's other things happening, like what's happening now, politically, globally, tariff-wise, it kind of takes the other numbers, the traditional numbers that move the market out of the equation. Like literally bonds didn't.
We're 60 to 80% of the time they might have some play in the market. Yeah. Now it's going to be closer to 20% of the time.
I mean, bonds did not move a tick on the news. S&Ps did not move a tick.
No,
and
relatively speaking, I mean they moved 10 handles, maybe 8 handles. I mean, but they were moving 20 handles before the numbers, or 30 handles before.
Right.
Yeah.
So pretty much pretty much a non-event. Anyway, okay, you can take next call. Sorry.
855-238-2789 or 855-BE-TASTY. We're going to go for a good half an hour, and then we'll bring on maybe Victor Jones, and then we'll go back to your phone calls. So I've got 3 or 4 lines open. So give us a buzz. I'm going to go to Pirakesh. Pirakesh, thank you so much for calling in.
Oh, hey, guys. Hi, Tom and Tony.
Hello.
Hi, how are you?
Good. I'm from Toronto, Canada, so I actually came to the event when you guys came to Toronto.
Awesome. Thanks.
Yeah, so I was very disappointed when I got the email finding out that Tasty Trade is no longer coming to Canada. That was a big disappointment, but I also understand why, because you guys couldn't get the clearing firm, APACs, and all that. But anyways,
it's probably, to be fair with you, it's in the 14 years since we've been doing Tasty. We started in 2011. We actually started in 2010. The single biggest disappointment to us of what we have not been able to accomplish was spending 5 or 6 years trying to get licensed in Canada and not being able to find a firm that would clear us. We actually did get licensed. We got all the approvals. We got all the licenses. We have all the registrations. We had all the employees, and we could not find a firm that
paid for it all.
We paid for everything. We spent $10 million getting going through the whole process in Canada, and we could not find a single firm that would clear our trades. Nobody wanted to do our business, which blows me away.
Yeah, because I worked in the brokerage space too. I used to work for TD Direct Investing, so it was. I understand. So that's how I got to know Thinkorswim, and then I got to know about you and then your platform. So I've been watching you guys for quite some time, and I used to I'm 4 years into options trading. I am down net overall, but then I'm still learning, and I'm trying to. I'm very passionate about the market, but I learned so much from you guys, especially the last call. What is the 2:30 show? I almost watch it every day. That's my favorite part.
I love it.
And also, Tom, are you still short Nasdaq, long Russell, or did you close that trade?
I do not have that trade on right now. The only pairs trade I have on at the moment is the gold silver ratio trade. I'm short gold, long silver on a ratio, but I do not have the Nasdaq Russell on right now.
Oh, okay, you closed that out. But and the other thing I was gonna say is because I watch you guys so much, but I sometimes I win some, I lose some. So what's been really working out for the last few weeks in this high IV environment is fading the rally or sell the rep. That's actually been working out really well for me.
Yeah, and if you keep it small enough, or your account is big enough for the size that you're trading, there's been some good two-sided action. I unfortunately have been on the right side of that a few times, and I've been on the wrong side of it too many times that I care.
Yeah, there's no question that over the last 2 weeks or so, which if you were bullish or if you were bearish, you got paid either way. If you stayed small enough so you could hang in there.
Yeah, I want to go on record. I got caught up in the emotion on the size side, and it cost me. I caught the up move when we had that big rally of 400 handles on the E-mini S&Ps. I caught it great, and I really thought I had learned this game, that it took me 40 years, 3 months, 17 days to catch it and understand it. And I got too big the following day, and it made me pay the price. So anybody can do it. But I will say this. I went back to a more normal size, and I took my lumps. So maybe that's the difference about being a little bit of an experienced trader, respecting what the market can do to you, even when you think that you've got it right, and then move on from there. Because it really is about trading for tomorrow. Sorry, Tom. Go ahead, sir. I apologize.
Yeah, you guys always say trade often, trade small, right? But that move was even I was on some puts that time, but that move I did not expect. It was just in 15 minutes, ES is up 400 points, and I'm like, this is what is going on, right? So I was pretty, I did lose some money that day, but I made it back the next day. But that was one of the biggest moves I've ever seen.
Nice. Hey, listen, we love just talking trading.
We do.
Anyways, I know you guys have to take other calls, but I really, really appreciate everything you guys do. And honestly, Tom, like it's even hard. Like I learned so much, like all the things like with your like the derivatives world, like you know how you like talk about the close of the day, like you know you see how the shorts are covering, the longs are like. I'm sorry, I'm a little excited right now, but like yeah, I learned so much from you, and I based on that I have positions for the next day, and it usually works out. And your predictions are amazing. Like yes, it's not 100%, but I really really appreciate everything you guys do, and thank you so much.
Thank you, man. Really appreciate it.
Thanks so much.
Okay, have a great day, guys.
Thank you, sir. Appreciate it. 855-238-2789 or 855-BE-TASTY. I'm going to Tampa. I got Dr. D. Big D, what's up?
Good morning, Tom and Tony. How are you guys doing?
Doing great, sir.
Hello, Dr. D.
As everybody said, I love you guys. I listened to you guys for the last 10 years. I got the opportunity to see Tom again in Miami. I came with my 8-year-old son, Ishan. And it was great seeing you, Tom. I miss Tony. I wish I can see him again somewhere here in Florida. That's my reach. It's very hard for me to get out of state due to work. I have a couple of questions. The first is based on my net lake. Currently, my theta value is around 2% of my net lake because I do have the same positions what I had last month. And I carry over those positions just because of the volatility is so high. My theta almost 2%. Is it too high?
Yes.
Or I can wait for a few days.
No,
when
Doc,
the volatility come down, it will.
Doc, are you sure you're 2% or 0.2%?
2%.
No, of your theta is your daily theta is 2% of your net lick.
Yes.
No, that is way too high.
Okay, it should be less than.
It should be
0.7%.
It should be. It should be a fraction of a percent. Like we stay in the range now. Again, with volatility as high as it is right now, everybody's theta numbers are going to be high. But so right now, I mean, if you went to 3 or 4, maybe even 0.5%, that would be fine. But if you're at 2%. You're at least 3 or 4 times higher than you should be. Now it does depend on your account size and things like that. So I don't want to be.
Yeah,
I don't want to.
I do have a portfolio margin account, and it's a little bit bigger size.
Okay, but
so I
just
have
that's fine. But that number's too big.
Okay.
2%. If your theta is 2% of your net lick, that number is too big. Period. Try to get it under. Try to get it under 1.
Okay. And the second question is, since we are in a high volatility environment, is it a good time if I have a directional bias towards some of the basic fundamental U.S. economy stocks such as Amazon, Google, to do the diagonal spread?
Sure.
Means actually buying January 26 or June 26. Long bought calls, maybe right at the money or a little bit deep in the money, and then selling May or June. Calls out of the money.
We call that more the poor man's covered call, but sure, absolutely. That if you are fundamentally bullish and on certain companies, and you think that this sell off of 30-40% in some of these stocks is off their highs is what you were looking for, then I wouldn't go out to next June. But if you wanted to go to January and then sell front month against it, like May's or I wouldn't sell April here, but if you wanted to sell May's or June, absolutely, 100%, go for it.
Okay, perfect. Thank you so much. And this was last thing I want to say, that I learned a lot in the last 10 years, and I watch you guys every day for several hours. So thank you so much for everything.
Love it, Doc. Thanks.
Thank you. Thank you. Bye.
Thank you, man. Appreciate the call. Great call. 855-238-2789 or 855-BE-TASTY. We're going to go to Detroit. I got John. John in Detroit, Rock City.
Hey. How's it going, Tom and Tony?
Hey, John.
Good, man.
What's up?
Awesome. Just love you guys, man. Listen to Overtime. Listen to the pre-market. And I wanted to ask you guys, how often, it seems like a lot of the Tasty style is strictly a short vol strategy. I'm kind of using a combination of, cash secured, naked puts, a little bit of verticals here and there, and then a lot of shares of stock, and lots of times covered calls, and sometimes I'll keep a deep in the money call just kind of rolling out, which in times like this, it seems to have paid off. It's not really a pure hedge, but it does seem to at least maintain margin if I'm having a lot of shares in the account. What's your guys' advice on running a dual options equities book?
I mean, I think we do that ourselves. Sure. I think we lean a little. I mean, from a trading perspective, as far as number of trades go, obviously we trade a lot more in futures and options. But there's no question we maintain a long equity portfolio, or sometimes a mixed long short equity portfolio, along with which we're a little bit more passive on, with just some basis reduction, and then we combine that with our option portfolio and also, futures portfolio. So for us, we have zero issue with that at all.
Okay. Because I know a lot of guys are running straight up options books. I learned from people that taught me a long vol strategy, and I just never made money going long vol.
No, you want to know something? If you go back like 20 years or something, John, there were people that would just do they're only commodity trading advisors. They're only running long, short, hedge funds. They're only doing, just pure option stuff. In 2025, if you're not doing everything that's out there, you shouldn't be managing money.
Right.
Like if you're not including everything from digital assets all the way through to, to complex derivatives portfolios, and every single thing should be in there as far as basis reduction, pairs trades, option positions, stock positions. There's no excuse anymore because everybody has access to essentially every single marketplace is a click away. There is no excuse for not having a fully diversified portfolio, both strategically and product wise.
Right. No, I totally agree. And one thing that really funny is that I love the concept of long vol, but I've never been able to make money with long vol strategies, even if it's a ratio or calendar spread. It's I just never able to make it work.
No, nobody ever has. I mean, the only time long vol works is once every 5 years. Like this. This is if you've been long vol, you had to wait essentially from 2022 was the last time you got paid, and even that I don't know if it was worth it, but 2020 was worth it. But do you want to wait 2 or 3 years or 4 years every time? Yeah,
right,
I mean it's a tough. That's a tough slog.
Yep.
That's tough.
Yeah. What would be a good video you guys could do is to show us how to hedge out a portfolio. Just take like $100,000 or $200,000 stock portfolio and hedge it out with like SPY puts, just as a hedge, or even the Qs. It would be kind of a useful video, I think. There's a lot of people that probably would like to hedge out going into times like these that they don't want to use futures.
Sure, and that's why also we have triple leverage stuff and things like that. But I hear you, man. Thanks, John.
Thank you. God bless. Take care, guys.
Man. Same to you.
Thank you.
We're going to go to my man Bank in Philadelphia. What's up, Bank?
Hey, guys. I don't have a lot going on. I had a couple micro cap stocks that I don't want to sell, hoping they grow up. I'm glad Tom answered the question about earnings. That was one of my questions. So I've had like a long Q call spread, triple Q, that I've had on and off against out of the money credit spread. And, as I'm thinking about this, for new positions, why isn't the answer just go way out to the tails, do credit spreads or strangles, with, 5% probability? I mean,
you certainly could.
Research, why not? Are we overreacting?
Well,
no, I'm talking about new positions because I don't have a lot existing.
Yeah, I mean, you at the 5% level, you certainly could. The problem with it is, if you sold at the 5 delta level, naked, it obviously didn't work because those tails just exploded. If you did the credit spreads, you're fine because they didn't go anywhere. But the problem is you
were able to hold it. Because
did you make any money? Like those are you collect so little money for those, because they don't trade for anything. I mean, they trade for 3 or 4 or 5 cents on the dollar. So that's the challenge. The only way you can make money is by doing them naked, and that way, obviously didn't work with this volatility explosion. And if you did it as verticals, no matter how wide you did, it's still a tough slog at this point because you haven't gotten paid.
Okay, thanks.
Now, if you're talking about buying a closer at the money call spread, let's just say you're bullish, and selling a further out of the money call spread, you can certainly do something like that if that's what you're talking.
Yeah, I had that going on with the Qs, but I got whiplash reacting. Take the long call spread off, put it back on. So I'm stopping that.
Sure.
Now, real quick, if you guys have an extra seat on that trip to Milan, let me know. I can chaperone Tony or something.
Well, Tony,
I'm already carrying Tom's bags. What the hell are you going to do?
Tony's private jet I think it only seats like 6 if you go on a cross.
4, and we have to bring the dogs.
All right, appreciate you guys. Have a good one.
Thanks, man. You too.
It's an expensive private jet flight. That's all I can say, from Chicago to Milan with the dogs.
That's right. 855-238-2789 or 855-BTASTY. Even the S&P's up 12. Russell,
are you going to bring the dogs with you to London?
Yeah, the dog's me. Virginia, Adam in Virginia.
Hey guys, I appreciate all you guys are doing. All my questions answered. It's really great of you.
Thanks, man.
I had a question. Several days ago, I think this was even before the tariff stuff, you had Pete on talking about the gold-silver ratio, specifically sizing in the micro contracts. And my question was, since we evaluate that ratio based on the notional value of each, why adjust it for IV or expected move, as he was suggesting? What's the advantage of that?
We don't adjust it. It was only to get the ratio right. It was not adjusting for implied volatility in the sense like you do with options. So with options, the implied volatility plays a role into whether or not we want to do this, we want to make the trade. But when you're doing a gold-silver pairs trade, the ratio trade, the volatility doesn't matter at all with respect to the products. But what it does matter is by multiplying the notional value by the implied volatility, you get the ratio right. So all Pete was saying was that if you're using the micro contracts, it was two gold contracts to 1 silver contract. Because if you take the gold implied volatility, multiply it by the size of the contract, the notional amount of 2 gold equals the exact notional amount of the silver contract times its implied volatility. So it had nothing to do with it being a volatility play other than to match up the vol adjusted notional amounts. So you were comparing apples to apples. So when I'm short gold now, I'm short 2 gold contracts to long one silver contract, and that ratio plays out the way it should. It's just pure dollars. So like, let's say I have $100,000 of short gold and I have $100,000 of long silver, and that's vol adjusted. So those are real numbers.
Right. Yeah. My ratio is currently 5 to 3, so I was just trying to figure out.
Oh, that's fine.
Close enough.
That's close enough.
Yeah. Go either way.
Yeah, either way.
If you want to lean one way or the other, too, you can go 5 to 2 or 5 to 3 if you want to go the other way.
Yeah, I went 5 to 2 because I wanted some extra short gold, and that was obviously the wrong way to lean. But just, and you went 5 to 3, that was a better play.
Yep.
I just wanted extra short gold deltas. Yep. That's the nice thing about pairs trades. You can tweak them at all. But the vol in there has no, if vol collapses, it's not going to change the ratio. That's all.
That's right.
Right. Would that not mean that since you're adjusting for that vol, it wouldn't exactly match up to the notional move? Like if you're just watching it on a chart, would that mean it's always just a little bit off?
Yeah. All pairs trades, we call this like a basis arb, and they're always a little bit off. Like there's no exact science to it. What you're playing for is mean reversion in the spread. You're not really playing gold by itself or silver by itself. You're basically betting that the spread will mean revert back to some level that is good for you. At least that's what I'm playing for. So far, no bueno.
Right. Yeah. The ratio just got blown out, last week, and I'm just going to ride it out at this point.
Yeah.
But,
yeah, me too.
Okay.
But yeah, it's like I said this morning, it's just about 103 right now. And I mean, I first put it on at 92, and I put more on yesterday at 102. So that's not good. I don't like it.
Right. Okay. Well, thank you guys so much.
Thanks, Adam.
Good luck to you out there. 855-238-2789 or 855-BE-TASTY. We're going to go to Cedar Rapids, Iowa. Hugh, my man, what's up?
Hey, Tom. Hey, Tony. How's it going?
Doing good, brother. How are you?
Hey, Hugh. Good to hear from you.
Doing very well. I got a very distressing message from Scott yesterday. I had written to him, and I just want to verify with you guys, because if you all three agree, then it's probably true. Is the small exchange not coming back?
The small exchange. So this is a difficult situation for us.
This was your baby.
This was my baby, and I worked my arse off on this. We've been trying for the last year and a half to build brand new technology that nobody had ever built before, exchange technology. And I should explain that there's a lot of complexities with building exchange technology, as we've learned over the years. Not only is it difficult to build the matching engine, but it's also difficult to find. Exchanges need clearing firms, just like we couldn't find a clearing firm in Canada. Well, exchanges need clearing firms. They're called DCOs. And then those DCOs need clearing firms for firms like Tasty to actually clear through. We have been unable at this point to get anybody on a clearing level to be willing to clear the way we wrote the contracts. And so we are being challenged, and we don't know if we're going to be able to roll out the exchange.
So there's still a possibility.
It's a long shot, but it's a possibility. We still own the exchange right now, but we have tabled the development work because we needed to find a clearing solution, which at this point does not exist. So we thought it existed. That's why we did all the work. Again, this is, I'm a risk taker, and this is something we spent, let's say, $20 million building, and
years,
and the last year and a half of all the smart people we have here, a crazy amount of energy. And so, I thought we built some just absolutely wild technology, but we haven't been able to find a place to clear it yet. So we're not sure how it's eventually going to unwind itself.
Okay. Well, and Citadel can't clear?
No, Citadel's not a clearing firm. The firms that clear exchanges are like OCC, the CME. There's only a couple, and they're not. Their technology is very old, and our concept is very modern. And so there's just been. It's hard to find. Nobody's going to basically build a new switch, to build a new back end, costs tens of millions of dollars, and it always is a question of who's going to pay for it and this and that. It's always a challenge, and that's where we're at.
Okay. Well, I don't have tens of millions of dollars to
do
that.
If you want to write a check, Hugh, for $10 million, you're in, brother.
I actually can't quite do that. Don't have enough zeros. But I just wanted to say, thank you for everything you guys do, and I just wanted to make sure that Scott was right, and that it's maybe not going to come back right away.
You can bank on Scott.
But there's a chance.
Yeah. Scott's right in this case. I mean, Scott's been working on it the whole time too, so he's very clear of the concept. It's just, we're challenged. That's all.
Okay. Well, thank you very much, guys.
You got it, man.
Thanks, Hugh.
Sadna, volatility staying bid. Even the S&P is only up 7.
Are you surprised by the fact that volatility is up 135 pre-market on a market where there's no S&P moved?
I am. I'm surprised by the bond move. I mean, nothing's
down. Bonds down a full point. This is where they essentially were last night.
Mm-hmm.
Yet premium has absolutely exploded in there. I'm a little blown away by the level of vol in the bonds. Like, what are they expecting? Like, I mean, it's super weird because I don't usually trade like a crazy amount of vol in the bonds, but this is nuts.
855-238-2789 or 855-BTASTY. Signing off the production team would like to take a quick 90-second break. We'll bring in Victor Jones in about 90 seconds or so. We'll let him speak for a moment. We'll get right back to your phone calls. I'll keep you on hold for just a second. We'll take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not.
Cool.
So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend, but enough out of you. We've got this man in the house, Victor Jones, with a special guest. How are you, my friend?
Oh, yeah. I'm doing well, Tony. Tony, Tasty Nation. How are you doing? Good morning, gentlemen. To what do I owe the pleasure? I get the opportunity to speak with you, gentlemen. Tom, not once, not twice, but 3 times in the last 24 hours. Christmas cometh early.
Let's not do what you guys did in your political rant last night. Let's go market right now. You got markets basically in the middle of their most recent. I'm going to talk about this last volatile week. We were up to around 5,700. We've been down to around 48.5 or so. We're 53 on the E-mini S&Ps. That's what I'm talking about. We're unchanged here. Volatility is not at the mid of its most recent 5 days. Volatility is actually up near the highs of its volatility. So you got volatility higher, market in the mid-range, and I'm just talking about these last 5 days. What do you think here, Victor? Is volatility a better play than the directional in the market? Is both sides the right play, or bonds the right play? Bonds at the low end of their range in this most recent
I think
move.
bonds are on. You think bonds on balance are cheaper than stocks?
That's what I'm saying. That's what I
mean. What do you think? I'm asking you the question.
Me, I'm the world's worst commodity trader.
Don't give me any of that crap.
I know, but I'm going to give you my opinion.
I mean, I would say you're the world's worst trader, but are you? I mean, what's cheaper? Like, how can you be a bad bond trader? You're a bad stock trader. I mean,
am I an average option trader? Can I get something?
That's so unfair.
You're
That's
an
so not
average
true.
human.
I'm an average human.
Yeah,
I appreciate that. I appreciate
You're
that.
the average of the people you surround yourself with. Have you ever seen the people you surround yourself with? They're average.
Are you included in that?
No.
No.
I'm outside. I'm in a different group.
Got it. You're in the special group.
Special group. I'm with the special children.
I mean, just because of bond pricing, I would say that bonds are probably a better buy than.
I mean, so you think bonds are cheaper on balance than stocks? What do you think, Vic?
I'm leaning long bonds. I am net portfolio, net long delta, but I'm not like jumping out of the window to go crazy long, but I'm net long delta. But I think I hate bonds. I haven't wanted to be long bonds. I think this move down to 112 and change with an already established low from 3 sessions ago, I think you got something to trade against at that previous low. And so I'm taking a very small stab at long deltas and ZB, even though I sort of hate them. What do you think, Tom?
So you think that? So you think stocks are cheaper than bonds here still?
I think stocks are cheaper than bonds. I'm leaning long both, is what I'm telling you.
Okay, that's fine. I guess I'm leaning long both too.
I would say me too on a net balance.
You too on a net balance.
Yeah, but
which one's cheaper? I would say bonds are cheaper. I think bonds are probably cheaper. Given the rally in stocks at 5,300, we're at 5,000. Maybe I change the answer. I'd probably say bonds are a little bit cheaper than stocks right now.
Well, it's funny because the three of us are leaning long in both bonds and stocks, which means we're dead, guys. Yeah. We're absolutely
dead.
Yes,
dead.
I think we are. I think
we're
there's more movement to the downside.
Yeah, I mean, I really thought that bonds got to a point where they were, where not that they were so. I thought that they kind of capitulated based on implied volatility. But I have never seen a bond crash before, so it's kind of hard for me to say, with 100% certainty, what does that look like? We've seen kind of bond.
We got through the auctions. We got through the 10 and the 30-year auctions.
We've seen meltdowns.
We got a CPI that was cooler than expected. And the interesting thing is you get a cooler than expected CPI, and you don't get your first order read through, which would be a bid in bonds. But I don't know. I like you got a tradable low against both of those assets, and I like taking a little stab on both. And I'm going to ask you this question, Tom. Do you think tariff news dominates market attention? I'm not talking about financial news, but do you think it dominates market attention next week?
next week. Well,
here's my premise.
Do
you want me to give you my premise first, or do you want to answer?
I don't
first?
see it. Hold on a second. It's on the table all the time now, which is unfortunate. But next week is a shortened, like April,
4 days because of
April expiration. It's a little shortened.
Expiration's Thursday.
There is an old saying:
big earnings week.
Buy Passover, sell Easter.
Mm-hmm.
I'm having Easter at home. Would you like to come over for Easter? I think your wife would enjoy it.
Said buy Passover, sell Easter. I didn't say, can you invite me? You don't do enough ham.
I'll do a ham.
Oh no, I have to do. Thank you for the invite. I'll ask.
Oh my God, you've evolved as a human being. Victor, we just witnessed something that I didn't think would ever happen. He said, thank you for the invite, but I have to do something else. Like I have a prior engagement, as opposed to saying, eat with you? I'd rather die.
Well, I know you don't like ham.
No, my wife likes ham. We'll make a ham for you. Ham, lamb chops,
Good
eggplant
Lord.
parm.
Lamb chops. Now you're
That's
talking
good.
my speed,
Pizza
my
gain,
friend.
which is like a Easter pie.
I like lamb chops and
Pasqua.
eggplant parm.
Okay, well, the invitation's open. Always got a seat for you.
Thank you. But I have my daughter and things.
no ham for me. And by the way,
got a
mind
great kid
you,
now, I was foolish to ask. My apology. I just thought about it off the cuff.
mind you, audience. They're talking like I'm not even here. No invites. No, hey Victor, what are you doing? Are you busy? Do you want to?
Victor,
like nothing.
Victor,
They just
I'm
talk
gonna
like
do this. I'm gonna do one
better.
better than Easter. There's always a bedroom in my house for you. Okay.
Oh. And with that, gentlemen, I'll see you guys next week. Here's my premise. The premise is, can you do any more retaliatory damage than like 100, 134, 150%? Like at some point, it's a moot point.
No, it's a moot point. It's
You get what I'm saying?
It's actually stupid. Yeah, it's completely ridiculous already at 150%.
So
I don't even know what that
the
means.
tit for tat.
Yeah. Let's do. You go 150. I'm going 250.
Right.
Like come
1,000,000%.
Exactly.
The greatest
At some point,
meme. The greatest meme I saw is
you've already destroyed the demand at some point of no return. So the numbers become silly at some point. It doesn't even matter.
The greatest meme or tweet I saw was Donald Trump got us into a math contest with Asians. We are so
dead.
I love Twitter. I just think it's so funny when people get funny about it. I don't like it when it gets something else, but I love it.
Yeah, it's so ridiculous. So I'm curious, Vic, because you're basically, you're the closest thing we have to a man on the ground in China.
Yep. Yeah.
I would have thought a lot of things for my professional resume. tastylive Asian correspondent. I did not see that coming. I didn't see that coming, Tom.
Well, there's a lot of good things about that. I'm just curious. I know Singapore plays like a very middle of the road stance on everything, but there is a huge Chinese population. I'm just curious, what is the general consensus from that part of the world with respect to all this? Are we looked upon as fools? Are we looked upon as what's the deal?
Jesus, you're putting a lot on me. And I'm sure there's maybe some Singaporeans listening. They're like, this guy is our representation. this is the guy who's going to speak for what we feel about this particular topic. So let me be a bit careful. I would say Lawrence Wong, he put out a video. And so I'll just speak to what Lawrence Wong
I don't know who Lawrence Wong is. Do I? Or should I?
You should. You should. The leader of Singapore, effectively the prime minister, just put in place by the previous one. And he effectively said, he spoke to the gravity of what this move meant from Singapore's perspective, that it was a re-engineering of the global order, of global trade. He said this is a system that the U.S. itself had designed, and that, we reiterated their stance to trying to remain neutral, things of this nature. But it was a message with a lot of gravity, towards the public about how serious this move was, how it can impact Singaporeans, how it can impact the economy, and how it impacts geopolitics and how they navigate this. It's a city-state of 6 million people. Everyone has to sign up. All military-age men have to sign up for the military. And so, things like this that create a lot of volatility, it's clearly not a good thing for Singapore. But yeah, just a gravity message, and it's a system that the U.S. itself had designed, and so he's basically saying we don't get it in a way. We don't understand it, but these are the cards.
I think that the chorus of boos is getting louder and louder, and the not just globally but domestically too, and it will be. So I don't think, to answer your original question, I don't think that the chatter goes away next week, but I do think that at certain levels, we're getting to a certain spot in equity prices and in bond yields, and in other things like the price of gold, like the U.S. dollar collapse. I think we're getting to spots where people are starting to. They don't care. What happens is initially everybody cares about the reason, and then they care about price, because it's all fine, until the whole someone gets punched in the face type thing. Everything's fine until bonds crash. Everything's fine until stocks crash. Everything's fine until everybody can talk about all the tariffs you want and this and that and tit for tat and blah blah blah. But when the U.S. dollar crashes, then and your numbers look ugly. Or you can't do 30% of your business because nobody wants to trade with you. You
sing a different tune.
You sing a very different tune. And, we have to stop fooling ourselves here. This is probably based on current prices. I'm surprised the price has been as extreme as it's been. And so I think based on the extreme price, nothing else, just extreme price, forget about all the politics and just talk about based on price. I think the suggestion is very clear that this is not working and that something has to change. I think it's very, very clear.
Well, I asked the question because I wonder whether setting the table for what's coming up next week, does it matter? You got through JP Morgan earnings, Wells Fargo earnings, and a slew of others. Does it matter? We're going to have some more bank earnings next week. Your key themes are going to be more bank earnings with Goldman Sachs on Monday, Bank of America on Tuesday, Citigroup, and a handful of others and smaller regional banks towards the end of the week.
You start getting the United Airlines of the world too. American Express gets thrown in there too later in the week, and a lot of other banks. You're correct.
Yeah, and then you're going to get a little bit more Fed squawk. You've had Fed squawkers all this week. You're going to get a few more next week. I know you guys don't really care about that stuff, and I don't know that it's necessarily market moving. I don't
think it's market movers. I think that the key here is just the underlying, the major. I don't think you need to go that deep. This is the bond market is telling the story. The U.S. dollar is telling the story. And the stock market is telling the story.
And volatility is telling a story.
And volatility.
And I think your market
you're fair.
is going to change with the wind because pricing is going to move so much. And my opinion has changed so much with pricing. But volatility stayed consistent.
The fear index is not sustainable at these levels. And I think
the backwardation is sick.
And I think that
we're still in a pretty deep backwardation. Yeah.
I think when you look at volatility where it currently is trading, and you think about that from who we are. We're not a third world country,
right?
This is U.S.
bonds
markets
are trading like an
Netflix comes out on Thursday.
Market.
You start getting those guys too.
Yeah, I don't think earnings are going to play into this, but this is a very we're walking awfully close to the edge on the ledge here. And so I would just be, I think we have to respect that. And I'm just like my concerns were with last night with you and in our discussion, things like that. I wonder whether people that are making some of these decisions understand.
Let's not go there.
I just wonder whether we understand the risks involved. That's all it is. Because volatility is telling you right now that the risks are greater than
they can see pricing. They don't have to even read volatility. I mean,
I know.
And the way the market's
inflection
moved, I mean,
point of
even
the cycle,
an imbecile can see that, right? I mean, whoever we're talking about.
I
would agree with you that. Oh, go ahead.
I think Janet Yellen gave an interesting talk last night, and she said basically, it's rare that we get self-inflicted volatility expansion. It's rare that you get self-inflicted volatility expansion. That's all there is to it.
I know, but we can't. I mean, Janet Yellen was clueless for so long. I mean, just because we like something she says, can't.
I'm just bringing.
She echoed a sentiment that you agree with. I would go with.
No, I don't care which ex-Fed chairman it is. It's self-inflicted volatility expansion.
I try, Victor. I really do try, man. I really
self-inflicted volatility expansion is a rare thing in America.
I mean, so many times. Listen, bonds are lower. Let's talk math. Bonds are lower. Bonds go lower. Rates go higher. Can't cut rates when bonds are 112 and change, no matter what anybody says.
Do you have to raise them?
You would have to raise them.
No.
Or yes, you would have to raise them. I would be.
I agree with you. I agree with you.
Okay.
No way.
Forget about what anybody else said. Victor, I'm going to give you the last word. I've got a bunch of phone calls before we get to the opening bell. I'd like to get to them. They've been patient and holding.
Okay, 2 quick points. There's no way they're going to raise rates anytime soon. They've already signaled that they're looking at any inflation that comes as potentially transitory. You know, Jerome
then you
Powell
get to rip
used
your
that
face
word.
off rallying bonds.
He tries to signal to the marketplace that they might look through it. Whether that's right or wrong, I don't know, but they would need a lot more work, I think, to get the market in a place where they start talking about, well, let me not say that. I don't think they're there yet. That's one. Number two is I do agree with you. Big earnings week next week, but I do think at the inflection point of the cycle, what these companies did for the last 3 months, I do not think investors and markets are going to care about at all. I think you're going to see a lot of CEOs who are going to kitchen sink just the same way Walmart did, where they dropped their full year guidance. I think you're going to see more of that. There's no reason for CEOs to try to be a hero here and try to predict an unpredictable environment. So I would expect more of that. Watch home builder data. We got home builder confidence. Mortgage rates are still around 6.6 in some areas, 8 in others. Home builders been on the floor. DHI and a few others are going to be reporting. I know you don't love those as tradable instruments.
They're pretty thin. Just so people know, home builders are. I mean, I don't trade them not because I hate the space, but because I don't. Is there anything to? I don't think there's much there, Vic. Yeah.
But if you're a long time hold and you're looking to do something, I don't hate it there.
The reason I say this is in 2022, given that volatility, home builders got spanked first and they went on a nasty rip for 2 years after that, and they moved first. So I think you keep your eyes on home builders along with credit, JNK and HYG. Thank you, gentlemen.
You got it, brother. Appreciate your time.
Thanks, Victor.
We're going to go to Seattle. Prana in Seattle. Thank you for calling back. Appreciate your time. Thank you for holding.
Yeah, thank you, guys. The other day, I think when market bounced, someone made a comment in your team that Tom was someone from the 20th century. I feel the better word for it would be Robin Hood, because I think he has average to lower opportunity people kind of make more money. So yeah, just my actual question is, in these volatile times, how do you change your mechanics? For one, what I've been doing is taking lesser profit percentages because things have been so volatile. I can get so many ins and outs. But I'm curious what your mechanics are adapted in these volatile times, how they adapted.
I mean, there's not
changing mechanics and changing volatility.
Yeah, I understand. I
just want to prove that I understood it.
We don't necessarily change mechanics because most of the time volatility will kind of revert to a more normal range. So it's very difficult.
A lot quicker than it has this time.
Yeah, it's almost like, do you drive different in just because it's raining?
You do.
Do you?
Yeah, you slow down. Yeah. I mean, if you're diligent. So I'm going to answer your question a little bit differently.
Okay.
If you're a one-lot trader and you're trading undefined risk trades, it's probably prudent to go to a little bit more of a wider strangle with your synthetic strangle with your new products, with your new trades. Or if you're being directional, like I said a couple of days ago, buy call, sell put, buy a put below if you're bullish. If you're bearish, do the complete opposite on the call side. Just using a lot less buying power than you would have used one-lot trader. If you're a multi-lot trader, then you're just going to have to cut your size down and stay exactly where you are. And if you want to go a little bit wider, you can go a little bit wider. But I think if you're a multi-lot trader, you don't have to change much of the mechanics at all. That would be the way I would answer it. In hindsight, if you were asking me this question 3 days ago, before the rally, when I was getting quite larger than I wanted to be, and then subsequently the following day when I got dinged quite larger than I wanted to be, I would have said, you keep it business as usual. So that can change subject to markets too. I think you have to be a little fluid, like water. I think somebody said yesterday, quoting Bruce Lee.
I think, I don't think that much changes, but you can reduce your size. You can get a little wider in your strikes. You can reduce your size a little bit. I think the reduction in size, I haven't reduced my trading. I've reduced my size a little bit.
Right. And the most obvious trade to me, it seems like, is keep shorting volatility, because these are not artificially, but kind of unsustainably high VIX levels. So I keep shorting VIX on every pop to somewhere between 35 to 40. The only question I have on that is, what's the worst side to that strategy? If I have some buying power that can always come in for short-term pops higher than that.
But what's the worst case? You're asking what's the worst case?
What can go wrong in that kind of a VIX future short trade?
I mean, it can get worse. I mean, we've had two situations since 2000. We've had two situations in 2000 and the end of 2008, early 2009, and during the pandemic in 2020. We've had two situations in the last 25 years when volatility got to a little over 80. So the difference between 40 and 80, is that premium doubles again. So I mean, that's your worst case. What's interesting about where we are right now is that we haven't had a lot of cases in the last 25 or 30 years where volatility has stayed at heightened levels like it has now for this long. So this would only be like the third time in 30 years where we've had volatility stay heightened for this long. But if you go back to 2008, it stayed for like almost 300 days. If you go to
a lot of vol contraction and coming back.
Yeah, but it's still
elevated.
Heightened.
Double what it normally was prior. Yes.
In 2008, it was heightened for almost 300 days.
Yeah.
In 2020, it was about 30 days. Right now, we're a little less than 20 days, but this is still the third longest time in almost 30 years. Right. So we're playing for contraction. Obviously, we are not playing for the small chance that it will expand even further.
Yeah.
Right. Makes sense. And the last question, actually, one other question I had was, what's your view for today and the next 1 week? I've heard about your views on being a little long on bonds and equities. Do you think we have formed a temporary bottom here, given how much volume? And usually it gets a lot worse before it gets better, right? So 2 days back, that's what I saw. But I want to hear your views.
I thought with the rally the other day, that 10% rally the other day, that pretty much solidified that we had a pretty decent bottom in place. We got down to 4,800 plus once. We got to 4,900 plus once, and then we've had a massive rally. I think that kind of double bottom, that area in there, is pretty good. I would be really surprised if we broke that. I think there's more risk, especially next week going into April expiration. I would think that there's a little more risk to the upside than to the downside. So I kind of feel like, although we could drop another 100 points, we could get down to last night's lows and all that kind of stuff. I think that there's pretty good lows in place, and and I'm looking for a little upside. With respect to the bonds, though, I don't have that same conviction yet.
Awesome. Hey, I'm sorry to interrupt both of you guys. It was great discussion, but we need to take a quick 90-second break. I'll let Victor go. We'll come back. We got the opening bell immediately following these messages. We will get right back to you.
Okay, thanks, Prana.
Thanks, you. Great call.
Thank you.
You got it. We will get back to your calls. I see Giuseppe, Jamie, Andreas, and Jack. We'll be back in 90 seconds. This is Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? The opening bell is imminent, followed by your phone calls. Even the S&P is down 19 and change, NASDAQ down 64, Russell down 9, and the Dow down just about 100. Volatility up 132, just off of its high. Sadnov, I'm going to give you my prediction for the day. Are you ready?
Yeah, sure.
Volatility stays bid into the weekend and through the weekend. We don't get any volatility contraction there. I think a pretty.
Well, then you're not going to get a rally.
We're going to close up on the day or down on the day within 50 handles of unchanged. We are going to have violent moves in between there of 100 to 150 handles. That's my prediction.
Well, this volatility expansion this morning in every single underlying product is really crazy, weird, and strange.
Mm-hmm. All products volatility has expanded on.
No.
And I think vol has to be right.
Yep. Got a couple orders working on the opening, JP Morgan and Morgan Stanley, but I don't think they're going to be, with this much vol expansion, I don't think they're going to be working.
Well, who cares what you think? There's the opening bell, my friend. I just went through the indices. I'm going to get to the bonds now. Bonds are down.
When we come back, somebody asked me if we talk about that data percentage. So just remind me, because we should have been more clear when the doc called in and asked about
he had a 2%.
data numbers.
Mm-hmm.
Yeah, I should explain why 2% is too high.
Sure.
It's more like 0.2% is kind of where you want it to be, but anyway.
Sure. Bonds down 102. Bitcoin hanging in there, up 2,700. Sadnov back to 82 and change. Let's call it the mid-range for its most recent movement here, ever since around early March. Oil down 29 cents. Been oscillating between unchanged and lower for most of the morning. Gold up 71. Sounds like a lot because it is. Sadnov, that's a 2.25% move, $10 off its highs. Silver doing the same. 82 cents, almost a 3%, 2.75% move. Corn, wheat, and soybeans, I think those are non-events, although you do have a 3% move in wheat to the upside, which is a large move. You've got the euro up 1.5%. Silent, this is a commodity that's moved 3% or so in the last 2 days, 3% or more. It's a humongous move. That means the dollar is extremely weaker. I think you need a little bit of fall in the euro, obviously, to get the dollar moving and to get the bonds to uptick a little bit here too. Sadnov, you want to take a look at some stocks that are moving before we get back to the phone call?
First comment about stocks, just because
Sure.
I was curious to see how the earnings plays would work. So they didn't really move. Morgan Stanley.
You were in the monthlies, 30 some odd days out, right? So,
Yeah, but Morgan Stanley's down 277, and
Morgan Stanley down 277. It looked up pre-market.
Well, it's down $3.
Okay.
And I have a very small strangle on there. I just wanted to see in May. And I want to see how much it would come in. Blah blah blah. This, and it came in. I mean, under $3 is a nothing move.
Nothing move. Yeah.
Okay, and so it came in about 30 cents.
Not worth the risk.
Not worth the risk.
Right. If you were to tell me that Morgan Stanley was going to open down $3, I would think that your spread would do a lot better because the expected move was,
J.P. Morgan is down $2.
J.P. Morgan pre-market was up $2, so
it's down $2, and it opened up like about.
Now it's down $1. I mean, this is a nothing move.
Yeah.
I mean, Morgan Stanley had a lower implied volatility than J.P. Morgan.
Yeah, but J.P. Morgan's down a little bit, way inside the expected.
Unchanged. It's down 40 cents. It was down $3. It's up $1. Let's just call it unchanged. That spread should have worked out well. If you only made dimes on it, then you can
made 20 cents.
Okay, well then we're signaling to you what we're trying to talk about.
No,
right now.
what I'm saying is that the earnings plays are going to be very difficult with volatility where it is, because
selling premium is going to be very difficult, especially on both sides. You're going to have to be a little bit more directional or something like that.
The only way it's going to work to sell premium is if volatility collapses those days.
Yes.
It's not going to work if you're right on the underlying, which means you've got a lot of work to do. It's going to be extremely challenging. Literally, J.P. Morgan, my P&L is unchanged, and the stock is unchanged. And if that's the case on earnings, then we're going to have our work cut out for us.
Yes, we are, my friend. It's going to be business as usual. Work cut out for us.
So I'm looking at individual stocks to see if there's anything kind of weird, creepy, blah, 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 anything. Let's see if there's...
Going across the board here, I'll give you some movers to the downside here, Sadnov. You got Meta down 10. You got Costco down around 9 or 10. But, listen, here, I'll go to Costco. I mean, Costco's at the middle of its range, just like the E-mini S&Ps. When you go to like a Netflix, which is having earnings too coming next week, I believe, it's in the middle of its range too, down $2 and change. Let's see some of these other stocks that are down. Royal Caribbean down $6. Not finally going out of business. Goldman Sachs down $4 and change. These were all higher pre-market. Lulu down $3 and change. I don't know if Lulu was. I'm just saying the banks. Home Depot down 3 and change. Qualcomm down around 3 and change. On the upside, you got volatility products. Newmont Mining, obviously with gold being higher, Newmont Mining really catching a bid. Coin up $2.80. J.P. Morgan now up $2.60. That's had about a $5 or $6 range pre-market till now, down and higher. Tesla, which was lower to unchanged a moment ago, you can see Tesla open at 251. It's 254 and change. That's all I got south of right now. Baidu, some of the Chinese stocks, PDD, both higher by $2 or change.
Which is surprising because sometimes I get I think I got an email last night from somebody who said, and this is why markets are as crazy as they are. I said, I'm long some puts in a Chinese stock. I forgot which one it was. But remember there was a rumor yesterday that...
I think Fox News came out that the administration was talking about...
Yeah, it'll never happen, but whatever.
Delisting.
Yeah. So this person said to me, what happens if they delist a certain stock? Because I'm long some puts in there.
Yeah.
And I'm like, well, it's not going to happen, but there'll probably be a closing price.
Sure.
And they'll figure it out
if they were to do something like that.
If they were to do something, and he's like, "Oh, great, thank you." And I'm like, "But that's kind of what happens, As soon as you start asking what happens when they delist this,
yep,
that's when that's when it's all over but the crying." taking a quick look here just to see if there's any kind of stocks that are
pretty much an unchanged market for the amount of volatility that we have in.
I have a lot of NASDAQ stocks that are actually higher today.
Mm-hmm. The NASDAQ is still lower today, or basically unchanged.
A lot of NASDAQ stocks on my board are higher, but not. Remember that Newsmax stock? It went NMAX.
Oh, NMAX?
Yeah, you remember it went public at like $14 and it went to like
$250. It went to $250.
Did it go to $250?
High was $265.
Okay, do you see where it is now?
Back to 28, but you couldn't sell it. It was hard to borrow.
No. I know. Yeah, you couldn't sell it. I know. Do you see where it is?
Yeah, back to $26, where it probably rightfully belonged all the time.
I understood.
10 times it went up.
But that's what I hate about parts of this business when that happens.
Yes.
Because it's indefensible.
Yeah, right.
They just
really couldn't short it. I mean, it wasn't our game, wasn't a retail game or anything else like that. But man, if you got in the IPO, you got out of it quickly. It worked for you.
Yeah.
Let's go back to phone calls. Does that sound good to you? 855-238-2789 or 855 Be Tasty. Miami. Andreas, what's up, my man? Thanks for calling back.
Good morning, guys. How are you? So I have a question. I remember a couple of years ago, Tom talking about a portfolio composed of only options.
Okay.
So instead of holding stock, holding buy calls in the money and playing with that, do you still hold the same idea?
What
Andreas, say that one more time. What's the question?
So it would be having a portfolio instead of holding stock, holding buy calls, like buying calls out in the money with long like with high deltas, right? Like 90, 80 deltas.
Mm-hmm.
And holding that instead of stock.
Sure. I mean, could you? Sure.
Sure. I mean, markets are a little wide down in those deep in the money options there. If you buy a call, you're actually mirroring what I talked about the last couple of days, synthetically speaking, because you don't want to spend all the money of buying stock. It'll be, basically 5-6 times as much. You could, or more, maybe even 10 times as much. You can buy call at the money, or same strike, but let's just do at the money because the markets will be deepest and richest there. Buy call, that gives you 50 long delta. Sell put, that gives you 50 long delta. That would be synthetic stock and use significantly less buying power than buying stock. And if you want to be short stock, you do exactly the opposite. I'm not getting directional here with you. But for your point, I know you're buying the in the money option because you feel that the stock can't go any lower than that in a crash type situation, blah, blah, blah. I get it. So my suggestion was to do this trade, or my thing for you to look at and food for thought, and then buy a put well below. Maybe it's $10, $20, $30 lower, mirroring your strike that you wanted to buy that has very deep markets. And then you would have essentially the same trade on as buying that deep in the money call that has wide markets, and maybe you wouldn't get a fair and equitable fill. It is 3 different legs. You could do them all at one time, but you could definitely make your risk even lower than that and still get about 75% delta or 75 delta on that play.
Got it. And how far would you buy them? Like, would it be 2 years long?
That's
or
up to your risk. You know what I'm saying. So I would look at it if the option you were buying was $30. That's $3,000 worth of risk. Then I would do the synthetic call, synthetic stock buy, call, sell, put, and then go $25, $30, $35 wider with my put, because it would give you the same amount of risk or less than just buying the call outright as you had. And you win 1-to-1, basically 1-to-1, maybe 0.85, 0.95, depending how far you go with the put that you buy.
Okay, thank you.
You got it, Giuseppe. Put it in the Analyze tab. You'll like what you see, I think. We're going to go to Connecticut. Jack, my man. I believe it's the same Jack in Connecticut. Jack, what's up?
Hey, Jack.
Jack, Connecticut?
Jack should be on.
Hear you, but you're very low, Jack. Jack, Connecticut? Okay, we'll put you on hold. Maybe the team can talk to you. We'll go to Kentucky. I'm sorry. I'm so sorry. I didn't mean to skip you, Giuseppe. New Orleans, Giuseppe, I apologize. I didn't see it. I apologize. Giuseppe, New Orleans. Thank you, James, for letting me know.
Hey, Tony. Hey, Tom. How y'all doing?
Sorry about that. That was my mistake.
No, you did it on purpose. Tom texted me and said you was going to do that on purpose. I know.
Don't worry. Tom will make me pay. What's up, Giuseppe?
Listen, real quick. On deltas, I know delta, a positive delta or a long delta, goes in the same direction as the stock market. Am I correct? In other words, if the market's going up, your delta is going to go up. If your market goes down, your delta goes down. Is that correct?
It depends. If you're short premium, no, it's the opposite. So if you sell a strangle, for example, or an iron condor, whatever it is, and the market goes up, your delta will go down.
Correct. So I got it right. My question to you is, when you're adjusting your portfolio, you only adjust the portfolio on the stock level, or do you also look at the delta on the whole portfolio level?
No, only on the individual name level. That's the question. On the individual name level only.
Yep.
Right. So you never tried to adjust your portfolio if your delta gets out of skew.
Giuseppe, I don't want to say never. The problem with that is it is very difficult. We've talked about this a lot, and it is extremely difficult to manage your overall beta-weighted deltas. It's a lot easier to manage the individual equity deltas or index deltas on a one-off basis. You get a much better, you get a much cleaner adjustment. It's much crisper, and it's very, it's one-on-one. So it actually does reduce risk on a general portfolio level. You have to have a crap load of positions. You have to be like a hedge fund in order for that to work. And you don't know when to get out of anything. It's quite difficult. Trust me on this. You want to do the individual names.
Okay. Now, this is the $1 million question.
Sure.
When do you know how to adjust individuals when your delta is going against you? In other words, I usually do it by a percentage of what my premium is, but it looks like it's working better for me when I see that my delta is getting out of skew a little bit to adjust it. But I feel like I'm making too many trades because I'm always adjusting.
It's really,
I go by strategy.
It's when I like to say to people, it's not like an event that happens when you cross some line, or it's not when something is triggered. I think it's a comfort level. I adjust because there's too many other things going on in the markets. So I adjust based on comfort level.
My answer is the same, but I'll give you a little bit of example different. And this is what I've said from the very beginning. If I have a strangle on delta neutral 0 delta on entry, I get to around 15-ish delta, I'm thinking about doing something. If I had a long delta strategy on where it had 50 long deltas, then that's what I wanted. And I got down to 25 deltas, basically cutting it in half. That means it's working. I would think about doing something to get back to its 50 deltas. If it went to 75 deltas, meaning it's too long for me, and that means it's not working for me, it's going the opposite direction, I try to get that down to around 25 deltas again. So, on a directional play, when my deltas have, basically gone up by around 50%, I look to do something one way or the other. And if I'm a delta neutral, it's somewhere around 15 to 20 deltas. That's my answer.
Yeah,
that's what worked for me. Keeping my side.
Here's the bottom line on this, because I want to make this really clear. Because I wrote to somebody a same exact question this morning. Whether you adjust aggressively, like I do, whenever you're uncomfortable, or whether you do what Tony just said, which is you get to a certain delta number, you do whatever. In the end, the results are virtually the same. We've researched this every which way. not adjusting aggressively, adjusting
One's
aggressively.
no better than the other. You're right. You're right.
What
One's no
we've
better
looked
than
at this every which way, Giuseppe. The answer is, in the end, the P&L differences are very minimal. However, the aggressive adjuster has two advantages. One, the aggressive adjuster has a lower P&L volatility, and the aggressive adjuster puts more wins on the board, but doesn't make any more money. The person that decides to adjust a little bit more passively has less whipsaws. And again, the net P&L works out about the same. So you're trading P&L volatility and pop for fewer whipsaws. It's really a toss-up, but that's how it works out.
And it basically comes down to do the same thing all the time. Don't
don't go back and forth.
Don't go back and forth. That's when you really really chop yourself up. And
go ahead.
No, keep going. You got it.
No, and I guess the question is the reason I'm asking this question is a couple of weeks ago, maybe a month ago, I remember Tom, I think, said that he tries to keep a positive P&L every day. Which strategy what strategy works the best to try to keep your daily P&L positive?
I mean, every strategy that I do, I am hoping that it keeps it. There is no one. I don't think there is one answer to that.
That's a tough one because what else are we here for? That's the objective for all of us is to. There's certain things here. My trading philosophy is quite simple. The way to keep your P&L positive is to mechanically optimize the things that you can control, and the things that you can't, you just have to hope those work out in your favor more times than they work against you.
And Giuseppe, I'm going to answer it a little bit differently. I think being in the business long enough, I know I'm not going to make money every day, even though I expect to make money every day. I would say, if I had to say my numbers, it would be 70% positive and 30% negative, only because most of the strategies I put on have a 70% pop, and I'm managing those trades. So I know I'm going to have days when I lose money, and it's not an anomaly to me. It hurts just as bad, but it's not an anomaly to me. All I hope is that I can keep those losses a lot less than my gains. That's really what it comes down to for me.
Hey, Giuseppe, we got to run, man. We're behind.
Okay. Bye. Sorry about taking too long.
No worries.
You need to dump Tony for the trip to Milan and get a real Italian to come with you.
Yeah, no kidding. I did dump him. Yeah.
You're gonna leave like that? Wow. All right.
Hey, before you go to the next.
Later.
Before you go to the next call, because this guy, somebody asked me to talk a little bit about theta to net lick because
yes.
Because new viewers, new listeners, that might have been confusing.
Okay.
There was a Dr. D called in earlier from Tampa and said he was at 2% his theta to net lick.
So on a $100,000 account, that would be $2,000 theta.
Yeah, let me just explain this for a second. So if you're at 2% theta to net lick, if you have a $100,000 account, you have $2,000 a day in theta.
Right.
Okay.
That means your EXT number is huge.
We believe that number should be closer to 0.2%, and I'll explain why.
And 0.2% would be
$200. Now, $200 over, let's just say 30 days, because weekends, days, whatever, average month is 30 days. $200 a day in 30 days, just so you can see how the numbers play out, is $6,000. If you keep approximately 25% of that, which is a reasonable expectation, it's about $1,500. $1,500 per month, if you were just thinking about that, is about an 18% annualized return. That is not a stretch. That is a reasonable expectation over risk-free rates at 5%. So whether the number came out,
swings seem to be okay, up and down.
Yeah. Whether that number was 15%, 20%, 25%, but 18%, which is $1,500 a month over 12 months, is a reasonable expectation. That's why that 0.2% theta to net lick is what we strive for. Because again, I'll just do the math. $100,000 account, you can change it to whatever you want, but $100,000 account, 0.2% per day is $200 a day times 30 days is $6,000, even though I know that number fluctuates. And we hope to keep about 25% of that. That's $1,500 a month times 12 months. That's $18,000. $18,000 on a $100,000 account is 18%. Now, obviously, that number could go down to 3, go up to 30. Who knows how good things are, whatever. That's just the basic math.
And that's why you said that 2% that the gentleman called was way too big.
If the number was 2% a month, just so you put this in context, times was $2,000, okay? Times 30 days would be $60,000 a month, okay? Of which you were hoping to keep 15, which you were hoping to keep 15,000, 25%.
Right.
If you were doing that times 12, that'd be $180,000. That would be just under a 200% return on a $100,000 portfolio. That is an unrealistic expectation. Could you make that in 1 month where you have, where you make 20, 15,000?
You get it all right, volatility cooperates.
You make 15,000 or you make 20,000, of course. But is that a realistic expectation to make, to make 15%, over 15% per month? No, that is not.
But let me give you a good point that my Taiwanese sources just made too. We are talking about 45-ish day time frame on all of these numbers.
Yeah, but I'm talking 30 here. Just
30, whatever, 30 days. We are not talking about 0 day. 0 day will skew those numbers exponentially, and they are thrown out the
Oh, you're talking about trade duration.
Trade duration.
Yeah.
I'm throwing all of that out, but you could have $10,000 in theta decay in a day on a $100,000 account and be a decent size, normal size for a $100,000 account. And we are talking our normal mechanics of putting it on around 45 days, taking it off around 21 days.
I mean, are there people that make 200% a year? Sure. We have some people that make 1,000% a year that I have. But a realistic expectation we do is 1.5% to 3% a month, not 15.
Yep.
That's all.
Yep. Good point.
I don't want to give unrealistic expectations to anybody. That's all this was.
Yep.
Anyway.
And I don't want to give anybody skewed numbers on, it depends on the time frame.
There you go.
Yep. Okay. Fair enough. 855-238-2789 or 855 Tasty. Phone lines are open. We're going to go back to Connecticut. Jack in Connecticut. He's back. What's up, Jack?
Hey, how are you? Thanks. Tony, I was going to ask you a question, but it was answered in one of your previous calls, and I was doing sideline for adjusting. I had an iron condor I put on for Costco right before the volatility started, so obviously it's not doing too great. I was going to adjust, and then I decided to just stick with it for now. I mean, the delta came way down today. So that's about it. I don't know. Thanks for what you do. And Tony, listen, I can never watch your YouTube live. What am I missing here?
You can't find Tom's YouTubes?
No, yours.
Mine. Option Trades Today. If you go to YouTube and you search Option Trades Today, Tasty Live, it'll pop up for you. If you send me an email, I'll send you a link. It's also right on the Tasty Live website too. If you just scroll down, it's pretty. It was not on the first page. I'm not first page worthy. I'm not sponge worthy.
No, we put you on the back page.
But if you scroll down just a little bit, you'll see Option Trades Today, my big smiling picture, and you'll get them there. If you send me an email, I'll send you the link.
All right, and your email again is just...
Sorry, it's BAT at tastylive.com. BAT, B-A-T, at tastylive.com. You got it, brother. Thanks so much for calling back. If one Jack was good, Sosnoff, 2 Jacks is even better. We're going to Kentucky. Jack, we got Jacks in the hole. What's up?
Hey, Tom and Tony, how you doing?
We're doing great, man.
Hey.
Hey, so I got greedy, and it bit me in the butt.
Okay. I've been there.
I bought 2 Tesla calls for the 320 next year, January 16th. I bought those back in January.
Okay.
And I've been selling calls against it. But obviously we've had a pretty deflated Tesla recently. So my question for you all is basically, I know this is a really crappy situation, but if you all were in the same situation, how would you all deal with it? Would you, because I don't want to go ahead and sell right now and take this major loss. But at the same time, I'm thinking, okay, is there a better option?
All right, I'm gonna give you props, and then I'm gonna give you some reality too. Okay, so your props, we would have handled it probably exactly the same way you did. We would be looking to sell calls against those, and I know it helped a little, and it didn't save the majority of your losses that you have presently in that trade. You do have a long time in duration, January, a long time to go. So that's the good part, and we would have done exactly the same thing.
Yep.
The bad part is you already have the loss. Like your P&L, the money you have in your account reflects that loss. So whether you want to take that loss or not is entirely up to you, and you can do whatever you want with it. But you have the loss. I wouldn't make that a decision-making process on whether you do something with this trade. That said, I would probably close that trade, because any up move you get, if you think we're near, here, let me answer your question. If you think we're near the bottom and you like the stock over 320, you got to like the stock at 250. So if you think we're at a bottom in Tesla, I would probably close that January trade. And if you want to stay in January, that's fine too. Whatever that trade is trading for, it's $10, $15, $20. I would put $10, $15, $20 worth of risk. And if you want to stay out in January, you certainly can stay out in January with something closer to like an at-the-money call spread, or something that, a short put spread, since volatility is so high, that had only $15, $20 worth of risk. You're never going to make back on my trade as much money as you lost on doing those spreads as you would on your long 320 call. So if you're really bullish on Tesla, I would stay with the call and just keep selling the out-of-the-money calls at 320 or above.
Yeah, because my biggest hesitation is that I don't want to sit on this and then for it to go to zero, and then I lose everything.
Yep, I agree.
Yeah.
Okay.
Yep. Yeah. No, we've been there.
Yep.
Yeah, I don't know what to say.
Okay.
Yep.
Yeah, we would have done the same
right.
thing.
Would have done the same thing. Yep. And
okay, I appreciate it, guys.
You do. You got it, man. Appreciate your time.
Yeah. Thank you.
Yep. Got it. 855-238-2789 or 855-BTASTY. Got 3 or 4 lines open. Going to go to Denver. I got Nathan. Nathan in Denver. Thank you so much for calling.
Hey, what's up, guys? I really appreciate listening to you guys throughout this crash. I'm a young trader, so it's been good to have some people, help throughout this. But my question for you guys is, I don't have any stock exposure. I kind of want to start to buy some stocks. And how I was going to go about it was I was going to sell a cash secured put at the money, like a year out. And I was just wondering, if you guys were in your 20s and you wanted to buy stocks that you would hold for 10 to 20 years, how would you go about it in this market?
Well, first of all, we'd be okay selling puts if we wanted to buy a stock for the next.
He's cash secured account.
Oh, you're cash secured. Sorry.
So I'm not selling puts in a cash secured account.
You're going to think this is crazy, but I don't think there's ever been a time in our entire trading history where we said to each other, you know what? I'm just going to buy stuff for 5 or 10 years out.
We have, and we've held them for 5 or 10 minutes or 5 or 10 days, but go ahead.
No, but I've held stuff for years, but I don't think about it that way. I mean, if you think that, just find what you like and just buy it. And I would still probably sell calls against it just for the hell of it, just to reduce my basis. But if you're talking about, like, if you think 5 years from now or 10 years from now, NVIDIA is going to double, which it probably will. Or if you think, like some stock like that, I don't know. Maybe you're thinking about Coinbase or whatever else. I don't know. But if you really like these stocks into the future, don't overthink it. I mean, this is the beauty of positive drift and investing in the stock market. Just close your eyes and buy it. I sell calls against them, but if you don't want to, don't. Just hold it forever.
In cash.
Sure. I mean, don't beat yourself up on it. If you're asking, would you dollar cost average or would you just buy it? We just buy it. There's no statistical there's no statistical advantage from what we can tell to dollar cost averaging. So if you want it, just buy it. Yep. And then if you want to add more later on, add more later on. I don't stair step in or stair step out that way. And we have researched that a lot. So it's just a function of, just wait for your price and then that's it. Go for it.
Yep.
Gotcha. So, and if I was going to sell covered calls against it, would you guys do like a month out, or what kind of time frame would you do for that?
45 to 50 days, closest to 45 days, always 35 delta option, 45, 50 days out. And, all you're trying to do.
In cash secured, I would probably use like a short put spread just because it's going to save you so much buying power because cash secured is basically.
Yeah, but even so, if you want to do this, just remember your goal over time is every year trying to reduce your basis just a little bit. You don't have to be a hero, but just try to knock a couple of bucks off your basis price every single year. If you're going to hold this for 5 or 10 years and you can knock off, 5 or 7% a year, you can knock your basis down significantly, and just think about it that way.
And if I get called away, I'm happy with it.
Of course. If you get called away, it's like shit, I made a great trade. Who cares?
Right. And just one other question for you guys. I have a TLT put spread that I had to roll today.
Okay.
Is it okay for me not to be mechanical and sell calls? Like, I really think bonds are about to go up.
Okay.
So if I have that opinion, is it okay just to be directional?
Of course. 100%.
Gotcha.
Why not? I mean, you're absolutely allowed to take, market direct. You're encouraged to take market direction if you feel strongly that either a price is too cheap or too expensive, that kind of thing. 100%.
Gotcha. All right. Well, I appreciate you guys' help.
You got it, man.
Of course.
Good luck to you out there. 855-238-2789 or 855 BTS. We're going to go to State College, Pennsylvania. Justin, what's up, my man?
Hey, guys. Good morning.
Good morning.
Hey.
I'm wondering what you think about the prices in Bitcoin and Ethereum and the correlations to the movement in bonds and the broader market.
Well, I would love for somebody to tell me how Ethereum works because I can't figure out that I can't figure out ETH to save my life. I mean, it used to have a pretty tight correlation with Bitcoin, but that broke off what felt like a year ago, and I don't even know how that thing moves anymore. But it's a pig, that's for sure. I feel like we were selling ETH at 4,000 when Bitcoin was 50,000.
Yeah.
And now, where's ETH right now? 1,400 or something?
Yeah. 1550.
1550.
It's up $50.
Yeah. So I don't know that you can really look at the correlation between Ethereum and Bitcoin and there's a play there. At least it hasn't worked in quite some time. But if you're talking about, Bitcoin and the S&Ps, the correlation's pretty low. Bitcoin and bonds, the correlation's pretty low. I mean, I'm not sure what your question, where you're going with this.
Well, some people have said that it was tightly correlated to NASDAQ, and it just hasn't been moving like that recently on the news. The short answer for your question on ETH is it's the transaction layer, and things have moved to other transaction layers like Solana. But just sort of, we look for uncorrelated markets, and I had kind of discounted that Bitcoin was essentially just NASDAQ with extra beta, and it's more emerging to behave like digital gold, in my opinion. I was wondering if you agreed and if you like the price or the volatility here.
I mean, I would argue that, there were a couple of years ago, you could say that Bitcoin and NASDAQ had this relationship, and there was definitely, there was a little bit of, there was some, you could see some correlation. I kind of feel like that's pretty much long gone. So I mean, that's the best I've got there. I just don't feel like if NASDAQ's up, that means Bitcoin up. I mean, there have been a couple of days where there's been some across the board selling. And, the other morning when the S&Ps were down significantly, Bitcoin was down like, 7,000. And so there is some like tied to various asset type of, selling that we see. But I mean, your guess is, you've been watching it obviously as closely as we have. Our issue is that we just don't have the same kind of derivative plays in there. And that when volatility in Bitcoin is the same as volatility in Tesla, there's just more stuff to do in Tesla and NVIDIA than there is in Bitcoin.
Right.
Yeah. I think Coinbase is functionally a better ETH at this point because they derive fees basically the same way.
Yeah, I mean, if you want to trade, derivatives on digital assets, Coinbase is the best. And if you want to keep your size really small, MicroStrategies even trades. MicroStrategies trades better than Bitcoin from a trading perspective.
All right. Thanks, guys. I just kind of wanted to point out that it was dislocated from gold a little bit, dislocated from bonds a little bit, and dislocated from stocks a little bit. I was wondering if you guys saw a deeper meaning there.
Could not agree with you more. If there's a deeper meaning, I don't think we understand it. We're bullish. If you've watched, we haven't sold a one lot of any digital assets. So I think over time, we're staying long and we're generally bullish, but we haven't been aggressively buying anything either. We've kind of just been keeping it kind of tight, just keeping our existing positions on.
All right. Thanks, guys.
Thanks.
You got it, man. Good call. We're going to go to, and good discussions.
This is an interesting rally. I mean, they look 1 second ago, they look like they wanted to pull the plug.
I know where you're trying to make a story here, but 30 handles higher, 15 handles
lower.
No,
I understand that.
With 30% implied volatility is the norm.
They're going nowhere fast, is what you're saying.
So far, Sadna, for the first 38 minutes, this broken clock happens to be correct.
Well, I'm watching
the first 38 minutes.
I'm watching a lot of different stocks this morning, and the only one that's kind of turned around is Apple. I don't know.
Apple's up a buck and change. Again, I don't consider I think with volatility in the 30s, I think we have to look at dollar moves and discount them. That's just the implied volatility acting the way implied volatility is supposed to act.
Okay.
Let's go to AB. I hope it's not Anthony Batista, but AB in Atlanta, Georgia. What's up?
Gentlemen, good morning. How are you?
AB, what's going on?
I have two questions. My first question is regarding the equity positions that I have on. This up move earlier today, I used as an opportunity to lighten up. So I removed a couple positions, but I have 3 positions left. They're all within up to 7% of my net lick. My question is, heading into the weekend, how would I hedge that? Because, options, I can't trade them until Monday morning. I hate hedging, much like you guys do. I even hate the fact that I'm having to ask this question, but given the moves over the weekend, and I'll just give you an idea of what I was thinking, maybe short 2 M&Q contracts right before 5 o'clock and put in stop loss orders. I know that's, not a complete hedge, but how would I even derive a number of how many M&Q contracts should I short against my positions?
Okay. So how much stock do you have unlevered?
How do you mean?
How much?
What's the notional value?
What's the value of the stock that you have?
The trades that I have?
You just said you wanted to hedge your NASDAQ, right?
No. I have 3 equity positions, Target, Delta, and Salesforce. and I have option trades in all three of those: strangles, wide strangles.
Did you say it strangles in all three of them?
Oh, you have ABI. You have strangles or stock or both.
No, wide strangles.
Wide strangles. So what is your beta weighted?
How do I hedge that?
I know. What is your beta weighted delta?
Let me see.
Beta weight is the top number on the Tasty Trade platform.
All right, let me see. Beta weight 225.
So you have 225 long deltas in SPY.
Yeah.
So
you want to know how do you hedge that 225 long deltas
using
even though
NASDAQ futures,
even though they're in individuals option positions using NASDAQ micro futures, right?
That's correct.
Yes, and just in case we open 500 points lower, that's the only reason why.
Sure.
Nothing else. And in addition to three of these positions, I have puts on VB and puts on ES, which are doing well so far.
So I'm going to give you the math from our beautiful cheat sheet here, which you can sign up for in Cherry Picks. It was timely done for you, my friend, 2 or 3 days ago. If you don't know the link, you can send email me, @tastylive. I'll give it to you. And it tells you that one MNQ future equals 84 Q shares. 84 Q shares are about half as many SPY shares, approximately.
I don't do half.
Okay, well, if you want to beta weight your portfolio to Qs, let's just say it ends up being 100. I would say one future.
The answer is 3 MNQ futures.
Okay, perfect.
That's your answer.
Thank you so much.
Right.
And excellent.
But-
and is this something you would even
But
consider doing
that would
yourself?
hedge you totally. Like you might want to only do 1 or 2 of those.
Sure. You might want to underhedge.
Right.
Would we do this? No. We would prefer, and this is to what an earlier caller said.
Roll down.
Like you said, you have some deltas. I just heard Target, but you had Target. What other stocks? AB.
Target, Delta, and Salesforce.
Target, Delta, and Salesforce.
I would not hedge MNQ with those.
We would not use MNQ. We would do. I wouldn't touch Delta, and on Target and Salesforce, we would adjust the deltas in there. So we would neutralize the deltas in Target and Salesforce. We wouldn't touch Delta, and we would not do 3 MNQs against that position, just so you know.
Right.
If it was us.
That would make us very short.
If it was you and you want to do that, no problem. I think you'd be leaning a little bit short, but that's up to you.
Yes.
Okay. Yeah. No, totally understandable. My deltas are in line in all 3 positions. I was just concerned with a major move over the weekend. That's all it is.
If you're concerned with a major move over the weekend, I'd rather see you reduce the size of your positions.
Yep. And that would be rolling down the untested side, or getting out of one, or doing whatever you want to do.
Yep.
Yeah. Okay. All right. Perfect. Sounds good. And the last question is obviously in bonds. I got stopped out in 6E last night. Volatility ended up literally killed me, so I had to get out. But I placed a ZV trade yesterday. I had a short put at 108. But with this volatility expansion and the down move, would you consider adding maybe another short put into this move?
Well, not given the fact that you were just trying to hedge that direction. You know, like you'd be adding to your woes or to your concerns, not addressing them by doing that. I mean, if you want to do it, if you want to sell another put somewhere, go ahead. But you were concerned about that side of the market, so you're just adding to what your concerns were.
Okay.
Okay.
Well, gentlemen, thank you so much. That's all I had.
You got it, man. Good question.
Thanks.
Good question. I think you helped a lot of people too, because I think a lot of people have similar questions or similar concerns, and that's why we do this. So great question. Maryland, Todd in Maryland, what's up?
Hey, good morning, guys. I had just one quick question regarding your data to net lick discussion earlier. I'm sorry, I'm getting feedback from your speakers.
Turn off the computer or something like that. Just talk to the phone, please.
That's what I'm trying to do. Okay, so data is easy to define. How do you define net lick? Is it the premium that you receive, or is it the
Money in your
to buy
account.
your positions out right now? It's the total amount of your account.
Yes.
Is what you're saying?
It's
Okay.
the theoretical mid-price, or it's the theoretical value of all the positions in your account as best we can tell. So it's the most accurate representation of a true theoretical value of your account. It's the actual value of everything you have.
On the top line of Tasty Trade is the first number just under, it says net lick.
Yep. But that's what it is. It's the actual value of everything.
Yep.
It has nothing to do with any projections or anything like that. It's just the theoretical mid price or the last price of every position you have on.
Okay, so if I am holding treasuries as collateral against the short puts and calls that I have, then the total account value, including those treasuries, would be the net lick?
100. If you're holding the treasuries with us, yes.
Okay, very good. Thank you, guys. Have a good weekend.
Sure.
You got it, man. Great question.
Yeah, sometimes people are holding things other places. We don't know anything that's being held anywhere else. But if you're holding with us, and just as a reminder, we do have treasuries on the platform now. So yes, everything's in there.
Yeah, all you have to do is go right here to this little box, click on the box, and go down to, well, you don't have to click on the box, just put your cursor over it, and then just go right to fixed income. And when you click on fixed income, you'll see it load up there for you momentarily.
Yeah, it's a little...
There you go. And then you can pick out what you want. Here's the durations of the time, is a maturity 4/15, a maturity a month later 5/15, and so on. So good stuff. Got a line or two open? Give us a buzz. 855-238-279 or 855-BE-TASTY. I think we're going to have Scott in about 15 minutes also, correct?
We are.
Should. Florida, John. John in Florida, what's up?
Hey, guys. It's John, Rising Star, Florida.
Hey, John. Good to hear from you, man. Everybody likes to hear from the Rising Stars.
How's it going, John?
Yeah, pretty good. Hey, I don't know about that matzah thing yesterday. I mean, I'm eating some matzah right now, so.
John, since you brought it up, hey team, do you have that picture from yesterday where we asked the audience? Because Tom mentioned, that's a big matzah ball, and I said it's a big meatball that nobody knows what a matzah ball is outside of Tom's small group of people. And here you go, Sadnov. I know it might be hard for you to read from that distance because you don't have glasses on, but it looks to be about 332 people voting. 55% said yes. 45% people said no. Do you know what a matzo ball is? 45% of the people you come across, Sadnov, do not know what a matzo ball is. What do you have to say for yourself?
I think I think that the 45% of the people that said they didn't know what a matzo ball is, we should have them executed.
And I'm not gonna lie, that's a good-looking matzo ball soup right there. I think matzo ball soup does not look like
John,
that.
you agree with me? We should just execute those who don't know what a matzo ball is. Is that right?
Sure, well, that's extreme, Tom. But
is it extreme? Is it really in 2025? Who hasn't had a matzo ball? I don't even like matzo balls. I'm just saying, who hasn't had a matzo ball in their life?
Well, now this study is about, do you know what a matzo ball is? I wonder how many people have had it.
Okay,
I had not known what it was, but they said I'm not going to do that again.
I mean,
exactly.
Here, I don't know, John. Where are you originally from? Are you from New York, or have you always been in Florida?
From Florida.
Okay. Well, I don't know if you remember this. How old are you?
55.
Okay. Perfect. Do you remember an old marketing campaign by Levi's Rye Bread? And it used to say, they used to have it up on like all the bus stops. They used to do television commercials on it. Said, you don't have to be Jewish to love Levi's Rye Bread. Do you remember that?
Yeah, I do.
Do you remember that campaign?
They might not have had the buses in.
Yeah, briefly. It was quite a long time ago.
Yeah, it was a long time ago. It was 50 years ago.
Yeah.
Yeah. You don't have to be Jewish to love Levi's Rye Bread.
That's great.
It really was a great campaign.
Mm-hmm.
And I don't know whatever happened to their rye bread, but you don't have to be Jewish to know what a matzo ball is.
Fair enough.
I'm not Italian. I know what a meatball is. I've had plenty of meatballs in my life.
John, I didn't mean to interrupt you and go on a tangent.
No, sorry, John.
What's your question, sir? You brought up a memory, though, so I appreciate it.
Interesting side note, when we went to Israel for 2 months, I did not have any matzo ball there. I thought we'd have the best in the world there, but none existed.
Oh, I'm sure
So,
those.
hey.
I'm sure those are all. That's all about the U.S.
So
I don't think I've ever had a meatball in Italy. Do they even have meatballs in Italy, or is it a U.S. thing?
I would say they do. For
You know,
sure.
that's true. I don't think I have
Because
meatball in
I
Italy
think
either.
that spaghetti and meatballs is a
It is
U.S.
American made, but I'm sure they have it.
I think it's an American
well,
thing.
just like Chinese food, not the same in China.
But yet they still call it Chinese food. What's up, John?
So, hey, you're just to give you some kudos. Your Tasty platform has really been working, staying up well with this high increased volume, being able to execute trades like hot knife through butter. That's really been good. Other than gold and bonds that have just been annihilating me.
Yeah, bonds continue
I
to
want
be
encourage-
soft.
I cannot believe
Yeah, I don't
they're
understand
about
the
to
bond
break.
move at all.
Yep.
I can't believe they're about to break 112 again. Shocked.
Yep.
Just want to keep everybody encouraged. You know, if you can make it through this time, you can handle the other 98% of the trading life.
Yeah.
And if you get emotional about it, just go out, take the day off. I've taken several days off lately. I don't care what the numbers are, what the account looks like. I just disappear, go for a walk, go exercise, come back the next day or two, and it's always going to be there to attack.
I love it. I love it.
Yeah.
Listen, there many times I've buried my my head in the sand from whether it be related to markets or anything else. But yeah, I'm with you. I'm with you.
So just waiting for volatility to stop being bid. I got a lot of open trades on at good prices, but really not making any money.
No, I feel the same
that's
way.
volatility expanding for you 100%.
So anyway, just wanted to say
Thanks,
hi,
John.
guys, and keep up the good work.
Thanks.
You got it, man. Good luck to you out there.
Yeah,
even the S&Ps actually just sold off a little bit here. So enough, they're down 33 after being up around 15 or so. Nasdaq
They've
down.
been two-sided, up or down 30. You know.
Yeah, but you got volatility now over 31, 31.30. It was always under
The
30.
/VX.
Yes, /VX futures are over 31. They've been under 30 this whole time. They're up near the high end of their range.
I just cannot believe the way volatility is exploding. It has to be based on what's happening in the bond market right now.
I think the bond market, I think the dollar, yeah, 100%.
Well, if you look at the bond market, it's literally back on its lows from the other night where I didn't think it was going to get through. This is the reason that Trump put a pause on everything was because where the bond market went to. And it's
one of the reasons I think the market.
Okay, well,
yeah, sure.
that's kind
multiple of reasons, but
generally
I
assumed.
I don't talk to him on a daily basis, sure.
But that's generally assumed. When you look at the dollar on the other side, yeah, the euro's up, 1,500 pips.
Off of its highs, but still up. I mean, you got a 3% move over 2 days in the euro. That's a yearly move.
Yep. But I really do think it's the bond market here that's scaring the children. And I think down 126 at 112 right here puts an incredible amount of pressure on the Fed, puts an incredible amount of pressure on the marketplace in general.
Yep. Yeah.
Because I think based on the tape action today, there are people that actually want to buy stocks. It looks like it, and it just looks like, okay, well, we want to buy stocks.
You're going to have to take the risk of the weekend, is what it looks like. Like, I don't know where we go. I mean, I think we're going to be wrapped around unchanged. 50 handles one way or the other, I think, is basically unchanged
but
in
there's
this
just
market.
too much. The vol expansion is just crazy.
With vol expansion, you're going to have to take the risk of the weekend. I'm reminded by my friend Pasquale, and he's 100% correct. Polpette, which is a meatball in Italy. It's not quite as round as like we make them in the States here, but they just kind of like this, and they kind of throw them in the fry. They're called polpettes, and he's right.
Never had one. I'll let you know this summer.
Oh my God. You really are.
I'm going to let you know this summer.
You are so
I'm going to give you
You are so obnoxious.
I'm going to give you my full Italian breakdown.
You are.
And I'm going to be hanging out with Italians, like real Italians, not like you.
Shit, like Dylan?
No, not like
you
Dylan.
You really are so
like Dylan's
obnoxious.
friends. And they're real Italians. And
They're friends with Dylan. So there might be real Italians, but they're not real.
Well, they
might be bots in the head, as they say.
Here's my deal. If they speak Italian, then they're Italians. And I'm going to let you know what the food selection, how it comes back. I'll be real. Going
to go to the Ukraine. I got Dave. Dave in the Ukraine. What's up, Dave?
Hey guys, how you doing?
Doing good, man. Doing good. How are you doing, man? Are you in the Ukraine right now?
Yeah, I'm still here, still alive. Western Ukraine, so we're still safe for now. But old King Kong, Don, is making everybody nervous here.
I bet. I'm sure they are. But hang in there, brother. Hang in there.
Anyways, I'm calling in to let you know that I'm actually doing very well through this turmoil. And basically, when the Trump 2.0 started, I put myself in almost all cash. I'm 80% cash. At 20%, I used to trade. And I'm doing incredible because I switched to futures and I just trade oil. And the other day, Don the Con gave me a gift. I had taken a position in oil at 55, and I went to make dinner for my daughter, and before I could sit back at the computer, I was up $5.
Nice, man.
That was a nice rally
I
there.
took it and I trade. Well, one thing, futures where I live is 18 hours a day. So sometimes I start, and before I take my daughter to school, I pop off a couple trades, and I don't, I've become real proficient in futures and oil, and I'm looking forward to oil going down into the 50s, 40s, because that's the only thing that's going to get Russia's attention. But anyways, I just want to let you guys know that through this carnage, I've been doing great. And I've been listening. I listen to you guys when I trade futures because it kills the time when I wait for my timing.
Love it.
However, today,
Love it, man. Anyway,
I love listening to everybody calling in, and I've got what I'd call my top 3 quotes of callers. Okay. I got greedy, kicked me in the butt. Number 2, what could go wrong? And number 3, how would you go about it?
Yeah.
There you go.
Nice.
What could go wrong?
All right, guys, I'm alive, doing well, raising my daughter here in the Ukraine. It's been tough. It's really been tough, and I'm really angry over Donald Trump, especially after what we saw when Zelensky came to the White House. And it just makes me sick.
You got it, man.
Take care of yourself.
Take care of yourself is right.
Dave,
That's the most
take care of
important
yourself.
thing.
All right,
Be
well,
safe.
carry on. I love you guys. And if I get to Chicago, back to Chicago, I'm going to come for a visit.
Beautiful.
Yep.
Can't wait to see you.
Beautiful, man. Buy you lunch.
All righty.
Thanks, man. Appreciate it.
Sounds great.
Yeah.
I want to be one of the rising stars. I want to show you my futures trading.
Sounds good to me. I'd love to do that. From your mouth to whoever's listening, we'd love to have it.
All right.
If anybody,
I'm working on it.
Good.
Thanks,
Okay.
Dave. Take care,
Bye-bye,
man.
guys.
Yeah.
By the way, we do have a Rising Star email address. It's risingstars@tastylive.com. And if you think you're a rising star, they'll vet you. It's risingstars@tastylive.com. We need some rising stars right now. We need a rising star.
But that's very encouraging for the audience because it's them. You know what I mean? It's them.
Dave's been around. By the way, he used to call in before the war even broke out.
Oh, yeah.
And
Years.
I remember when the first kind of Russian tanks rolled in, he called into the show.
Mm-hmm.
And I was like, I'm like, he was, anybody living in Ukraine, they are tough.
Yep. No
Don't
doubt.
Don't mess with Ukrainians.
Nope.
Because they are one tough people.
Yep.
And I give them a hell of a lot of credit.
Let's take a quick 90-second break. We will come back. Steve, I see you on the line. I got 2 or 3 lines open. I'd love to hear from you. Otherwise, we'll just hear from Scott, 855-238-2789 or 855-BE-TASTY. Steve, I'm sorry. Let's just take a quick 90-second break. I'll introduce Scott. I'll go right to your phone call, and then we'll go back to Scott. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P down 39. Volatility up $1.07. Talking about /VX at 31. We're back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. I'd started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Tomas, man, you are not happy unless you're unhappy, but all of that means nothing right now.
I need to say this because...
Well, you can say it with Scott on. My man, Mr. Scott Sheridan from the Scott Sheridan Studios, Tasty Trade World Headquarters. Mr. Scott Sheridan, how are you, kind sir?
Oh my God! Does anything scream America more than our shirts right now? We're red,
That's
white, and
right,
blue.
America, red, white, and blue, baby, red, white, and blue. Never fade them.
And that was not planned. Let's start a USA chant. Come on, USA, USA. All right,
USA. Come on,
USA, USA. Okay, never mind. So tell me. See, I love a lot of things about you, but the one that I really love is somehow Pat's being disappointing is going to be my fault. Okay.
I didn't say it's your fault.
You did.
Nothing to do.
You did.
I just want to go on
Nothing to
record
do
as
with
saying
your-
I was so excited for Pat's pizza because I haven't had it in like 20 years. And now I
doesn't
realize,
travel. It's a tough
now I
one.
remember why I haven't had it for 20 years. It was so average.
Average, yeah, average. Okay.
Average bad.
Wait a minute.
First of all, time out.
wait,
In
wait.
Scott's
It's a
defense for making a lousy Pat's pizza. In Scott's defense for making a lousy Pat's pizza, all pizza delivered is going to be.
That's not the problem. You remember when it was cracker thin? Do you remember when it was like paper?
It's a little bit thicker. They're making
You
100.
weren't here. You don't
I was
know.
here. I had a piece when it came out fresh, as hot as it could be, because I was the first person in line. I was walking as the guy came. I said, "Excuse me, sir." I opened up the box. I got a piece. I got a piece of cheese.
You are
I
not
don't think you
first
did.
in
I
line
think
ever.
this is a made-up story.
Hand to whoever listened. Actually, Tori saw it. I got a piece of
want
pizza. I
verification.
said, "Thank you very much. It's good." It was a little bit salty. They put a lot of Parmesan cheese on it, so it was a little bit salty.
Thick,
It was
too.
a little bit thicker, and that's because they're making 100 pizzas for 10 o'clock in the morning.
No.
The guy doesn't care. He's just rolling it out, throwing it in the
It used to
oven.
be paper thin. It was delicious.
Paper thin.
Yeah,
That's
it's
really
not the same.
disappointing.
Sorry.
But
Don't
wait a minute.
defend
Did
them.
she order
I'll give
from
you
the one on
defend
South?
just because it's a.
I'm not defending it.
It sounds like you are.
I'm not defending
I
it.
think she ordered from the one on South State as opposed to Lincoln. There's your problem.
Got it. You got to get rid
You
of
got to
it.
go to the one on Lincoln. You got to go to the one on Lincoln.
You got to
It's still
fire
really
Tori.
good.
Well, that's on Tori, right?
You got to fire her.
She got to go. Kid's got to go.
You want
I
me to
like
do it,
you. A nice
Tori?
kid. You did a bad
You want me to
thing.
do
I
it
know.
today? Because I like her, but I mean, I'll just tell her that you said she's got to go.
I like her. She's been around a long time.
she's
Sweet,
there,
sweet,
yeah.
sweet young lady. Wonderful person. Gotta go.
You want me to do it today? It's Friday.
No.
Yeah, why
I
don't you do that right before Easter? Why don't you let her go?
It's
Smart.
Friday. You won't even notice.
All right, but I'm happy to know that
We'll
you're
call
not
the herd.
happy unless you're unhappy.
Anybody here? It's a
Unless
Friday. You
you're
want me to get rid of
unhappy,
anybody
you're
else here?
Yeah,
Yeah,
who
get rid
else?
of people here on a Friday. Why don't you do that? That's a smart thing to do.
What's for lunch today, more importantly?
Diego's
Scott.
burritos.
Who's burritos?
Diego's.
Carmen
Oof.
Diego.
Wait a minute. The one on Ogden?
Yeah.
Oof, you're going to need a nap after that one. It's like, oh, yeah. If I remember correctly, they just throw out potatoes and just stuff. Like
Oh, I don't
everything.
like potatoes in my burrito.
Oh,
You don't like when
Tori,
your
I hope
potatoes
Tori's
touch your meat?
I don't like potatoes in my burrito. I don't like
Yeah, I
certain
think-
things. I like a steak burrito.
Like, I'm
that-
not a rice person. Yeah, I don't like rice. in a
Yeah, I'm not a
burrito, so I
rice
get it.
person either.
I could deal with potato, but more for a breakfast burrito, like the California breakfast burrito. That's go potatoes.
You know what? The last 2 times I was in California and had a breakfast burrito, I was grossly disappointed.
Don't say you're.
You're not happy unless you are unhappy, and these are the
Okay, but wait a
happiest
minute.
times for you.
But I'm going to tell you something.
I have to think.
I got a place that makes a breakfast burrito. It's one of the best I've ever had. And I cannot
Here?
believe I didn't
Chicago?
know about this. What?
In Chicago?
The 24-hour diner on Irving Park makes one of the best burritos I've ever had.
Wait a minute. Literally, the diner, the White Sign Diner.
Yes.
Okay. People go there, just so people are aware. It's probably has its busiest crowd at like 3 or 4 in the morning.
Yeah.
Okay. From when people are out. Yeah. From when people are out. It's that kind of place. For people, it's the only place open.
I
They're
think
coming from bars,
it's the
they
best
need-
breakfast burrito I've had in Chicago. I'm just telling you.
I mean, you make breakfast burrito like it's a culinary,
Here, wait a minute.
delight.
Wait, one question. Wait, just one question, because this is going to answer everything I need to know. Is that they have great hot sauce? Because that's where you normally go. You don't care what's in it, just as long as the hot sauce is amazing.
Here's the crazy thing. They don't have
Here
hot
it comes.
sauce.
Wait a minute, you're eating a burrito without hot sauce? What's wrong with you?
I know. It's delicious.
What's in it? Sausage, egg,
whatever you
cheese.
want. Whatever you want. They just do a great job.
Well, what did you get?
They have it they have like something on the menu. It's got like everything in it. Yeah.
You seriously, you could be a food critic. Yeah, it's great. It's just got everything in it. Just go get it. It's awesome.
I realized when as soon as I told you that it's great, that you're probably going to ruin it by like going there and and then critiquing it. It was kind of my own place. It's in my neighborhood. I shouldn't have even said anything.
That was Max's old hangout. Like he would go there all the time. They knew whatever he walked in, whatever he eats, chicken tenders. I gotta go. All right, I'm gonna go. Next time I'm up north, I'm going in for a burrito. I'll report back. Tony, if you want to meet me, I'm happy to have you come. All right, what are we doing? You want me to go to the list? You want to take calls?
No, we're taking calls.
Yeah, let's take phone calls. We're going to go to Oregon. Steve, you've been very gracious with your time. I appreciate it. Steve in Oregon, what's up?
Hello, guys. Can you hear me?
Sure.
Yeah.
I just learned a little bit about Tom, that he's the kind of guy that likes a very dry burrito, and it's a little alarming. I have a relatively small account, a little bit of defined risk, and I had a strangle on in the micro futures, ES futures. And as it was penetrating my foot, I was thinking about rolling down that call. And my question to you is, when you're bringing that call down, you're rolling it down, what sort of a credit are you looking for as a percentage of the width of the move?
Ooh, that's a tough one.
When is the juice worth the squeeze?
Yeah, that's a tough one because the micros are hard because it's only 1/10 the size. The easiest.
It should be relatively similar, right? Like the number is smaller.
Yeah, and it's just a strangle, right?
Just a strangle. I already moved it, but I just want to see what your thoughts are on, because you have a rule of thumb if you're doing an iron condor, like 1/3 the width of the strike.
No, you're never going to get 1/3 the width of strikes when you're rolling down an iron condor. You're probably going to get 10 to 20% of the width of the strikes max if you're rolling down an iron condor. If you're doing it on a straight strangle, it can be so varied depending on how big the market move is. But I would say the minimum you want to do on a micro, would be let's see, a micro, because I'm just thinking about this. The minimum would probably be 25 cents ish, and the max you're probably going to get is a couple bucks. Depends on how wide it is.
Got it.
But if you're doing an iron condor, it's 10 to 20% of the width of the strike. So if it's a $5 wide iron condor, you're lucky to get 50 cents to a buck max.
I was thinking more about when you put on the iron condor, like you have target credit.
You're targeting around anywhere between 35 and 40%. So if it's $5 wide, 40% would be $2, but anywhere over $1.67 would be fine.
So on your strangle, when you're rolling down a call, you have a target of, is it also like 20%?
It's harder to say because Tony will roll down a strangle and he will go to a certain level of delta. I will roll down a strangle and I'll go to a certain price. So let's just say, for example, my put is $10 and my call is $2 because now it's time to roll. Or my call is $3. Now it's time to roll. So I'll take my call and move it all the way down to like $8 or $9. Tony might only go to $6 or $7. We're a little bit different in the way we think about the roll downs. I'm a little more aggressive, but when you in that situation, it could be as much as $3 or $4. I don't really know. It really just depends on how big a move we've had in the market. Like I rolled something down. I rolled a trade down this morning in gold. I rolled puts up in gold this morning, and I moved them $40. Like that's how much gold's moved.
Yeah.
And what was your credit on that?
What was the strangle? Oh, what was the credit?
No. What was the credit?
I can tell you.
Did you assumed like those $40 of risk are now on your
credit
plate?
was like I did it a couple different times. One credit was $8. One credit was $10.50.
Okay. That's like pushing 25%.
Yeah. Yep.
Awesome. Hey, appreciate it. Thank you guys.
You got it. You got it. Welcome.
Thanks.
Welcome.
And that's such a in a defined risk trade, it's easier to answer. In an undefined risk trade, it's pretty hard.
Right. So, I mean, things are getting back to normal because you got to remember a dry burrito is hard to penetrate, but if you squeeze it, then you can penetrate it a little bit easier. Am I right, Scott? And don't answer. Don't answer. You did good, Scott. You did really good. We're gonna go to Israel. I got Otto in Israel. Ado, I'm so sorry.
Yes. Hi.
Hello.
How are you?
Doing well, sir. Thank you for
calling.
calling.
Ado, how are you?
I was really not planning on calling. I'm very shy and I'm not used to talking like that globally. But all the talk about matzo balls and everything, I said I have to call you guys. I'm a big fan.
Thank you.
Tom, I have a birthday same day as you, 6th of March.
You agree with me that if somebody doesn't know what a matzo ball is, we should just have them put down, right? Like,
well, then Otto and Tom, you guys are both going to be very disappointed to see this next slide. If we could put it up just very quickly, we'll get right to your phone call. Otto, stay with me. We did a little poll here. Have you ever eaten matzo ball soup? 339 people voted very quickly. 65% no, 33% yes. Otto, say what you want. The numbers speak volumes. That's all I can say.
I am hard to believe. That is so disappointing. And anybody that has not had matzo ball soup needs to go get it. Go to your local deli, get some matzo ball soup.
I want to put up a slide there that says...
No, you're not, because everybody hates you in production. We're going to get nothing. I can get another one made up right now. Let's do a quick survey. How many people in production dislike Tom Sosnoff daily?
I used to say that my favorite soup was Italian wedding soup, but I'm done with that now.
You're back to matzo ball. Now you don't like matzo ball soup.
I'm okay with it. It's not my favorite.
Who cares what you like? Let's go back to Otto. Otto, I'm so sorry. Otto, what's up, my man? You had a question.
I'm part of the 66%, by the way. I'm sorry to say. I'm not proud of it.
Not what?
You've never had matzo ball soup?
I'm part of the 66%. Yeah, I never had it.
I agree with you. It's nothing special.
How could you never have had matzo ball soup? What's wrong with you, Otto?
I don't know. It's not that popular here. Maybe among Jews.
He's one of the 65%. He's right inside the standard deviation.
It's got to be an American thing, I'm sure.
Matzo ball soup?
Probably.
Yeah.
So there's very few matzo balls in Israel, just like there's very few meatballs in Italy.
There's no meatballs in Italy.
Yeah, they are. In southern Italy, there's meatballs, and they're called papettes. But
when are you guys coming to visit?
We will
have one together.
We are not coming to Israel anytime soon. We will be in Milan. The closest we'll be is Milan this summer. We'll be in London and Milan. There's two cities.
But we have pizza here also.
I heard it's pretty good too.
I'm coming then.
Yeah, okay. Just tell me when. So I just wanted to say that I really enjoyed the show, and it would be nice if you would talk a little bit about gamma scalping. That's the way I trade. I use 0 DTEs. I only trade SPY and ES, sometimes MES, and I think it's a real great way to trade. I developed for myself a strategy that suits me very well, and it's a really interesting topic. If you have a chance to talk about it sometime, it'd be amazing.
We used to talk about gamma scalping a little bit. We haven't in probably a couple of years. I'll ask the research team to put it on our, to draw up some slides, because we have a really good talk on gamma scalping. We just haven't done it in a while, right?
Mm-hmm.
So, all right, Otto, you got it. We will do a piece on gamma scalping.
Okay, sounds good. So it's really nice listening to you guys. I mean, trading is a little bit you feel alone sometimes, especially here because it's evening times. So it's good to have you all on the TV, feeling like great company and people who really talk business.
Thanks so much, man. Thank you.
Appreciate it. We're going to go to Pittsburgh. Going to go to Juan. Juan in Pittsburgh. What's up?
The one and only.
The one and only.
Hey, yes, that's it. And you know what? Probably in Pittsburgh, I am probably the only one and only.
Lot of chatter.
One in a million, too.
A lot of chatter about Pittsburgh on sports radio stations. If I have to listen to one more talk about Aaron Rodgers and the Steelers, I think I'm going to burn my radio.
That's where he went?
No, he hasn't signed anywhere yet.
Yeah, no, he hasn't signed. We don't really care. I mean, most of us don't care. If you ask most Pittsburghers, they're like, hey, the hell with him. We're Pittsburgh. We don't really need him. He needs us. That's the attitude in general. But
I like it.
I'd be happy to have him.
Yeah,
it's the attitude I have here with Sosnoff.
All right, Juan, how can we help you?
A couple of things. First, I've never had matzo ball soup, but I do know what it is.
Perfect.
And I grew up near Miami Beach, so I had a lot of friends who had
a lot of opportunities, but you never dipped into the Jewish matzo ball soup. Got it.
No,
I, on the opposite, had a lot of opportunities and dipped into the soup quite a few times back in the day. So, to each their own.
I dabbled.
Yep, got it.
The other thing is that I really like is every time Scott comes on, I love it because I know that everything's right with the world when he says, more importantly. That's his favorite catchphrase. And honestly, it's got to be a Tasty Trade T-shirt. More importantly, I
agree with you. More importantly, it's going to have to be a T-shirt. We're going to get one of those made for sure.
You know what?
It's a good one. It's a good one.
It's a good one.
It's a good one.
On a more serious note, not too serious, but I'm going to be traveling here in a little bit and out of the country, and then my wife does not want me to take my computer with me, which is going to be difficult not to do.
You got to get rid of the wife. There's only one. Get rid of the wife.
Get rid of her.
I mean, they're like buses. There's one on every corner. You just got to get rid of her. That's it. That's your answer. You don't want to get rid of all your positions. You got to get rid of her.
Nobody can tell me not to take my computer. That's 100% fact.
Well, it doesn't mean that I won't take it. It's been suggested that I not take it, but I will take it. But I know I probably won't do any dabbling in the on the system unless I'm really forced to. So the question was, where would be I'll take everything off of my trades and I just want to put something in a spot to park it. And you guys had mentioned before SGov and now with the T-bills in place. And if you're out for like a couple of weeks and I just want to have something parked, what would be a suggestion?
You could park it in SGov or BIL. That's the easiest thing. It's transaction free.
Right, it means it costs you nothing to buy it, costs you nothing to sell it.
I wouldn't do the T-bills because if you're gonna bang it back out when you get back, you don't want to deal with selling a T-bill. You'll give up a little edge. I would just do it with the SGov, and they're on their butt right now. So
they're paying. I don't know. They're paying around 4%, a little bit more.
A little bit more. Yeah. Mm-hmm. Rates went up about 40 basis points this week. So yeah. Is
that good?
Juan,
did your wife get rid of you?
I
think another good one bites the dust.
I think we lost the one and only.
Thank you, Juan. Appreciate it.
I really liked the one and only. It's a great call thing. Yeah.
We're gonna go to Austin, Texas. Andrew, you'll be our last call. Andrew, what's up, my man?
Hey, y'all. I had a quick question. Normally, we would sell maybe SPY or QQQ strangles here since the VIX is so high. Yep. But there's huge upside risk because Trump could just tweet that he's going to start negotiating with China, and the indexes can moon 7 or 8%. So should we just consider selling the puts here?
That's a great question. Or you could Jay Lizard it. You could sell the put if you want to. If you're nervous about that, you could sell the put and a call spread instead.
Yeah.
I agree that there's a new element of risk, Andrew, that we haven't had before, which is the tweet risk. And if you think about it, the tweet risk is not going to
be the downside.
I don't think it's going to be the downside, right?
I mean,
but
he might make bad decisions for the market, but he's not going to tweet. It's time to close all watertight doors. I mean, he's not going to tweet that.
So I kind of like the Jade Lizard a little bit better because it gives you a little protection. So if you want to sell the put and a call spread,
or please give my. You have given it no props. I've mentioned it at nauseam about 50 times. Buy call, sell put, buy put below. Does give you about 75-ish long deltas, which is like a naked put, giving you no upside risk. No upside, they can go up 1-to-1 basically to the upside at some point above. Give it a little bit of props.
Andrew, I like the Jade Lizard here.
Great. One thing, just huge thank you to Scott and the trade desk for your help and patience.
You got it.
I know whenever I always email you, Scott, you tell me to restart the application for the 10th time, and you stayed patient. So just thank you.
Thank you. Poor man's covered call is another way to do it. Classic way of doing it. Diagonal spreads, synthetic poor man's covered call that way too, a little bit smaller. So there are many ways you can do exactly what you want to do.
Let's all pass the close.
Sorry, Andrew. Thank you very much for your time.
Thanks.
You got it. Scott?
Thanks, Andrew.
We have your list if you'd like to go through it.
I'm happy to.
Even the S&Ps are down 7. Now they're down 1, Sadnov. That's how quickly they move.
Now they're up 6.
No.
I just have to repeat this now because I now have confirmed Tom doesn't pay attention. Remember, there's no broad-based indices
What just happened to silver?
All right.
Silver just exploded. It's up 4%. Sorry, Scott.
Gold's up 69 to 32.46.
I know, but silver was. It's just weird.
It was up the same as gold. Now it's up twice as much as gold. You're very happy about that, aren't you?
Flight to quality.
Sorry, Scott.
Your important list just we got sidetracked.
We could skip the list.
You became Juan.
Let's explain. Why don't you explain what this list is first, so people know what you're reading?
Okay. I've tried to explain this. It's the top 15 symbols going through the system first 40 minutes a day, no broad-based indices or futures. Do I still have you guys?
Yes, we hear you.
Yeah. Number 15 for Tom. AVGO to 76. The reason I say number 15 is because you never pay attention anyway, so let's get to the 15th. Tesla to 73, NVIDIA to 66, GLD to 115, JP Morgan is 68, TLT at a 117. TQQQ at an 86, IBIT at a 79, AMD at a 79, Apple at a 79, MSTR at a 36, Meta at an 82, Amazon at an 82, SQQQ at a 94, PLTR at an 85, and number 15 for Tom AVGO at a 76, rounding out the next 10, Intel at a 102, SOXL to 72, NEM at a 73, SLV at a 93, GDX at a 91, Netflix at a 77, Microsoft at a 73, Google with an L at a 74, and Hood at a 76.
Sadnov, what do you have to say about that?
I deserve a raise.
For any particular reason?
Yes.
Just having to put up with you, Tony.
And I'm a little disappointed in Scott, if I can be, Scott.
Oh my God.
You comment from time to time when I come in more than my normal, usual, infrequent amount of days into the office. And I've been here bell to bell for the last 9 days in a row, and when
okay, first of all, I'm a seller of that.
Morning to morning,
the
last 9 days in a row, when Scott is on, as far as he's concerned, it's bell to bell, and you've said absolutely nothing about it.
Tony,
Scott, what do you think we should do with people that don't know what a matzo ball is?
That are from Israel.
I'm actually shocked that 2/3 of the people have never had matzo ball soup. It's so good. I mean, listen, if you're sick, what's better than matzo ball soup? Chicken soup. Okay,
I mean, all things being equal, those numbers may have been Fox Newsworthy. Okay. I will say it that way.
Can we run another survey?
2 seconds ago, they're down 20. Now they're up 20.
Now
they are legit. When I first started talking my sentence, they were down 20, and now they are up 7 or 8. Yes.
Crazy.
It is crazy.
Can we do another survey? How about just chicken noodle soup? Okay, if you haven't had chicken noodle soup,
Everybody's
get
the survey
matzo
just came in. 340 people have responded. Everybody's heard of chicken noodle soup, you big dummy. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. Starting off with what do we got coming up? That's right, Liz and Jenny, my man. You got it right again. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Oh, yeah. Tasty Nation, good morning.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews, and you made it to Friday, Jenny.
We made it to Friday. You're looking very pretty in pink today, Liz.
Thank you.
We made it through the week, and VIX is still high, 45.86.
45.86.
I see it, but the viewers don't. That's what I'm seeing on my screen right now. The platform. But this is the market's down 26. Let's take a look. Market's down 26. You've got the VIX pulled up.
Yeah, so VIX has kept its wings up. This is what I want to talk about. This morning, it was bonkers to me, Jenny, bonkers. And I think the VIX is the leading indicator, not the lagging indicator. I woke up this morning, SPOOs were up, and VIX was up. SPOOs were up like 25, and VIX was up more than you would see that way. So it was kind of crazy.
I know. It is. It's been now a while that we've had an elevated VIX. Let's pull up the VIX chart. See how many days we've had up here.
1, 2, 3, all these. So you got to go 1, 2, 3, 4, 5, 6, almost a week.
Do me a favor. Click the settings. Click the little gear next to the candlesticks on the top. Click the little gear next to the candlesticks. Yes, click that, and then on chart, then click on chart. I want to see.
This doesn't look right. It's usually over here too. Do you know what I'm saying? This isn't how my platform normally looks.
I want to see. All right, go back to layout. I don't know why we can't get right margin. See where it says right margin, check, add days to it. Second thing down, right margin, add some days. Just keep adding days, and the more days at least that way we can at least see what's going on.
Yeah, that was interesting because I logged out and logged on. This is usually what we see, and usually my gears are over here. But yeah, I mean you can see it's the same thing. We just added a little bit of a buffer, so it's still the same thing.
It's hard to see it when it's like butt up against the end.
So we've had an elevated VIX since 4/3 is the last day where it was under 30, which was April 3rd. It is now April 11th. So legitimately, when I go on vacation, the VIX spikes. I thought when you went on vacation, this was bad.
No, You're like, you're not going to believe what happened. And usually we don't.
Because I left, Jenny, I left here.
Okay, and before that, we were going through research studies talking about when VIX spikes, maybe it lasts about 21 days, and we're like, yeah, we're just about at that 21-day mark, time for vol to come in and things to settle down.
Well, I thought this was where we were adding 21 days. Oh, yeah, it's going to be fine. Nope. Well, here we are. We're so if it spiked on the 3rd and it's the 11th, we've got, buckle up, you've got about 10 more days left.
Who knows, but usually it doesn't stay this elevated for too long.
No, it doesn't. This is elevated. But nonetheless, okay, we are traders. We like to keep an eye on the volatility. I think it's a leading instead of a lagging. Personally, I think that's pretty true. We're up 11%. VIX is at 45. I want to see where 45. BX is because some people look at this. They're two sides of the same coin. One is the volatility futures. One is the VIX. Here, you'll see pretty similar in here, except I think the VIX gets higher than the VIX futures.
So what will the day bring? The brave people. There are brave people out there, selling those 0 DTEs, hoping for an inside day. And when I say inside day, it's inside a pretty wide range. What is the daily move today from now until the end of the day?
So I'm telling you, we were looking at, and we'll go to Twitter in a second too, but the inside move for the day, let's go here. Your day move is up 92, down, up 94, down 94.
Yeah.
And it's bouncing around. So yeah, it is what it is. Now we have a very, very, very jam-packed show for you today. It is Friday. We want to give a big shout out to Kai. He has done an amazing job where he concisely packs all the research that has been done this week into a short little nugget for Jenny and I to digest.
And honestly, for some of this, it might be the first time people are seeing it because the boys took phone calls all week. So they weren't doing the regular programs.
Yes, I know.
So we have some of the studies that the research team did, and I don't know if the boys got to any of them.
Okay. Once again, I glanced at the chat. Organic farming, I know exactly what's going to come next, but I can't say it out loud, but that was the funniest thing I've ever seen in my entire life. So it was a skit that someone got fired for doing live on air, Jenny. And I just can't even believe that he is going through this because I say that stuff all the time and I cannot say it live on air. But organic farming, now I have to close the chat because otherwise I'll watch it the rest of the show. Okay. So it is true. Let's take a look at this. The SPX. So if you're going to go, we did, but Jenny, so I will say, we did it.
I said the brave people are back in selling 0 DTE strangles, iron condors, whatever.
Would you call me brave? I did it yesterday and I sweated it. I did it yesterday, sweated it out, and then I was like, whatever, and just walked away. And so I didn't even have a GTC in, so I made full profit.
Well, that's good that you just left it and it came back. I kind of hate that I'm in the middle of this dance competition because I'm not able to be here all day long and I feel like I'm missing out. I love when I can just hunker down with a cup of coffee and my laptop and sit and trade all afternoon. I'll be at a dance competition. I'm a little bit unhappy about that.
I know. It's so funny because my job is until 3:00. I think these markets, and Tim Knight said it the best yesterday. He's like, trading up until this point has been, you can trade and walk away. You can put on positions, trade for an hour a day. Not in these markets. I mean, my poor dog had to go outside. So I walked him around the block. I was gone for 20 minutes. You come back and you're trading in a different environment.
And normally he gets a 3-mile walk. Today he gets 1 block.
I walked to the front and back, but I did it 3 times. But every time you would do it, it was crazy. You can't leave in these markets because everything is changing. Now, that's for active scalpers and things like that. But I still want to know what's happening because it turns on a dime these days.
And yesterday I was ferociously trying to get some positions on when Tom and Tony were on, and I kept trying to put them in and it was like order rejected. And I looked, I'm like, oh geez, it's 3:01. I was losing track of time, trying to get things in.
You're like my son. He's like, Mom, it's not working. You're going to have to call your team at Tasty. I was like, it's 3:14. It's 3:14. Okay, let's pop in. Now, I know we want to go over what Kai's going on. I just wanted to talk about, because you were saying the brave people that are doing this. Jack Tucker did it yesterday, and he's saying, let's do it again, 0 DTE SPX. And he's big by big. He's still sticking with his $25 wide way outside the market. So his shorts are the 51.40, 54.40. So he's $300 wide, and 51.35, 54.45. And he's, kind of layering them in. It's pretty good.
And $300 wide. That's crazy, right? It's crazy. Yeah. So I hopefully, I'm hoping for a little bit of things to settle down and vol to come in and things to stabilize a little bit. So Jack, I hope it works out for you today. And he's back to 25.25. Earlier this week, I know his call spread was a little narrower. He had the wider put spread and narrower call spread.
Yeah, but he's back. And honestly, it almost took, like I said, I was sweating yesterday, and I'm no Jack Tucker, but I was sweating the Iron Condor yesterday, but it wound up being okay. No, last margin call, they were asking about a crab trade yesterday in JP Morgan.
Oh, the JP Morgan. He said he made $100 on it. So, and I thought of him this morning when they said, oh, JP Morgan's down $2. And I thought, oh, he'll make a little bit of money on his diagonal.
Oh,
and
no.
Hopefully you got out.
He had the crab, and it was up this morning. JP Morgan was always up, wasn't it?
No, it was down $2. At the time I saw it, it was down $2, and I thought, oh, he'll make a little bit of money on his trade because I knew he had a bearish trade. But now it's up. It's been in a tight-ish range from down $2 to now up $4. So hopefully he got out of that.
So yeah, that's good. I'm glad. I like when people give us the follow-up, right?
Right. I'm glad that worked.
And then
honestly, like either direction would have worked because it didn't. We were talking about how if it would go too far, you wouldn't make any money on it. But either direction in a small movement, that's good. He got the vol. He got all the vol sucked out of the today's options.
out of today's, but here's what I was going to say. This is what I think is fascinating about earnings now. Usually if you see a non-move, basically 1%, this is a non-move, and inside of its expected move, and to your point, it was down a little bit this morning. And so when things have earnings, I usually don't expect to see a 70 rank 2 hours after their earnings announcement with a non-movement.
Right. So the nice thing is it's losing, today's going to decay super rapidly because it's going to expire today, but next week is the vol's still blown up next week. So you don't have any decay in the vol. You don't have any decrease in vol in your long.
No, you really don't, which is kind of which is probably why you can make money on those.
Right. It's helping.
Yeah, that is helping. I'm going to pop back into Twitter, and then let's go to Kai's study, because I want to make sure we give this, because there's three.
A lot to it. There's a lot to it.
There's a lot to it. Okay, so we got to everybody. Frank the Great, we love you. Thank you for coming in with our economic indicators. And what I love is Jack Tucker always shows us what he does, too. And he showed us exactly what he did. So if people want to go back and review that, they can. He's always a great trader and somebody good to follow. Okay, one more. We have these two, and then we'll go into Kai's, okay?
Okay, Punish Pixels. Good morning, ladies. Aren't GC and ZB supposed to be relatively calmer products? IV expansions are killing my strangles. So, yeah, both.
Well, GC, really, we'll tell you, GC, the implied volatility gets high. The pendulum in gold swings in both directions. So if it goes up, it's the exact opposite of what you usually see. Up moves will give you a higher implied volatility rank.
And gold, if you go to the chart in gold, it's just really on a tear.
And people laughed when I said I'm a perma gold bull. I said I was a perma gold bull years ago.
Okay, click on that, in October, right before November, when it was so high. So you should go on the chart there. Yeah, a little bit further where it was at the peak. I'm pretty sure that's the day my hairdresser asked me if she should get long gold. I'm like, if you really want to
no, and I was like, tell her to buy gold. Buy gold.
Now I'm afraid to go over there.
It's pretty funny. And so that same thing, the bonds were crazy yesterday. Here's where, honestly, I say all the time, the markets are like toddlers. This is unlike anything I'm used to seeing. But however, take a look at this, Jenny. Act like we've been here before. It's very similar.
I know.
A little bit steeper, but it's not that crazy. So we're down back. The low here was 110 something. We're in 111.30.
What's TLT down to? And I know we were looking at TLT the other day of maybe putting in a zebra. I don't know what we did. If we did put in a jade lizard.
We put in a put and then bought it back the next day.
Let's get back.
I'll take you a walk down memory lane just so you are very versed in this TLT. Let's go. I'm just going to go 7 days. Watch. So we sold a put, the 81 put, and we bought it back for 50. That same during the move.
Okay, let's get back into TLT and maybe we do something different. Maybe we do. What do we want to do in TLT?
So it's interesting. The hard part for us is if you're going to look at TLT, or maybe you get a little bit more aggressive. What we did here was sell. Well, I'm going to see what put it was. Hold on.
It was the 81.
81. Here you can sell the 78 for $1.
So we bought the 81 put back a couple days ago for 50 cents. Now it's $1.60. So I don't know what we want to do in TLT, if we want to get back in with puts or if we want to do something different.
I don't know. So like I said, the zebra would have been, we were talking about this. The puts used $1,000.
Right. And the zebra was 800. The zebra was 800.
The zebra was 800. And the zebra was 800. So I know our rules are, but Jenny, we've been trading in such a weird environment. And our rules are when you see such a high IVR to then be selling premium. But I do remember the study, and I wish I could find it. When we go in on Tuesday, I'm going to talk to the researchers, because it was a researcher who shall not be named who said when the volatility gets so high, it's better to buy than it is to sell. Because it's so comically high that the risk, it's not your normal like high implied volatility, risk changes your risk reward of that nature.
So let's throw in a zebra. If, like you said, if we used $1,000 on the put and the zebra was 800, let's just throw it in, because if we sell that put for $1.50, we'll make 70. We'll take it off for 50%, make $75. If we put on the zebra and then the TLT pops up $3, we'll make $300.
I know, and it's so funny. It's easy to the downside to say this because take a look at this. If we were looking at gold, I wouldn't put a zebra on with your money, right? But because gold's at the top of its range, but something that's down here at a price extreme, that's almost a price extreme. Take a look at this though, Jenny. I mean, we were, 2024, we're in the 80s. This is not unforeseen territory.
No, but.
So all we're doing is
everything's been moving around so much. Liz and I were talking about this before the show. You can be putting on trades in both directions and getting in and out in a day. Everything's moving so much.
Okay, I just want to do some quick comparison, and this is probably the anti-tasty trade. So just everybody bear with me. So if we're going to put a zebra on in the 35-day, it's going to be expensive, but we can narrow it to make it cheaper. Hold on. So here, this is going to be $900. That's exactly what we expected. If we're selling a put, and then it's 1-for-1 to the upside. If we're selling a put, we'd go with this put to make $100. It's 1,000. So there, apples to apples comparison, 900 to 900. Let's go nearer term with this zebra. Let's go. I want to see if we just buy an option. Are you willing to give up 76 cents? You can use $500.
Sure. Yeah, then I'm fine with that. Right. I mean, even the 82, you're only giving up 92 cents. You're not giving up that much. Sometimes I look at it with these moves, and I will use some short-term options. I'll look at like, what am I giving up? If it's half of or less than the move it's just having today, I don't mind it.
I just want to see a very near-term zebra, which breaks all of our rules, by the way. Here you're paying $5 for it. Okay, so let's talk through this real quick.
I'd rather just buy the 6-day call.
No, I would too. And I'm with you on that, but I just want to talk through a couple scenarios. So here we are basically, so 50 delta, 70 delta, close enough. Okay, so 531 versus 530. I think this is fair comparison because they're almost the same price. So the zebra, the 85.5, 83 zebra is 531, and the 81 call is basically 530. So the 81 call, you're giving up 77 cents in extrinsic value, and here you're not. But let's talk through the gimmies and the gotchas here.
Well, and one thing I will say, if we pay 531 for the 81 call on the 6-day, and TLT doesn't bounce back up and continues to fall, and in 6 days, we have nothing, where if we pay 900 for the zebra in the May, we have 36 days for TLT to have a bounce in our direction, which sometimes it's not bad to go out further because with everything going on with bonds, who knows what's going to happen?
I know.
So maybe we just pay the 900 and go out to May. We were willing to spend $1,000 on selling that put for $1.
So the other alternative is you do have extraordinarily high implied volatility. Would you want to, and we're talking through scenarios though, I hope everybody realizes this, would we want to just get more aggressive?
Right, sure, you could.
85.80 is only going to give you $1.50.
It's so hard when you have to buy something. When you have to buy something, then you might as well just sell that put for $1.50.
I know.
Just throw in the zebra, we have 35 days. And if it drops down to our long, vol's really going to explode in there.
I'm going to try to make the zebra a little cheaper. Okay. So I want.
Yeah, I think you can do that.
I gave up a little bit of extrinsic value, not much. So I made it 725 instead of 9. Okay.
No, I think that's fine. I don't mind if you give up a little bit.
Okay. And we will. So Jenny, put a mental note, put a pin in it, write it on your popsicle, sear it in your brain. When TLT gets to 82, we take action.
Oh, right. Because like I said, if it gets to 82, vol will explode in those 82. There'll be a lot of extrinsic value in that 82 line.
Yes. Okay, good. Order sent, TLT done and dusted. Thank you very much for bringing that to our attention with the gold and the bonds trade. Next, okay, let's get into Kai's thing, don't you think?
Sure, yeah.
Okay. Kai, weekly summary of market measures. Sponsored by SIBO, love it.
And I don't know if I ever even got to any of these market measures this week.
Maybe it's the first time you've seen them. I thought they were pretty good. They're kind of heady though, and I like this. So this is very poignant as well. So market analysis following Liberation Day.
Okay. Next. Historically, there have only been 11 instances where NASDAQ dropped 22% or more in a 45-day period, and only 5 instances where S&P dropped 17% or more. This places the current market decline among the most significant in history. So if you're surviving this is among the most significant drops in history.
It is. And you know, I mean, the surviving or living to trade another day, I mean, everybody's got their own thing. Just kind of hunker down, make sure. The most important thing for me is to be able to trade the markets in 6 months.
And you know what I was thinking of, Liz? I was complaining today to you about my accountant, how I've gotten all my everything into him 6 weeks ago, and he still isn't finished. And April 15th is on Tuesday. But he's also a money manager. He also manages quite a bit of money. So I think his instead of doing people's taxes, he's dealing with everything else.
So I'm telling you, when I was on that Royal Caribbean ship, every single money manager was on the ledge.
Yeah.
They were, because when you're managing other people's money and you're getting a phone call being like, hey, what's happening? My account's down by 22%. That's not good.
It's interesting. So everyone at Tasty, Liz, me, Tom, Tony, we've all been in situations where people have asked us to manage their money. And now, after years of experience, guess what all of our answer is?
No.
No.
No. No.
Right. Because it does bring a lot of headache and stress.
Yeah. The answer is no. No.
Don't call me again. Sorry.
New phone, new this. Okay, so keep going. There was more than a 10% drop in the S&P 500 over just Thursday and Friday. Now, this was while I was gone. All other indices saw similar declines. Such dramatic 2-day moves have occurred less than 1% of the time. You know what, Jenny? I bet we are the first ones doing this.
I think so. I don't think they did market measures this week.
Okay.
So all of the indices saw similar. Such dramatic 2-day moves have occurred less than 0.1% of the time for all indices historically. So
and Kai came up to me and told me this the Tuesday we were in. He's like, "You're not going to believe this. It's 0.1% of the time." Now that's when he said that, I thought he was thinking 1%. 1%'s a lot, but 0.1%.
0.1%. 0.1%.
Right?
Yes. Yeah. So again, if you're surviving this, and I know it's been tough for some people. It's been a crazy move. A crazy move.
It is a crazy move. It is a crazy
move.
Okay, next up. So the following table shows the top 6 largest VIX single-day upside moves. So VIX up, market down since 2004. And their causes. Do you know what I love is he put the reasons. Thank you, Kai.
And so this includes 2008. When I think back in history, I think, oh gosh, 2008 was the worst. But
99, 98 after the dot-com bubble was pretty crazy too, wasn't it?
Right. Yeah.
Okay, so COVID, the jump was 24 and 21. COVID. Wow.
But COVID doesn't seem bad to me in hindsight because we bounced back up so fast. Like during 2008, it took so long for the market to come back.
Yeah.
I mean, so long is all relative, a few years, right? But it was a big move.
It did take a few years. So when you take a look at this, okay, from this perspective, the VIX jump, and this is what I was saying whatever, everybody's saying the same thing. But if you look at this VIX jump of 15, this isn't nearly as bad. I kept saying the VIX isn't jumping. The VIX isn't jumping. With the down move that we had, the VIX didn't spike Thursday and Friday.
Because don't you think, didn't it in COVID get into the 80s?
Yeah.
Yeah.
Yeah. I mean, the highest I saw it was just under 60 during this last couple of weeks.
Okay. So this is like bringing flashbacks, but do you see February 5th, 2018, that 20%? Do you see that?
Yes.
That is when I was getting a facial and the VIX spiked. That was February 5th, 2018, when you called my facial girl and we were like, get her out of there.
I called the salon. I was like, breakthrough. That's how good of a friend I am.
That's that day. I'm glad we have it on the chart.
I totally did. It's so funny.
Yes.
Well, I knew.
I jumped up.
Okay, so you have to have VIX timed perfectly. And at some point, Jenny and I thought we were going to be long volatility. And I knew you had long calls that were near term. So let's talk through this. I knew you had nearer term calls than I had. I think I was doing something and I knew you had nearer term calls. With this spike, when it popped up, I was like, she's got to get out. She's got to get out now. But when I finally broke through to you, you were like a week out. Do you remember this? So I thought you had the day. You had a week out and they weren't nearly as high.
They were like 5 days out. So whatever the VIX, however high the VIX got, my calls and VIX that were 5 days out were nowhere near where the current, the spot VIX was trading, nowhere near. So it wasn't like the big moneymaker you thought it would be, because there were still 5 days to go. And we saw that even last week when we were looking at VIX calls that were just a day or two to go, pricing that the VIX would come down. I wonder how they are now. I wonder if you look at next week's calls, with VIX having stayed in this 40-50 level for a few days, what are Monday's calls? What is pricing in the VIX to be, if it's still pricing it to come down?
Okay, so let's see. So we've got 4 days out, right? The VIX, you got to look for where the calls and puts are the same price. Yeah, it's pricing the VIX to be what? Like 40, 38.
Yeah.
30, between 38 and 39.
Right. Okay.
So, I mean, a pullback, but that's still pretty high.
Sure.
And
But
so
it's
here,
not-
what we're doing, the old trader trick is to look where the calls and puts are the closest. Now, let's see in 11 days where it's pricing the VIX, if we can. So here in 11 days, it's probably 34, 35, right?
35. Right.
Yeah.
35.
And then if you keep going out farther, let's say May. So May, it's... I can't see this.
32.
Yeah. Yeah. So it's stair stepping it down, but it doesn't seem to be.
But so I won't mind it if we have like 30 something volatility all summer. That could be we usually have the summer doldrums. We're like so boring and what to do in the summer. But if we have 30 something VIX all summer.
True. And two-way action. I just need to harness the power. I just need to harness the power better because
I mean, today is our first day where so far we have not seen wild swings.
Bite your tongue, Jenny Andrews. I mean, because it happens on a dime. And that's just it. So like I said, talking to the kids, I talked to another one yesterday for like 45 minutes because they're all getting wind that I'm taking children's phone calls now, apparently. But so that's what I was saying. I was like, in this market, it can turn on a dime. I've never seen this before where I was saying news is built in, and it is built in, right? The market is smart and the market will react. And we watched that when the tariff pause, remember the day the tariff pause was like, just kidding. And you saw it go up 250 points and then they're like, that's fake news. And then it went right back down. And so it's reacting crazy to tweets and news and anything on a dime. So I was like, just hunker down, like be vigilant. But they keep being like, I have my stops tight. I was like, stops? Could blow up.
Like it could blow. Right. We saw that on that day where SPOOs went from up 20 to up 150 in a millisecond.
Yes. Agreed. Okay. So I'm going to go back to this. I love being able to go back and forth. So here's the takeaways. The current market correction is a major downturn. Its magnitude ranks among the strongest in decades, behind only 2008 and 2020.
Okay, the VIX reaction was extreme. Friday's VIX jump was the 6th largest single day increase in the past 20 years. And it's weird. It's almost like, and I'm not going to say we saw this coming, but we kept saying like we were going down and the VIX wasn't getting high enough to justify the down move. We kept going down. VIX wasn't going high enough. It was almost like it knew that we were going to have bigger down days.
Yeah, it was like this is nothing.
Yeah.
And then it says asset diversification and proper risk management become more important during market corrections.
Okay, careful option strategy selection is essential. Risk-defined and high-pop strategies can mitigate some of the potential risks. It's tough right now. It's tough. Like when you go out and normally we are put sellers, and I look at selling puts, but you're thinking like, oh, with the market we're in, I mean, maybe I should define my risk. And when you look at defining your risk, you're paying so much for that risk definition. It makes it hard. Like today, you go through this process of, I want to sell a put spread in here. The put I have to buy is so expensive, but I don't know if I want a naked put here in the market we're in. So like today, what did I do? Just bought some shares because I didn't want to quite have the risk of 100 shares with the put.
Agreed. I mean, and you're paying so much for the put, but that's just it, is when we have this implied volatility, your protection is hard. It's hard to buy the insurance when the house is on fire, right? And the house is on fire.
House is on fire.
Oh, sorry, wrong way. And then I got to go this way. Okay, so now number 2, which is awesome. We've got 3 to go through. What to expect after a 10% decline.
Great. I hope he tells us. Excellent.
Okay.
It took less than a month to rally back to 50% of the original price. This is much quicker than expected. There was only, so this is just, so we're missing the middle of it, right? I was like, okay, yes. We're missing something. So this is just the takeaways. It took less than a month to rally back to 50% of the original price. This is much quicker than expected. There was only one occurrence that took more than 6 months to recover, which happened in 2022. And I don't even remember 2022 being like anything crazy.
I think that was just the slow grind up 2022. We had the elevator down, stairs up.
Well, when we were down in 2020, we were back up. In 20, what happened in 22? I don't even remember. And we were doing the show every day, so I should.
Here, I'll show you. Oh, sorry. Hold on. I'll show you what happened in 2022, Jenny. In 2022, it was
the mortgage
subprime.
Crisis,
it was the subprime mortgage crisis.
No, that was in 2008. 2022 is not on here.
Oh, it's not on here. I looked at the 22. You know what I mean?
Yeah, I know.
Usually,
I know.
I mean, Americans write the date with the year at the end. That's why I was like, what is happening? I saw the 22 and thought that was it. Not on there. Okay, so let's go to the takeaways here.
I want to look at that. Yes.
So increasing our target by 25% higher, it takes much longer, more than 2 months, for the market to reach that level. So a 75% recovery.
Okay.
So he's giving us the days for the recovery. So median days is 15. And then 57% of the time it is under 30 days for a recovery. And remember, that's the one thing they said, 21 days until the recovery. But here your median is 15. And then to get
like 15 days, you're going to get 50% recovery. That's a massive move up because we've had a massive move down.
Well, we got a massive move up that one day, but it just didn't hold.
Yeah.
Yeah, it just didn't hold. And then increasing our target by 25% higher, it takes much longer. And it should take much longer to get a 75% recovery.
So if someone's looking at this and they're thinking like, oh, per this study, we've got it's possible to get a 75% recovery in 73 days. Does that make people think I'm going to go out? Let's go to the platform, please. So if you're thinking like, 73 days, we might have a 75% recovery, or in the past, that's what's happened. Let's say just go to SPY, just to go to what it doesn't really matter what. And then go to the June options.
Okay.
June options 70-day, and just do a big wide wrapped around at the money debit spread where you're not giving up extrinsic value. So like, I don't know what, make it $100 wide for 5,000 or something.
I just did whatever. So you can make 2,000 and you're putting up whatever. I'm trying to wash extrinsic value. I just went 16. Do you know what I mean?
And like put it on in June and walk away. Do you think people will look at that and think
no. Okay. So I also think our world is different. Remember, we went through this little exercise yesterday and I said, what's 90 days from the other day? And it's in July. So there is something has said been like in 90 days. That's why I wanted to see if these were going to be elevated. These volatilities would be elevated. But I think when July comes, we'll know much more about what is happening.
Right.
I really do.
I think every day, who knows? Every day there's something coming out.
Every day there is something coming out. Okay, I'm going to keep going forward. So it took about 3 months to fully recover from all the losses. These results suggest a 50% recovery in the short term is more realistic than a full recovery. Keeping some negative deltas in our portfolio and selling premium high IV is probably worthwhile before a recovery occurs. So this is good. And I think if anybody wants to go back and redo and see the full thing, you can put it in there what to expect after a 10% decline.
And again, I don't know if they even did market measures this week.
I don't know either. So we don't have the full thing. We just have the takeaways.
But if they didn't do it this week, they'll go over these next week.
Yeah.
So if it's not under the market measures in the archives this week, it will be there next.
And it says the takeaways. It takes about 25 days to see a 10% market correction in the past 20 years. However, it takes much longer to recover to the original level.
Now, this doesn't mean that this is going to happen. It doesn't mean, okay, we're going to have a 50% recovery in this amount of time. Like, we don't know, but this is just historically what's typically happened.
Right.
I know plenty of people who think that we've got a lot further to fall.
Oh, no, he's just talking about history. He has no idea what the future is. Yeah.
Right. Yeah. But I know he's talking about history, but it says what to expect after a 10% decline.
True. Okay. Jenny's always talking to the legal team, making sure that all the...
we can't guarantee that this is going to happen.
I'm telling you, though, I think you're thinking about this because your daughter wants to become an attorney. Is she in the background being like, you have to say, in my opinion, what you expect?
Well, okay. So we've got, like, here in my house, there's a lot of, because my husband is like dealing with the lawyers now, working with the tariffs. Again, she hears all of this stuff going on. There's a lot of legal talk in the house right now.
I believe it. In my opinion, what to expect after a 10% decline, just to cover our bases. But then we'll just read these last two takeaways because we do have one more and we have 20 minutes. It says 2008 has the longest correction period in recent history. The full recovery took between 3 to 5 years. There was only one occurrence after that had more than a 6-month recovery period.
Yeah. It takes less time to recover than 50% of the correction, but much longer with higher recovery targets. 2 to 3 months is realistic for 75% and 100% recovery. I mean, you imagine 100% recovery in 3 months. That's going to be a big up move. Don't show this to Tim Knight.
No. But, I mean, history is history, and there's no guarantee it's going to do the same thing in the past. But the S&P has a 100% recovery rate. It just depends on the time frame you're going to look at it. It's always inched higher. No, I know. And I'm not going to, you can't. But it has. It's the only thing in history that has 100%. At some point, it is higher than it was the last time. Do you know what I mean?
Right. Positive drift. The positive drift is real.
Yeah. Okay. Is that it?
That might be it for Kai. And we only have it's 10:42, so we don't have too much time left. We might want to make sure we don't have anything expiring today. If we do, it's probably things that are way out of the money. Steve Jones, Jenny, provided you have already paid in enough money to pay your taxes for 2024, you have until October 15th to see. That's what I said to him.
So that's what the problem is. You don't pay in, Steve. She doesn't pay in, and I don't know why.
No. I do pay. I mean, we pay our taxes out of all of our paychecks because we're just employees. And then I have extra money taken out of my paycheck, extra money taken out of my husband's paycheck, and I pay in everything my accountant says to pay in. But I always owe more. Like, that's just it. I always owe more.
So we have to pay in front. Like, I pay quarterly.
And we're not contractors anymore. When I was a contractor, I sent in quarterly. Now that we're employees, I just upped. You didn't do this. I did this. I upped what comes out of every paycheck. So
I still pay quarterly. And so that's to his point. We do have till October 15th.
And I said it to my accountant. If you don't have time for this, just extend it. But anyway, whatever it is, like every April 15th, I always owe more. I'm never getting money back.
Yeah, I love it. I love our tax providers that are on, or our tax professionals that are on Twitter.
So, yeah, I don't know. Next year will be my first year. Something to look forward to, Liz, when you turn 50. Because once you're 50, you can put more money into your 401.
Can you please say, because I'm 50 years old.
Because I'll be 50 years old and I'll be putting in extra money into my 401.
And I can kick and I can stretch and I can put extra money in my 401. And I can't wait. I cannot wait until you're in your 50s and I'm in my 40s and I can be like, we're a generation apart.
And I'll say, hey, tease me all you want. I'm putting extra money in my 401.
Oh, it's too funny. Okay, so only because I think it is pretty interesting to look at, and we have a minute. I like to take a look at these. I want to refresh because I think this was from yesterday. Yeah, it was. Okay, there we go. Because I was like, I saw that one yesterday, the 100,000 in put that we're closing. So today we've got triple Qs, April 11th, which is today. Puts.
Let's see, triple Qs. April 11th. the 385 puts. But some of these, like yesterday, everything we were looking at, a lot of them were closing.
A lot of the ones, yeah, that's why I refreshed, because that was a closing order, that 100,000.
Yeah.
So let's take a look. Do you want to look at the puts or the calls? Would you like to take a look at the VIX or the QQQ?
And also look at so April 11th, 5,000. That's in the SPX.
Look at NVIDIA. These are all April 11th, 13, 18, 14, 24, the calls. Iron Condor?
Well, I'll tell you, if someone wants to take a directional shot on a wild move, the 0 DTEs are the cheapest way to do it. Do you know what I'm saying?
So like every option on a Friday has a 0 DTE. So anything that says April 11th is a 0 DTE.
So look at the April 11th, like NVIDIA although that's a spread, 113, 118.
Well, I mean, that's what I'm saying, Iron Condor, because then you have the 114, 124. Yeah. That could be a spread. What price is NVIDIA trading?
It was at 9. Where is it? I don't even know.
No, it's 109. Yeah, it's in the hundreds. It's in the hundreds. And
how low did it get?
Those are closing orders. NVIDIA got, the low was in 87. Yeah. And that was probably while I was on the cruise. That was probably while I was in Haiti. Because I'm long NVIDIA. I'm not long NVIDIA. I put in my infinite wisdom, it's actually helping me. I don't know when they expire, but how I set myself up, Jenny, in my infinite wisdom, I never expected it to go down as much as it did on that Thursday and Friday when I was on the cruise. I set myself up with all my long positions. I put huge wide downside ratio spreads in to protect myself.
And they blew through. But okay, so to open up the 0 DTE. So to my point of like, if people are trying to take a directional shot for the day, they're cheap. Right? It's trading 108.94. You've got the 109. Each option is just $1 and $1. So if you're thinking like, oh, we could have a big move one way or the other, I think people use these 0 DTEs to take like a short-term directional shot because if you go out to next Friday, they're too expensive.
Watch this. So, and it's going to get cheaper and cheaper as we go. So wait, I'm just going to compare apples to apples. I'm going to go the same strike. So let's take the 111. Okay. 111 is 40 cents. But what are the chances it's going to get there today? And versus the 111 here is $3.30.
But if someone thought, oh, we might rally in the end of the day, if I'm thinking like maybe we'll rally, I would go to the 0 DTE and to buy like one strike in the money. They're $1. What is it? $1.50.
It is a cheap way to do it, but I will tell you, if you think it's going to rally, if you're willing to put a little you could do the same thing and still close it. You know what I mean?
Right. Yeah.
Then you have a little bit of time. But it's interesting to see. I want to see. So the NASDAQ, where are we? The NASDAQ is up what percentage? Just 0.24. Yeah, very little. Because I think just these little NASDAQ stocks are rallying.
And
we don't have any little NASDAQ stocks. Oh, Intel was taking it off the chin this morning. Intel.
Oh, all week, Intel. I feel like Intel all week down to 1890.
Yeah. Yeah. Oh, we're not filled on our TLT yet.
No, we haven't gotten filled on that. I don't know if there's anything. What do we want to do? Any positions we want to add?
I'm trying to think. There's no earnings for this. What I have been doing, but they don't really come in until a lot of times. If I want to take a directional assumption, what do I have here? Oh, I can tell you exactly what I have. I figured protection for myself was to put this on, but those
just a little butterfly to the downside.
Yeah, these were the at the monies. I think I paid 50 cents for it yesterday. Mm-hmm. And it's right there. So it's the same price. It doesn't matter because these things are keeping their wings up. Yesterday, Jenny, at the close, I know you and I bought options and I was looking at, you could take them and roll them up. Like I was going to take something, I bought whatever, the 5, let's say 519, 516, 517, whatever it was, and roll it up. They were keeping, with 30 minutes to go, Jenny, the value was still jacked.
I said this yesterday. I said to someone, the XSP options today are as expensive as the SPX options used to be 2 months ago. So it's like now we're getting 1/10 of you're getting like 1/10 of the size for just the same price as the SPX used to be a while ago, because we trade the 0 DTs a lot. We're pretty familiar with the pricing, and these XSP options are crazy expensive.
Yeah.
And
for
two are the
sure.
SPX. I mean, that's the vol. The
And you know
vol-
what's insane when you think about it. So, but it seems counterintuitive because that's what theta does. And I was trying to explain this to the kid yesterday. So it should be the opposite. So it used to be, I mean, SPX, whatever, they're the same thing, but it's a tenth, was 614. And now it's down in the 400 handle or the 500 handle or whatever. So you would think it would be cheaper. It's not, because the vol's through the roof.
Because the vol's through the roof. Like you could scroll back in Twitter months and look at some of Mikey's XSP trades and then look at him to look at, because he would do like a Jajun or buying at the money. And you see how much those options were so much cheaper than they were today. Yesterday after our show, it was after our show when we were looking at XSP and the just out of the money calls were $6.
Yeah.
Where are they now? Where like the 0DT just out of the money calls? How much are they today?
Yeah. Well,
they're less today, not as high as yesterday, because we were down 300 yesterday when we were looking at them.
Yeah, we bought it after our show at like noon because I was just about to walk the dog again, and we paid $6 for it.
Yeah, 5 or 6, something like that.
Yeah. Yeah, because that was when we were down almost 6%.
Right, we were down 315. We were down 315.
Yeah, I was like, I love percentages now. Ever since we got on there. We were down 6%. Now, okay, so I don't see any in the money signs here. We will make sure that I do see in the money signs, not a red in the money sign is what I should have articulated.
What are we gonna do with our TLT Zebra? Do we want to pay up to get filled on that?
So let's go.
I know. Because that's going to move with stock. So I know it's like, oh, well, we didn't get filled. TLT was down $1 when we were looking at it. Now it's only down 37 cents.
Where's our TLT? Oh, it's, sorry, hold on. I can cancel it. We'll put it in again. So, sure, I do. I kind of want a TLT position in, okay?
Yeah.
679. I made it cheaper.
Okay. Send it. Because my only job today was push our trades out on the follow page, and I haven't even gotten to do that yet.
And you have nothing to do. You're just sitting there looking pretty.
Just waiting to push our trades out. Nothing to do.
Just sitting there looking pretty. I like it. So I do think that, at TLT at these levels, I do also like the way of a zebra in, which is kind of against our rules. Also, Jenny, when we were looking at this had like a 140 rank.
Now, I will say I see in here as I go to push out the trade.
Something get filled?
MCL? Wait, MCL. Did we close MCL today? Or was that yesterday?
That was yesterday.
Okay. I'm just going to make that's a little bit old. What is crude doing right now?
MCL, let's see. It is 90 rank. It was down a little bit. I just want to take a look at the chart because look, this is the only time it hasn't had a big move. Let me pop this out. I want to see where it opened. So let me hit this. So it opened a little lower than here. The high was 61.11.
Now remember a viewer who was selling just like today he'd be selling Monday. Today he'd be selling Monday. So it's Monday strangle. And he was in CL, but we're just looking at MCL, and he was doing these strangles like every few days. How far can you get?
So I don't know that I would take the risk over the weekend, and especially
with the way it's been moving, I don't think I would do it right now.
When I also heard a caller call in this morning talking to Tom and Tony about how there is some negotiation this week with oil, so they're bullish. And Tony's like, let the man talk because I'm bullish too.
Oh, but then I heard another caller say he was bearish.
Correct. It doesn't matter. It doesn't matter which direction. It really doesn't matter which direction it is. But there is some negotiations going on this week. That's why I don't know that I would take the risk of a strangle over the weekend. I don't mind the Monday to Wednesday, Wednesday to Friday. I have a hard time taking the risk over the weekend. But that's just me. Not in life. In these current market conditions.
Right? Exactly. It's crazy because okay, we talk all the time about, we can't wait till Val's high. And now Val's high and we're not putting that many trades on. And I have plenty of trades and you have plenty of trades on our thetas. We're fine with our trades, but we are being a little more cautious because we don't know if the move is over.
Well, no, and news moves the market now. Tweets can move the market.
Right.
Which I've never seen before.
I know. I know. That's why I put notifications on my phone. I told Liz I signed up for that True Social and put notifications on just so if I could see if there's any like wild or crazy tweets coming out, at least it'll pop up on my phone. I'll get ready.
Your phone's going to be dinging like crazy. Your phone's going to be dinging like crazy. I'm going to pop back in here. I want to make sure that we got to everybody on Twitter. I think we are pretty good today. I think we've got everything.
And yeah, Steve, I appreciate it. And I will tell him again. And I will say, so it's really just, I think probably just my trading account. I do not throughout the year send estimates on my trading account because if after January we're like, I'm going to send an estimate of everything I made in my trading account, I want that money back.
Oh my God, you're hysterical.
You know, I don't send the money on what I made in my trading account until now.
Yeah, I do. I maybe I'm a fool. I have my taxes already paid as the year goes on. So Steve Jones gives you the form. I love our people on Twitter. I think it's awesome because they do solve a lot of our problems. Speaking of Mikey, he has not tweeted in a while. I need to make sure Mikey's okay.
Oh, Mikey's okay. I was thinking of him today. I was seeing him today.
We've seen Bob on fire, but we haven't seen Mikey. I hope he's okay.
Yeah, I hope so. All right, Liz, have a wonderful weekend. What are you doing? What are you going to do while I'm locked in the dance convention?
Oh, I am shopping for Germany because it's going to be raining there. So I got to buy a bunch of like rain jackets, rain coats, rain shoes. So I'm just getting ready for Germany. And I'm celebrating Easter with my in-laws. We're doing that tomorrow because we're going to be gone for Easter.
Don't think that it's like just you and you've got a run of bad luck. Like it rains in Germany. It rains in Germany every day in May, pretty much.
We watched European Vacation. When's the last time you watched European Vacation?
It's been a while.
So me and the kids watched European Vacation yesterday. It was pretty funny. And it's hysterical that our parents let us watch these when we were younger.
Oh, I know. I
was like, Jada's like, you didn't tell me there would be nudity. I was like, I didn't remember there being nudity. There's tons of nudity.
Oh yeah, they're all inappropriate. I remember going to like the neighborhood green where they played Ghostbusters, and I'm like, can they even play this out here in the neighborhood?
And like I said, I'm fine with him watching it. He's 18 years old, but I just don't like watching it. I was like, cover your eyes. So I went up to him. I'm going like this.
Oh my gosh. And I said rains every day in May. It just, and I know we're only March. It pretty much rains. It rains every day now. This is the rainy season. They get
I'm
one.
not trying to correct you. You said it rains in May, and then you said it's March. It's actually April, but it'll be okay.
Oh. Well, this is their rainy season. They get like 1 or 2 dry months. That's it.
Yeah. So nonetheless, it'll be fun, and I'm just hoping the market turns around while I'm there.
I hope
doesn't pull the same thing that it did while I was gone the last time. That's all I'm asking for, okay?
No kidding. All right, everyone, have a wonderful weekend. Liz, have a great weekend. Everyone out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny's show. Stay tuned. Mike and Nick are next.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
the amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend with my buddy Mikey Butler. How are you, sir? Good morning.
Good morning. Doing good. Doing good. We got some sunshine. It's Masters Friday. We got a nice little weekend ahead of us. Market's up a tiny bit. It feels like the calm before future storms, though, because market's up and volatility's up. And as our emails from days of old used to say, what gives?
Yes, that is definitely, today has been a what gives market. We had in the overnight session some crazy action in the bonds. The bonds have been just ripping around. You have gold continuing to skyrocket. I mean, I highlight those two things first just because, they go in hand with the kind of risk off sentiment and just the flight to safety, so to speak. You have bonds going the other way, as in rates going up, which is kind of contrary to what people think of when, markets are in turmoil. And then you have gold going to the moon, where, you got to kind of get that sort of bunker feel out of gold, because gold's just skyrocketing. We're at 32.59 right now, basically the high of the session. But it's been a really weird morning. Volatility futures up $1.50 or so here. We're at 30.85. So volatility staying bid, as you were mentioning before. And we've had some two-sided action today. I mean, it hasn't been super wide relative to what we've been used to. I mean, we're looking at about 170 point intraday range through the morning, through the open of the overnight futures. So, we had a 200 point down move yesterday. So we're definitely inside in terms of expected moves with volatility futures where we're at right now. You should expect like a 3 to 3 to 3.5% move per day. And we're well inside that, yet volatility is still expanding. And I think some of that has to do with just the curve that we have in volatility and how that's sort of moved and how high the VIX is right now. So one or two of the, or one or both things must happen. Either vol is going to expand to meet where the VIX is, or the VIX has to come down to meet where the volatility futures are. And I think that's kind of the battle that you're seeing right here in volatility. Just to give the rest of the market, because I was kind of long-winded on why I was expecting a little bit more price action today than what we're seeing right now. But E-minis are up 23. It's about the high of really since the open. Most of the upside we had in the overnight session. NASDAQ is up 100. You've got the Dow up 120 and the Russell down 15. So the Russell bucking the trend here. Oil catching a little bit of a big kind of helping me out here, up 58 cents. Volatility futures up $1.20. They were up 2 something. We got to 31.95, so about 3 points to the upside. Bonds down over a full point. You have gold up $81, silver as well catching up a little bit, up $1.33, and then Bitcoin futures up 3,100 here on the futures. Spot is up 1,700, maybe a little catch-up trade there with the digital gold, so to speak.
Yeah, interesting to see some things flying around. You've got some single name stocks doing well. Apple's up almost $7. Google's up 350, Microsoft up 5. So your Mag 7 stocks doing well, but there's some that are not doing so hot as well. So kind of a mixed bag for once in the market here on a Friday.
Yeah, it's a little surprising given that, the weekend, and this is why we always talk about how we get those emails, which we haven't got a lot of these recently, of why don't you sell more stuff on Friday because you get the weekend theta decay. I think our weekends have for this year have shown that there is certainly weekend risk, and that is why premium has, doesn't just automatically, there's no free money there. So anyway, I was thinking, maybe today you have a little bit of a little lightening up on positions, but that's really not the case today.
Yeah. Weekend risk is real, people.
Yes.
Yeah, we have almost a 200-point expected move in SPX through Monday. So weekend risk certainly being priced in. If you want to fade that weekend risk, if you think we're going to come back to the markets on Monday and have a move like this today, then you will get paid. You will see the volatility crush and the premium crush on Monday's open, considering there's a 170-point expected move. But there's a 170-point expected move, which tells you that the market is projecting a futures open pretty big to the upside or downside on Sunday.
Yeah, I mean, that's not a shock, given what we've seen in the market. Craziness. I see not much action today from you. I just sold a call against my IBIT, poor man's covered caller. I think I did a crab trade, something like that, into this up move. I also sold a call spread against my oil futures. We've been managing pretty aggressively positions on a day like today, where you're not really getting much of that decay coming through because volatility is staying bid. A little bit harder to do that, even though the market is basically flat here. It tells me that I certainly have directional positions here.
Yeah, absolutely. And I mean, we're going to continue to have pretty big delta swings with the market moving the way it is, for sure.
Yes.
I haven't done anything in this portfolio today yet. I'm keeping my eye on some stuff, but we're still kind of on the dance floor with some of these positions. So yeah, some new positions working out well today. But yeah, need some more market movement. This 20-point move isn't going to change much, considering the moves we've been seeing.
It will if you get a vol crush into the close today. I just don't think that's going to happen.
Yeah.
I think a very much inside day of 20 points with a couple points coming out of the vol futures would help a lot of my positions, and I think a lot of people as well, just because that vol is staying bid. You're not getting paid on any of that decay right now. Couple just quick notes. JP Morgan had earnings this morning, as well as Morgan Stanley and Wells Fargo. So we are starting earnings season, which seems insane. I know it's on the calendar and you can't avoid it quarter to quarter, but just given what's happening in the market, to add in a layer now of earnings and earnings trades, I imagine I won't be doing a ton of them other than like the big names.
Yeah, I would agree. But yeah, even the big names, it's hard to see. It's hard to like put your finger on what you think is going to happen, because we're not in a calm market and there's so much unknown. And I think this earnings season, there might be a lot of talk about potential tariff implications on product and service delivery. So I don't know.
I'm sure they're just like every other one, COVID and inflation and all that other stuff. It's always a nice little thing to add at the end. But yeah. I mean, inside moves from JP Morgan and Morgan Stanley too. So maybe the downside is kind of baked in already, and maybe this is like a vol event for some of these stocks, but who knows?
Yeah. Cool. What's interesting is we typically see Netflix, Tesla, those stocks have a 10% expected move or close to it. Now we're seeing Netflix with a 12-13% expected move for earnings 2 weeks out. Apple, you have a 20-point expected move for the earnings season or cycle. So we'll see that come in as time goes by, but still pretty inflated relative to what we normally see, which you should expect.
Very nice.
If we want to pop over to YouTube, we can answer some questions. If you want to join us there, we're streaming live. Just go to the Tasty Live YouTube channel, throw in your trade ideas and questions along the right-hand side chat, and we'll get to them right now. I've got the Cherry Picks newsletter pinned to the top of the chat. I'll also put the Tasty Crypto newsletter in the chat. That's coming out tomorrow. Both free.
If you haven't got the Cherry Picks, you must sign up and get that cheat sheet. It is a must-have for navigating futures and this market in general.
Indeed it is.
Yes. One of our best, if I may say so myself.
Yeah, especially when markets are moving like this, there's a lot of interesting data that comes to the surface.
Yeah.
All right. Let's kick it off here. Yesterday, Nick said, what did you say? Nick said VIX at 50 means SPX is expected to move 3% daily for a year, but isn't VIX a 30-day annualized volatility? So a 3% daily move would reflect the next 30 days, not the whole year. Yeah.
Well, yeah, VIX is a 30-day measure, but you can extrapolate that down to daily. So if you divide the VIX by 15.9, I believe is the number, 15.9. That's a per day annualized number based on whatever the VIX is right now. It's the same way as like putting context to like Apple's implied volatility through next week is 81%. That means that the options are pricing an 81% up or down move in Apple over the next year. That's the pricing of these options. That's how high these options are priced. Same thing as that you're doing, or that I'm doing with the VIX, is basically saying, okay, the current VIX, if we extrapolate this out a year, what does that mean for price action? It means 3% per day in terms of up or down volatility.
Yep. And that's going to change day to day.
Yeah. But that's that's based on the 30-day expectations. Yes. The 1-day VIX is going to be way higher, and that's that is, and I think that it's VIX 1D, right? VIX 1D. They have like 9-day and all those other things. These are going to be much higher values because these are trading based on the 0 and 1 day expiration option prices. The VIX itself is trading on 30 days, so it's more of like a reasonable time frame, or is a more reasonable time frame than this sort of volatility measure.
Yep. And really, I think the general idea isn't necessarily like the exact 3% daily or like 2.8% daily. It's more about understanding how the VIX is telling us what the expected moves should be each day, and that we should not be surprised to see 200-point swings right now.
Yeah. Yes. It gives you a gauge of realized versus implied volatility. Like right now, we are well inside implied volatility. Yet volatility has remained high, which is telling you that people and market participants are bidding up protection and hedging. So there's just a lot of value being spent on the distribution versus the actual move that's happening right now.
Yep. Indeed.
Yes.
What do you think about the risk of delisting on Chinese ADRs? I think it would be an extreme thing that would happen if it's going to happen, but at the same time, there's always been more of that kind of unknown political type of risk in international stocks. So yeah, I don't know. It's a weird time right now, and it's certainly possible that you would see something happen like that.
I feel like we go through this every like 2 to 3 years of delisting rumors and blah, blah, blah. I just think these stocks are really hard to trade. I mean, in terms of what would happen, there would be some sort of settlement price. So like if you have puts or calls or whatever, or stock, there would be some sort of settlement price. I don't know how they would calculate it, if it would be like currency adjusted or, price adjusted. Obviously, if the stocks were going, if it was if that was decided that they were going to be delisted, you'd probably have some negative action on the stock in the, before the action was actually taken. So that would be obviously an event in itself. But yeah, they would have some sort of settlement. You'd be cashed out at whatever your option or stock position is worth.
Yep.
Relative to that settlement.
Yep. Justin, in theory, if you had all of your capital available and no open positions, what would you be looking to put on right now? Good question. Well, first of all,
I do have a lot of capital available, so give me some ideas.
Well, the S&Ps are down 20%. NASDAQ, same story. So, and implied volatility is so high right now that's where I would go first. S&P 500 and NASDAQ core positions, whether that's iron condor, short put, strangle, whatever. But I like having more downside risk here than upside risk, personally, just because over time, regardless of the narrative, the data has shown that the S&P market, NASDAQ market has recovered over time. Don't know when that is, but that's why sizing is so important. It's the most important thing, so that you have the ability to wade through continued volatility. And, if your short put, let's say, expires out of the money, you keep that premium you collected along the way. Outside of that, I would say setting up small new positions in products you like, products you want to be involved in, and that's where I would start. And then you can hedge from there.
Yeah, I would look at, if you want to be a little bit more conservative and give yourself a little bit more of a buffer to the downside, I would look for like short puts. Like I was just pulling up NASDAQ short put spreads or naked puts if you're okay with that sort of risk. If you're looking for a little bit more of a play to the upside or longer duration, I think call diagonal spreads are certainly on the table. You could do them crab type setups like 1x2 and by the wing. I mean, all those things are kind of in play right now. I think I could probably do one like in the NASDAQ right now. I mean, the NASDAQ's obviously getting murdered, but we could play it back to like a 480, 470-ish.
Yeah. Definitely.
Like June, May crab type trade.
Mm-hmm. I like
470, 490, 510. I mean, this sort of trade, just to give you some context, it gives you about 10 long deltas here, but you've got a lot of positive gamma here, and you're also short some volatility. So you can see, even though volatility is very, very high, there's a 4 or 5 point vol differential between May and June, which tells you all you need to know about what's been happening this, last 9 days, is that volatility is very, very high in the front. So even though this is a long premium trade, you're long volatility in a sense, you're short it at least in the short term, and that's why you have this positive theta as well.
Yep.
So there, we'll do a little one in the NASDAQ.
Love it. Let's see. Thoughts on selling calls in GDX? Looks like it might be finding resistance at 50.
These stocks have gone bananas.
Yeah. I mean, it's tough. I wouldn't do it. Simply because this is one of those examples where, gold is going crazy.
Yeah.
And Ivy ranks at 92. But what does that mean? Ivy rank at 92 means that the current implied volatility is at its highest level that it has been for the past year. But what is that level? That level is 47%, which isn't that crazy. So the fact that GDX is up 9 points in 4 trading sessions and the expected move for the next 70 days is 7 points leans me towards if you want to get short, I'm totally fine with that, but I would not just sell a naked call, because if this continues, you're just going to get hammered. Like there's no premium to sell that makes it worth the risk, in my opinion. Like I would rather buy the 50 put in June and sell the 45 in May and do that for 260. If you get a downside move, you can make $200, which is the same max profit as a short call right at the money with a fraction of the risk.
Yeah, if you want to get directional.
Yeah.
I think I agree with you. It's just a cheaper way to get the same amount of delta. You can sell the call, and obviously if volatility comes in, you'll make some money there, but I agree with you there. I do think it's kind of interesting from I was pulling up like in May, if you wanted to kind of do the not best of both worlds, but similar to what you're thinking and what they were thinking, doing like a 55 call with a put ratio kind of plays into a vol crush / slight move lower. You don't need the like big move lower. I think both those kind of set up interesting. This gives you a break even, 38-ish, which is, back kind of towards the low.
Mm-hmm.
You can move it to the 45 and do this for net zero. You basically, you do this for like a 5-cent debit.
Yeah. I'm actually going to get in on this. I'm going to do the exact trade I was talking about.
There you go.
Buy the June.
Go on. Sorry.
Yeah, I just bought the June 50, sold the May 45 for a debit of 260. Very small trade, but plays into that idea. Max profit, probably $200 if we get down to 45.
All right, I'm going to do the May 33. I'm sorry, 33 delta on it, but it's the 54 short call and then the 59.55 put ratio. So I have a $4 wide put ratio here, if I can get filled here. Markets are kind of wide, which is not a shock. Yeah, I have a Johnny trade I need to close today, but I'm not in the office to record my. What is going on here? Why can't I get filled here? So this, I mean, I'm going to move this strike. So you can see these markets are 20 cents wide on the 54, and the 55 has 10-cent wide markets, and that's just a reflection of liquidity here. So I'm just going to move this here. My Johnny trade, if I was in the office to record my life cycle video, I would close it today, but I'm not. So I will do that Monday, hopefully, if gold is still up. But NEM is another stock that has had just a monster face ripper. So if you had those puts, or if you did anything to the upside there, it might be a good point to consider closing. God, that took a while. All right, I did that at $1. Short the 55 call, the 49.45 put ratio spread. There we go. It's a battle.
Lovely. For iron condors, is the profit target 25% or 50%? Sold a 0-day iron condor SPY, $5 wide for $275 credit. Well, if you sold a $5 wide for $275, you're inside the expected move because your credit is more than half the width. Yep. So in that particular case, I would say profit target's 25% because 50% you're going to have to hold to expiration today.
Yeah.
Or somewhere between 25 and 50%. But when you're collecting more, because it's inside the expected move, it's more like a butterfly, and you're gonna have to hold that longer. So because you're collecting more, I like shutting it down for 25% more than 50 because it'll happen sooner. If you collected $1.50 on a $5 wide where you were much wider, that I would say is a 50% target because that is obviously going to be wider, but 25% of $1.50 is nothing.
Mm-hmm.
So two different kind of ideas there, but the profit, the monetary profit between a 25% with yours and a 50% with a wider one would be the same. It'd be like 70 cents. Selling into the close, Kimberly says.
Yeah, that's what it seems. I would have expected some selling here this morning too, but I mean, if you told me gold would be up like 15% in 3 days and, bonds would be getting whacked, I would think that, and vol was bid, I would think that markets would not be having a good time either. But who knows?
Correctamundo. Alan has 200 shares of AI, sold the 25 put in Feb, rolled out to June, collecting a total of 690 after rolls. Also have 200 shares. What would you do? Sell calls? So you have 200 shares. What's your share basis? That's the question.
Probably higher. I think this is like the low. Because the 52-week low, it got down to 17 sometime over here.
Yeah. But either way, your 25 put in June, after collecting 690, your 25 put in June has $1 left of premium. So you could either keep that or you could buy it back and take more shares.
Mm-hmm.
Kind of synthesizing, getting out of the trade.
Yeah, you're basically a scratch on that. Small win.
Yeah. But yeah, you could sell, because you have 200 shares, you could sell 2 additional calls against your one put because you have 200 shares. So you could sell 2 calls at 25 and just call it a day if it gets up to 25.
Yeah.
And
and with that static delta, I mean, you have that intrinsic buffer to the upside. It stinks to sell calls in the hole here, and I wouldn't hate the idea of just leaning directional here. But like, if you have 2 short put, your short put that's in June is very much, a heavy delta position. It's probably like what, 80?
Mm-hmm.
not quite. 73. So you're long 350 deltas. If you sold 3 or 4 of these like May 22.5 calls at 90 cents, and the stock went to 25, you're a big win.
Yeah. Well, the basis is at 36.
Yeah. Well, but yeah.
So,
I mean,
but yeah, you're making back hundreds of dollars.
Yeah, it's not a problem if you sold these calls and the stock goes to 25 in the next 35 days. That costs you $100. 200, if you do 4 of them, it'll cost you $400, but you'll make back, $2,000 on your position. Yep. So It stinks. I mean, I get it, but you've been sitting on your hands for 50% in the stock. You buy at 36 and now it's at 20, and now you want to manage it. I get it.
Mm-hmm. But yeah, if you're trying to get out for a lesser loss, I like the idea of selling calls against these shares for sure.
Yeah. Or call
either
ratio.
What Nick said, or you just sell the 25s in June to align with where your put is.
Yeah. And just be done.
Yeah. Brett, 2 questions. Follow the SLV Zebra 3031, bought in the short call like I did. Do you close a scratch position or ride it out? You could totally close it. SLV. Yeah, so I had
Zebra and then something.
Yeah, I actually didn't buy back the short call. I thought I did.
Mm-hmm.
Wow. But yeah, either way, we're basically right back to where we started. It's down to 70 cents. I'm gonna hold on to it because I'm playing for a silver catch up to gold, and we're kind of seeing that. I think we could see that continue. But if we don't, I have that GDX hedge on against this position now. So it's totally fine if you are just trying to get out and move somewhere else because you got the rebound that you needed.
Yeah, I just closed mine. I had 2 positions. I did a 1x2 crab trade, and I also think I had a zebra in there. I netted out at a 30-cent loss on the 2 trades. So, I don't know. I think I managed that a little funky because I rolled down 2 of the calls and I overlapped the strike. So, anyway, a position that, you get a big move. I got bailed out. I figure, see ya.
Mm-hmm. Aaron, 0-day SPX Iron Fly. Short the 5240s and 20-point wide wings. Collected 1850. To my understanding, max loss is $150. Seems too good to be true. Nope, that is true simply because your pop is 10% on this because you need SPX to expire between 5240 and 5220 and 5260. And literally, this is going to be like a last-minute expiration trade because it's so narrow. And with 10 minutes to go, there's still going to be premium here at 5240, even if you pin it. So you can make a couple $100 if you hold it to 250 and you're at 5240.
Yeah,
but
it's a butterfly. I wouldn't. Exactly. I mean, you can do the iron fly, but you'll get filled better here, and you can see the markets are moving around.
Exactly.
But yeah, max profit does not. It's not binary. Can't just look at everything and be like, oh, this is cheap and has a big profit potential. It's all tied to probabilities.
Yep.
E-mini's up 50. Are we saved, Michael?
Yeah, what just happened? I don't
know. Apple's been strong today. It almost feels China deal newsy.
Potentially.
You know what I mean? Like, you got to think Apple's probably the biggest name you tie to China.
Yeah.
But
they had that deal
there, so
they had that AI deal in place, and then maybe it was off the table. Now maybe I don't know. But yeah, these stocks are moving around. That's for sure. But yeah, let us know if something happened, chat.
Yeah.
We're
Fill
in
us
the
in, 'cause
dark for an hour.
We're flying. Yeah. Basically.
Yeah. I've been moving around a GDX strangle for months, currently holding a 44 put, 47 call, so a regular strangle, $2 credit taken in, worth $8 as of today. A bit sticky here, not sure what to do. So in these positions,
are we June?
44, July,
47,
July. So yeah, the problem is you have such little credit relative to your strikes. In these particular scenarios, I don't mind leaning directional. Like you're already 90 days out. Maybe you buy back the 44. Like this is a unique scenario, but like maybe you buy back the 44 and you roll it down to the 40 and you give up some credit to widen or give yourself short delta if you're trying to be short. But like as it stands, a $2 credit here, you're going to have to hold this until 20 days and you're going to need to be between 44 and 47. So I've arrived at these positions before, and like I remember UAL was one of them where I ended up with a straddle and I only had like $1.50 credit, and I'm like, well, this is never going to be profitable unless I leg out. And then UAL, I had a big drop. I closed out of the call for like 20 cents, and then I got fortunate with a rebound. And because I didn't have that upside risk with a small credit, it ended up being a scratch or a profit. But like that feels like a similar scenario here where you have a small credit with a lot of time left to expiration. So either legging out or giving yourself more space is something to consider, or you just hold here and see where you're at a couple months from now.
Yeah, I think your biggest issue is just the duration here. 98 days seems like an eternity in this trading environment. Like that, you could have said January of 2026. That feels, like that they're the same time frame. I think you just close the position, and if you want to lean short, roll into Mikey's put diagonal, or even a wider put diagonal, or do it once or 2 or 3 times, and you'll be using the same amount of capital, but you'll get paid on that assumption versus this one where you're just going to kind of be stuck. I don't know. Tough. July is too far. June, okay, I get it. Things move fast and you want to have a little bit less risk, but July is too much.
Yeah. It's a tough spot to be in for sure.
Yeah.
Let's see. Where is the cheat sheet? Maybe the cherry picks cheat sheet you're talking about?
Yes. tastylive.com/newsletters.
There's a link at the top of the YouTube chat. Blue collar options trading.
If you sign up, you'll get it. And if you don't get the email, check your spam folder. And if you check your spam folder and it's not there, maybe we just are bouncing, and you can send me an email to support@tastylive.com and I'll get you it.
Yeah. Neri asking, I keep hearing different personalities saying something like, if you're surviving this as a new trader, then you shouldn't be discouraged. What is surviving? Net lick not dropping a lot? Yeah. or just, the S&Ps are down 20%, the NASDAQ is down 20%. If you're down 10%, you're outperforming the passive buy and hold market. So
yeah,
it's another way of thinking about it. But yeah, surviving is directly linked to trading small and having cash on the side, not being over leveraged, not being overexposed in one cycle. So yes.
Yeah. I mean, we talked about it yesterday of everybody is having a tough time here. Nobody's unless you're just short into it, nobody.
But even if you were short into it, you had a real test 2 days ago.
Yeah. Yeah.
So it's everyone's getting tested. That's for sure.
Yes.
Gabriel from Miami, what's up? High volatility has my QQQ short April 424 put barely green. How much longer do I wait to buy back the April 17 put? How concerned should I be about gamma?
424, 417.
424 for April 17th.
Oh, okay. 424 for just naked.
Yeah. So yeah,
Oh,
I
mean, you're in a
it's
good
barely
spot right
green.
now.
Yeah, you're in a fine spot. If your sizing is correct and you're willing to just roll this perpetually, I see no issue with this. Yes, you're at a scratch right now just because the Qs are dropping and the Qs have dropped. So even though time has passed in your April cycle, the drop in the stock price, the increase in IV has offset your implied gains that you would have had if it didn't happen. But you still have another 25 points before the strike's even tested with 6 days to go. So you would need a big sell-off to get there. And even if you get there, you can buy back April and roll it to May for a sizable credit. Right now, you would pick up almost $700 just rolling to the 425. So, yeah, I wouldn't be too concerned. With 6 days to go, the nice thing about a 6-day cycle is that when you come to the market on Monday, it's going to be a 3-day cycle, and then Thursday.
Next week is Good Friday.
Yeah. So yeah, you're going to have aggressive theta decay here working in your favor, and you can see that the theta is $73 per day, which is a huge number. So even if the Qs continue to drop, let's say at a $5 clip, it's not going to matter because this option is still going to expire out of the money. $5 clip every day next week. So I actually would not roll it right now personally, because rolling to May now, if you see the downside move next week, you're going to see losses. This really high implied volatility in the 6-day, I would kind of lean into it a little bit. If your intention is to keep this on, regardless of what happens, I would absolutely stay in the 6-day and just let all that premium come out, and then you can roll to May if you want to maintain the position.
I agree. Play into that ball. We talked about it this morning. You're not getting paid on any of your short premium today because vol remains high, even though nothing has happened in the market. And earlier this morning, no big moves in either direction in any big stocks.
Correct, Amundo. There was a good theta discussion this morning. If you're a Johnny trader doing defined risk spreads, does theta or the Greeks in general really matter? They can, but using the Qs for an example, or SPY, whichever one you want, the wider the spread is, the more the Greeks are going to matter. And that's simply because your short option premium and your short option delta and your short option theta and your short option everything is going to be much more different than your long option if it's a wide spread. So if you have a 10 or 20 point wide spread in SPY or the Qs, the difference in the premium and the difference in the Greeks come into play. If you have a 1 point wide spread in SPY or the Qs, it is a Greekless position, and it's just a binary trade where you're like, okay, I'm selling this spread. If the market's above this level by expiration, I will make a profit. Like it's very binary, it's not dynamic at all when you have a really narrow spread where all of your numbers are basically the same, if that makes sense.
Yeah. I think in general you hit it on the head, but when you're in smaller size accounts, a lot of your trades become more binary just because they're spread trades or they're a little bit more directional. Like Tom has a lot of short vol and long theta. Those are hard things to get when you have small amount of risk on. So yes, the Greeks are very, very much muted in smaller sized accounts. E-mini's up 69.
Wow.
High of the session.
Let's see. Is there anything in this portfolio we can manage here? Butterfly, nope. Lean, live cattle, nope.
I was looking at
crude.
that one.
Some things are coming in, like Apple. I'm making back $200 in Apple today on that diagonal spread. Still not out of the woods yet. I have a lot of stuff that's going to fall off this week that was just like worthless. So that'll clear up the vision of my portfolio here. But DraftKings, Got an inversion there. FCX, this rally is helping. I'm in your position. GDX, just put that on. IBIT, I've got 2 butterflies and a short put at 55. So that position, even into the sell-off, that position is still not profitable. Lulu, yeah, all this stuff's just, I need a big move in some of these stocks. It's probably not going to happen in the 6-day cycle, but the position's already done anyways.
If you're making something back on it, you can consider
a lot of my
closing or whatever.
Yeah, a lot of almost all my new positions that I put on, I'm in June. So the 60-point move is nice, but it's still well within the expected move. SMH, I've got that Iron Condor, the 200 190 right at the money in May. Nothing to do there. And then I've got 2 Iron Condors on an SPX and a short put spread. That short put spread's coming in $30 today.
Oh yeah. Let's see where mine's at. So I'm still out about $500 on this trade.
Yeah.
But it's looking nice now. And now you need some chop and some vol crush there.
Yeah. Ooh, here's a good one. I like this question. If VIX stays elevated for months like it did in COVID, does this change strategies or approach? A little bit. So in a normal market where volatility is low and things are just churning, the whole, roll at 21 days, close at 50%, I think applies more. When you're in an environment like this, where the VIX is at 40 and markets are moving 100 points every day, the roll at 21 days for me is less important because your delta moves are going to be so dramatic each day. You could still wait. Like if you're putting on new positions that are really far out of the money, you can wait and just, if you're willing to see what happens, that's totally fine. But the one thing that changes for me is the close at 50% profit. Because in this environment, like let's say today in the morning you put on a bullish trade, or yesterday you put on a bullish trade, and today you're up 20% or 25%. That's a position I'm taking off because your implication, if you have a 45-day trade, is that you're going to get to 50% over the course of 21 days, around there. If you're at 25% in one day, you are well ahead of your expected profit curve. And in those situations, we're going to lock that in, remove the risk. If the markets drop on Monday, you can redeploy the same trade and not have that P&L move against you. You know what I'm saying? So I would say the number one thing for me that changes in a market like this is taking risk off and on much more frequently while avoiding day trading if it applies to you. But you're going to get 10, 20, 15, 20, 25% profit days much more frequently, like the literal next day after you place the trade. So I think that's it for me. What about you?
Yeah, I mean, I think in general, when volatility is low, it's just harder to find opportunities. I think the best thing about the pop in volatility is just the fact that, you're going to have no shortage of directional trades or short premium trades. I mean, that's I think the positive side of the spin of high volatility and big moves in price action. But I agree with the management stuff. Like it's, you become a little bit, things move a lot faster because volatility is higher. And so everything speeds up. It's hard to wait 21 days on something that moves 10 or 15, 20% in a day or two. That's typically not the case when volatility is super low. It's a grind.
Yep.
So I would say being more nimble.
Yep, totally. Let's see. I think we already answered that short put question. Yep. Thinking about a bullish QQQ trade in June, buy the 400 put, sell the 320 put, and the 390 put for a credit of $1.96. What are your thoughts?
400. Okay.
So a 1 by 2 by a 1 by 1 by 1. Buy the 400, sell the 320 and 390. So that isn't a bullish trade, I would say. I mean, there's no risk to the upside, but your max profit is certainly to the downside.
Are you going like quarterlies maybe? Yeah. Okay. Sorry, because there was some sort of, I remember they had the special dividend. I think it was Costco, right?
Something, yeah. This is so disgusting to look at.
Yeah, no, not the trade that you sent in. Whoever sent that in, just the strikes.
The strikes.
The 78 cent.
Yeah. So yeah, I guess it's the quarterly. It must be the quarterly.
Yeah. Which I don't hate the idea of going to the quarterly too, just for that reason.
Yeah. I like the trade. If you can hold this trade naked, I like this trade. I'm not seeing a credit though. Maybe you're in July.
400, 390, 320. $1.40 credit.
Yeah, that's in July.
No, I'm in June. I'm June 30th.
Okay, I'm looking at something else. But yeah, I like the idea. It's a 97% pop trade simply because your break even is at 300, just above 300. You're collecting $1.90. But if you're looking for a true bullish trade, just selling the 400 put is more bullish. Like the max profit here is to the downside.
Yeah.
In between your short strikes. So this is a neutral to bearish trade.
Yeah. And
but
go on.
If you're fine with taking the risk, then yeah, I like it. You're able to do this because of the volatility.
Yeah, it's a lot of capital to tie up for, maybe 50 cents.
Yeah.
For 80 days. I mean, like it's hard to play. You're talking about a 40% down move.
Yeah.
From here, I mean, I get it, but I don't know if I want to. Like, if I was really thinking that was going to happen, I would do a buy puts or put diagonals or at the money put spread, something like that, where you'll make a lot more.
Mm-hmm.
I don't think the dollar is worth the time, but that's me. If you got a lot of capital, maybe.
Yeah. Paul. Robert, do we ever trade XBI? We do not. I haven't. I don't know about you.
Yeah, it's been a while. I mean, it's certainly not one of like my top 100.
Yeah.
Markets aren't horrible. Biotechs in general. I mean, I would rather trade this than a single name biotech if you're trying to trade those sort of stocks, but those stocks are just so wild.
Yeah. When someone says SPY options are expensive, how do they know that? I'm pretty new to options.
VIX.
Yep, the VIX, and really like specific to the underlying, you can just look at the IV rank.
Yeah.
So in SPY, IV rank of 70, this tells you that the current implied volatility of the near-term cycles around 30 days is on the higher end. So selling premium opens up the doors here. But again, you have to look at the individual IV rank and also look at the IV. So like in GLD, IV rank's at 100, but the implied volatility in May and June is only 27%. So even with an IV rank of 100, I would still rather do a diagonal spread in GLD than sell naked premium, personally.
Yes. And it's all relative. So when we say it's expensive, it can certainly get more expensive or it can get cheaper. I mean, that's something that is unknown. But a lot of people will talk about it in reference to, and this goes to IV rank and VIX. A month ago, these options were a lot cheaper, much closer at the money. Meaning you can get, it's more expensive to speculate to the upside or hedge to the downside right now with this volatility than it was a month ago. And, that's obviously not a shock to anybody just given the move we've seen, but it's just a reflection of, it's a way of saying premium is high right now.
Yeah.
Is what IVR is.
This morning, Bat seemed to be saying he doesn't like selling puts in a cash secured account. As someone who can't trade super actively, I like the wheel strategy, but should I move to defined strats? That's probably more about just the capital efficiency. Yeah. So like if you're in a cash secured account and you sell a naked put, you have to put up the capital as if that product were to go to zero, which isn't practical in most cases. So, and also you can go significantly out of the money and just buy an option, a put option for 5 cents, and you will remove your max loss risk. You will remove that buying power requirement, and it's likely not even going to come into play, but it frees up your capital efficiency and makes that trade more capital efficient.
Yeah, that's exactly the point. I mean, I just pulled up May here, and if you're selling, at the money puts in SPY, you buy the 300 strike put it costs you 30 cents, but saves you, 30 grand.
Yep.
In buying power.
Killian has the Apple put spread 210, 205 in May.
Getting bailed out today.
Yeah, getting bailed out for sure. It's still trading at a 50-50 shot because you're right there. Mm-hmm. Thinking of adding a call spread. Should I add it at the price in strike? I wouldn't. So your put spread here, your put spread is right at the money-ish. Like you need another 10-point move, but it's well within the expected move, so the probability is there. If you sell the 210, 215 call spread, you turn this 50-50 shot into a 9% shot. Or less actually, because your credit would be like $2. So let's call it a 5% shot. And that's simply because you now have risk on both sides, and you need Apple to be exactly at 210 at expiration versus anywhere above 210 at expiration.
Yeah.
With that said, if you wanted to add a little premium,
it's too tight.
It's too tight.
With volatility this high, I think I would. Go on, my
sorry.
bad. No, I keep interrupting you.
It's okay.
I'm a little all over.
I was just saying, like, even if you go further out of the money, like the 225, 230, you're only picking up 70 cents. If you go to the 230, 235, you're picking up 50 cents and you're adding $5 of risk and narrowing your range. So it's just like the premium that you get for doing it, I don't think right now offsets your reduction in probability of profit.
If you're bullish, I think you want to just lighten up some of the directional exposure, I think you just close the $5 wide and put out a little bit more risk on an out of the money put spread. Like I just pulled up the 180, 170 put spread, which is $10 wide. I know it'll use a little bit more buying power, but you got to capture some of this volatility and some of this move. And so this adjustment, it costs you $90 or so to do this. But if you get, if we stay here, or even if we drift a little bit lower, we drift a little bit higher, if we don't go above 210, you're going to make a lot more back on this new put spread that you're selling at $1.80-ish than you would on this in the money spread that's going to be in the money. You're going to lose $200 on that. So this sort of adjustment, like if you're bullish but not super bullish, if you think we're going to go back to 200 or 205, or maybe we could go a little bit lower, this adjustment's going to save you a lot. It's going to do better for you than the 30-cent call spread that you sell on the call side, on the upside.
Yeah. Last one, Amazon Iron Condor in May, 21 days out exactly, right after the earnings projected move. 170, 175, 190, 195. I'm still not positive. I worry the market will move in one direction or another. What can I do to give myself space? This is a tough one because you're in the projected earnings cycle. Yeah. So that's why the premium is so high, and it's likely not going to move, and your strikes are inside the expected move. So I don't mind just closing this for a small loss and waiting for earnings, maybe deploy a new one, or moving it to June and going to much wider strikes.
Yeah, you got to widen out.
Yeah, because it's just once you get inside the expected move, it becomes like a butterfly.
Yeah.
That's it.
Cool.
We're out of time. Thanks for tuning in. If you got any more questions, you can always find us on the Twitters. I'm at Trader Mikey B there. Nick is at Trader Nicky Bat. Stay tuned though. We got plenty more content on the YouTube channel as well as tastylive.com. I've got the Cherry Picks newsletter pinned to the top of the YouTube chat. I've got the Tasty Crypto newsletter in there as well. So go sign up for those, totally free. But yeah, stay tuned. We got plenty more content coming your way. We'll be back same time, same place, 11 a.m. Central on Monday. We'll see you then. Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. Yeah, so that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back. It is Friday, April 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, what a year it's been this week.
Yeah, I mean, listen, now we make our resolutions and make sure to go to the gym.
I have a rule that whenever the market's down by more than 1%, it's leg day. My legs are tired. Please stop. Please make it stop.
You gotta come over to the calisthenics dark side. We don't have good days. We're just sore constantly.
Well, right now we're getting beat up in the bond market, although that we are off the lows here. We had another run last night that was absolutely incredible. We are challenging the theory in real time to see if the Trump put exists, as one might have theorized. We do get a bounce off the lows in bonds. Stocks are able to move to the upside. There are interesting headlines making their way through the market. We'll talk about all those and more here as we wrap up this trading week, of course. Ilya, as we turn to the slides here, it's pretty clear right now that the only way you're going to get any sort of relief in this market is through the bonds. Bonds are the boss right now.
Yes.
Plain and simple. There's really no other way to look at it.
Yeah, I mean, I think everybody is collectively looking at that because I think that was probably the most bewildering move for everybody this week. I think last week, even with all of its fireworks and all of its sharpness in the various asset classes, they did seem to line up in a way that made sense. You had risk aversion. You had expectations for recession driving down interest rates. The dollar was weakening. It all kind of looked like it was an orderly arrangement. It was very sharp, but even the S&P in all of its insane volatility was keeping to big technical levels. If you were to look at a weekly chart of the S&P and go kind of just put horizontal lines across it where you think the big inflection points are, things were holding. This week, I think the bonds were perhaps the most confounding of all the moves because, of course, Monday was that massive, massive sell-off, and it's been nowhere but down since. We're kind of a little bit holding up today. In my mind,
reversal. It's an incredible reversal today.
It really is. And in my mind, it all sort of drops down to just a massive upswell in term premium. Because if you look at the 2-year, it's not doing that. And the 10-year is doing it, but less of it. And the 30-year is doing the most of it. And so you just look across the curve and you go, people just priced in a massive, we don't know what's going on wedge into the curve. If you look at the OFR financial stress indicator, you can see that there's a ton of volatility now built into measures of financial stress. If you look at the term premium estimates, for example, from the New York Fed, they've been surging since the beginning of the week. All of this just looks like uncertainty. And so the bond then becomes an avatar for what is essentially sovereign risk, if you think about it in sort of simple terms.
Yeah.
And if sovereign risk unclenches, so too does everything else. So if the bond starts to rally, you know that a sense of relief is coming. That's probably your number one bogey at the moment. If you want to see where the market's mood is, it's not the stock market you're looking at. You might have before been looking at the S&P. No, you're looking at the long bond here.
ZB certainly in focus today. We're going to talk about that near 2-point bounce off the lows. We haven't done this in a little while, but with the markets in a relatively calmer state, perhaps we can actually look to the week ahead, right? We've gone through a period of price discovery and adjustment, so maybe, just maybe, some of these data points carry some weight, although, you know, Ilya, if we look at the calendar for the first part of the week, including some data that's released by China over the weekend, we go into the second half of the week, you're going to see central bank rate decisions that obviously carry some importance.
Sure.
But I can't help but think that the actual numbers here, the inflation data, the retail sales, all of this is pre-Liberation Day. Why do we care about the numbers in the rearview mirror? Should we?
I think so. Because I think we know that what the market saw in Liberation Day was a prolonging of uncertainty. And that was sort of the key. the market started selling off in February because the uncertainty was starting to show up in business confidence and consumer confidence. And boy, did it show up in consumer confidence when it was published today. My God. Numbers were just absolutely hysterical. I mean, people are very, very upset.
That's all still pre-liberation
and
day.
That's all still pre-liberation day, right? So all of this is still uncertainty. This is that survey data that Powell's been talking about. We've been talking about the PMIs, the conference board numbers, the University of Michigan numbers updated today to levels of utter panic. All of that is pre-liberation day, and then liberation day gives you a schedule of 150 different rates and tells you, so if you wanted a forecastable on-ramp for these tariffs, lots of luck to you, because these are going to be bilateral negotiations. They're going to take who knows how long and land who knows where and have who knows how many reversals along the way. Just look at the Mexico and Canada situation and see how this can volley back and forth, sometimes on a day-to-day basis. So the markets didn't get their certainty. I think it's important to look at this data because it establishes for you a baseline to say, well, if the stuff is bad, then where we are now is worse. And if the stuff is good, which seems unlikely, but if the stuff is good, then what you have is a little bit more of a cushion to what's happening currently. Because obviously whatever's happening currently is very significantly stressing markets. Just look at the S&P, look at the bond, pick an asset. Obviously the markets are having a hard time with this. This is obvious. This is visible with the naked eye. And so you don't need to know anything. You just look at a chart of the S&P for the past year and go, which part of this stands out? Which one of these candles is not like the others?
Do you find that the ECB meeting at least could be instructive? There's a lot of attention going into the euro right now.
Bank of Canada one too.
Which one do you care more about?
Oh, certainly the ECB. The euro is an absolute screamer. It is on the verge of taking out what has been a range that's contained it for quite a long time, actually. We're currently trading above the highs from July 2023 on spot. If we can take that out, we are in a different regime for the euro. We're going back to levels that haven't been touched since early 2022. And the pathway there starts to open up like 116, 120, 124. So massive, massive space, a whole other situation. And all we really need to hear from the ECB is, probably don't need to cut rates very much next year, because this defense spending is moving through, and that's going to be fiscal stimulus. It'll be an uplift on inflation. We're probably done this year, or some indication thereof. And the euro can be on a really massive move here.
We peek into the stock market right now. Stocks are showing some more stability here today. What's fascinating about the
anchoring a little bit, yeah.
They are anchoring a little bit. They're holding up against their 1 week moving average. If we look at SPX through the end of the day, they're still 65 points, potentially 64 and a half here through the end of the session. So we're talking about the possibility of a move up to 5,400. You're talking about a move that could see it drop back down to, 5265, 5260 or so. So there's still a lot of trading to go in today's session. We entered the day expecting about 158 points through the end of the close if you looked at the 0-day straddle in SPX. So turning our attention back to the charts right now, certainly we have a little bit of stability and lift here. One of the items of news that was apparently leaked out this morning from both the White House and from the Chinese government is that Trump officials have been poking Chinese officials to get Xi Jinping to reach out to the Trump administration, to Trump himself, in order to start the process of de-escalating the trade war. Why? From Trump's purview, China is what caused the escalation, because Trump announced broad-based tariffs against everyone for myriad reasons. China decided to retaliate. And we go tit for tat, and here's where we are ultimately. But Xi thus far
we
has
get
not.
we'll get an interesting example from the EU, by the way, which also retaliated and now has quickly walked it back.
You know, we talked about this with Victor the other night, that there needs to be some sort of way for Trump to declare victory, for lack of a better phrase. He needs to find a way to save face throughout all of this. And you could see the attempt, obviously, 2 days ago when he says, oh, you know, all these countries didn't retaliate. They're willing to work with us, clearly. We're dropping the tariffs down, right? So trying to save face there. Fine. That's okay. Right? The market liked that. The market wants to see a bigger off-ramp with China, though. Because if we are really doing this, then we are talking about a dramatic decline in growth. And at these levels, right, these tariff levels, once you go past a certain threshold, you're killing 95% plus of trade either way. So tariffs at 100% are materially no different than they are at 150 or 200 or 300%. It's effectively an embargo against the country.
Might as well call them bazillion%. It doesn't really matter.
Right, exactly. Like it's just a number at that point, because trade is dead once you get past a certain threshold.
Yeah.
So there's like a little bit of a leak out here in the market today that the Trump administration is trying to find an off-ramp for the China tariffs. And even if they go down to 75%, right, then you're going back in a direction where the market says, okay, this is on a path to finding some solution. But we're still not out of the woods here. What's happening in the bond market is far more important than anything going on in the stock market. Bonds are proving themselves to be the boss. The vigilantes spoke overnight again, but I think outside of today's minor equity bounce, Celia, we are still very much in a market where it looks like the world is selling America when and where it can. Stocks, bonds, currencies.
Yeah. And I mean, I think we talked about this sort of in the context of the bond. If there is tremendous amounts of risk premium, essentially, because that's what really term premium is. It's duration risk. If a ton of duration risk is getting input into U.S. government debt, what is that telling you? I mean, consider just a regular person who had a W-2 job, let's say a month ago, and now has become unemployed and has walked into a car dealership to buy a car. Obviously, that car dealership is going to say, well, this person has a long history of employment but is not employed currently. We're going to reflect that in the terms of the lending that we offer this person, because we don't know if this person is going to find another job, when, what the income is going to be, right? Those adjustments are made not because they don't think this person can qualify for any amount of credit, but because they're going to adjust for uncertainty risk and compensate themselves. This is what we're seeing with the U.S. currently across the full range of assets. If you think the veracity of the borrower at its base has become less credible, not that you're going to abandon dollars or jettison U.S. debt or some other nonsense like that. There's just no appetite for any of it. I think Dylan said it perfectly on the show yesterday. The U.S. is too big to fail. Everybody's bought in, including adversaries, because they also have to operate in the dollarized global trading system, even if we're actively trying to undermine our own creation. Nevertheless, people have to do business. And so you have a situation here where basically anything USD denominated has become riskier and more clouded by uncertainty, and where people can move money elsewhere, they are. Just look at the euro.
I remember a few years ago when the Turkish lira was melting down, when Turkish yields were going up, when Turkish equities were going down.
Yeah.
I called it an emerging markets, just a classic emerging market currency crisis.
Sure.
Right?
Sure.
If you look at the U.S. in isolation, the way that our market's behaving right now, are behaving in such a manner.
Yeah.
That said, you talk about a technically driven market here. Maybe, just maybe, in a world where we can't rely on, quantitative studies, you can't rely on anything from the Pax Americana era. You have to rely on from where we are heading. The technicals here are showing both ES and NQ a potential base with which you could work around. In the NASDAQ, it's basically 18,000. In the S&P 500, it's sitting a little bit lower, right around 5235 or so. It seems to have been an important pivot point here over the course of the week with our gap.
Well, and look at how these levels are holding. For all the volatility, the technical levels are holding.
Right.
In sort of the obvious textbook way, like first chapter, any technical analysis book is going to give you a whole spiel on support and resistance. And it's going to show you a bunch of horizontal lines across the chart and go, well, look here. If you just eyeball it with some horizontal lines, you can see it with the naked eye. Well, that's exactly the kind of basic technical analysis that we're seeing really work here.
It is working right now, 73.3. This is the area with which to operate around. I think the same thing in the NASDAQ, 18K. For example, if we went outside 49 days here and we were to look at something right around the recent swing levels, 18K, if you wanted to keep it real tight, you could square up, a little under 2 to 1, 2.5 to 1 risk to reward on a potential trade. 42. Let's go. That's the weekly expiry. Let's go out to 49. I want to do end of month. 250 points wide there. It's 58% probability of profit. Not the best, but it's a tight level to work around, right? If the market declines 600 points, you're basically out. That's 3%. It's a little bit of a risk, but it's, again, something to try to at least work around right now.
Well, if you look at the Russell, what's different about it versus NASDAQ and S&P is that same level has broken. And today, we're holding the break.
Yes, decidedly weaker. Only up by 0.11%, whereas S&P and the NASDAQ are still hovering up by around 1.
So I am short this really because it broke that internal range pivot. And I am not touching NASDAQ or the S&P because they have not. They held it. And so I'm looking at this and saying, okay, if we're going to recession risk as the dominant narrative, we're sort of past the bombshell announcements phase and into the has certainty been at all increased? No. Okay, let's get back to the orderly sell-off from mid-February through to Liberation Day before the craziness. Let's get back to kind of orderly recession is incoming type of selling. The Russell, obviously, as a collection of companies vulnerable to the cycle and not as uplifted by heady sentiment like, let's say, NASDAQ, and to some extent, of course, the S&P, because there's a big tech component there. This looks compelling. It seems to make sense why it's weaker. So I'm nibbling a little bit long on put verticals here from about a day ago, and we'll see. But the other ones, to your point, aren't ready, but aren't convincingly set for the upside. They just have a bunch of vol in them. And so if you're going to do anything, then maybe indeed some sort of neutral strategy that tries to extract vol is about the best you can hope for. You just have to keep in mind that you're going into the weekend here. You would be originating on a Friday, and obviously God knows what gets announced over the weekend as markets close and everybody collectively starts the rush of policymaking, because it's not just Washington, it's everybody across the world that's going to now say, right, now that the markets are closed, let's try to hammer out some sort of nice headlines for the open on Sunday and unclench this thing. So just be careful, because it is no guarantee whatsoever that at the open on Sunday, vol is going to contract.
You're saying that news could continue to come in. I just saw this red headline come across my screen. An alert from U.S. Customs and Border Protection on Friday notified users of a glitch in the system that's used to exempt freights from tariffs, including shipments from China that were already on the water at the time of this week's whipsaw on tariff policies. The alert explained that U.S. Customs discovered that the entry code for U.S. shippers to use to have their freight exempted is not working. In the alert, U.S. Customs advises filers to transmit cargo release separately. Here's the kicker. Normally, when a U.S. importer pays their freight, they file both the cargo release forms and their financial papers so that they can pay for their cargo. To keep the cargo moving, Customs is advising importers to file the cargo release form now and file the financial form later, which for the moment means that tariffs this week have not been collected by the U.S. government.
you not entertained?
NASDAQ up by 0.99% right now, 75 IVR. It's holding its ground. The Russell
Gold is up 10 points.
Gold continues to surge. Oh, Gilia. This is it's almost too funny. Were it not actually happening. Look,
there's a real old Soviet joke here where the question comes in. So what's the weather today? Well, the pre-announced kind.
The downtrend that's in place here in the NASDAQ since we turned lower in February. This is off the yearly highs for what it's worth. You can see why the pre-tariff levels, pre-Liberation Day levels that we cut through where we peaked earlier this week before we pulled back are so important. If you find yourself trading north of 19,500, you start to clear out the former big swing support. You clear the downtrend here, and you have to then treat this market as a market that's going back up, regardless of what's happening in the background, at least in the short term. There are bear market rallies. They've gone double digits in many cases.
We've seen them this week with blistering effect, as it were.
Bonds calming down is obviously helping equities here. They're having zero fun today. Trading, it's fun, but if you're a bond itself, it's been a sea of red. We are off the lows here, and what a remarkable turn we've had here off the lows. Once again, we started to dip into the mid 111s. Earlier today, hit a low of 111 and 21 ticks. So we're nearly 2 points higher now at 113 and 5 ticks.
Looks like we're not the only ones that believe there's a Trump put down there.
Maybe it is, maybe it isn't. I've seen some very smart people say people who are talking about the Trump put are absolute idiots, which I find personally offensive. But I also think that, this is not a normal market. So to declare that there's any formal line in the sand is a very risky exercise.
Of course it is. Of course it is, yes. To assume that something's there, you're absolutely right. No, that would be crazy.
No, and is it are they bond vigilantes? I mean, that's a fun term that people like to throw around. I don't use that in any sort of serious fashion. Right. I'm tweeting out things like, thank your local trader for helping save the market. We're allowed to have some fun with some folks.
If you can't have gallows humor in this situation, when are you supposed to have it?
Exactly. Like, lay it up, Francis. So the huge IVRs, though. There have been a few people who have been talking to, in the chat and on Twitter who've been saying, like, anytime there's a dip down below 112, it's like a generational opportunity to sell puts. And to a certain extent, I think that's the right approach, at least for now, because the vol is so high. And what's the typical Tasty methodology? Vol spikes. We have technical support nearby. You sell a defined risk put spread right around there. Obviously, at 113, it's a different story right now. But if we start to see these dips back in that area, as long as we hold the yearly low, you have a place with which you can place some trades around if you want to operate on the long delta side of the equation. If you're up at 116 or 117, putting on that short put spread position against the lows is very difficult to justify. Not nearly enough gain for the risk that you're taking. But when you see those 112 handles right now, first blush, the market seems like, as we said on overtime yesterday, it wants to challenge this Trump put level, the 4.5% in the 10-year, the 5% in the 30-year yield.
Yeah.
So again, we're not marrying anything this week. Everything is speed dating here. Even if you take a 45 DTE position, if it turns against you, think your lucky stripes that you have intrinsic value in the position still, and you're not doing a 0 DTE or 1 DTE, where just by the function
which is
of
exactly
timing,
why you put duration in there. You're absolutely right. I mean, my 1-day ride in the stock market this week, 2-day ride, I sold premium on Monday and got out at the end of the rally. Didn't catch all of it, but maybe caught about 7 of the 9% in the S&P. That was a 43 DTE, I want to say, or 41 DTE spread, but I only held it for 2 days. Didn't really intend to hold it to the end or even into the 21-day peak in the decay curve, because why? But I'm just trying to pad myself with deltas that are further away from 1.
It makes a good deal of sense. One thing that's interesting, Mohamed El-Arian today on CNBC said that the Fed earlier this week was close to intervening to provide a liquidity backstop to Treasury markets because of some of the basis trade blowups that we've seen happening overseas. There was talk the other night that it was China selling down U.S. Treasuries in order to effectively push up the rate differential between the U.S. and the yuan, or rather the dollar and the yuan?
It's an interesting conversation, actually, because you'd think the dollar would be cratering if there was if that was happening, and the flip side, and Jim Bianco tweeted about this, and Victor brought that to my attention because I was telling him on the show, I'm like, listen, if there was an exodus from U.S. dollar assets for real and China was selling for real, the dollar would have cratered when the bond move occurred, and it didn't. It's only sort of moved there since then, and the bonds have actually been anchoring as the dollar has sold off harder. That doesn't seem to line up. And Jim Bianco pointed out the exact same thing. Thinking about it, it might make sense for China to, in a sense, sterilize their intervention because, of course, they depend on the yuan not surging against the U.S. dollar. They're still an export-led type of system. And so they wouldn't necessarily repatriate into dollars. They might have just sold and kept the dollars and stuffed them in a money market account or various other sort of versions of putting them under the mattress. And maybe now we're seeing that unwind a little, but I find it difficult to believe that if China actually did that, markets wouldn't have sniffed that out and shellacked the dollar anyway. They didn't. And so the dollar move happened later, days later. And so maybe China is an element here, but I'm not sure it's the defining.
I don't think it is either. Not right now.
Yeah.
No, and listen, the reporting that you've seen overseas, we've heard this talk around the desk that there were Japanese funds blowing up.
Yeah.
It's also out in the public right now, so it's not exactly inside information. Where yen is holding up right now, 109 and 24 ticks, uptrend off the lows this year. Look, we talk about there being a line in the sand right around 110. We couldn't get through there the other day. Today, we're doing that. Interesting that there's a little bit more pressure, relative weakness in yen catching up to where ZB's been. I have a directional neutral trade on here right now, which volatility expanding and prices moving lower is not exactly helping. So I'm not thrilled or keen on it, but as is the case, right, if we're seeing dips here, we're challenging the Trump put idea right now in real time. You can head over the 10-year yield. Maybe this theory is just a nice little piece of narrative, talking point, nothing more. But through 4-5, things start to get a little bit stickier. You start to really get some elevation and momentum. And if the reporting is accurate and Trump was watching the bond market the other night like the rest of us were, then this is a place that may get him to reconsider things. Even Jamie Dimon today, who he apparently paid attention to when he was on Maria Bartiromo's show on Fox Business News the other morning, Jamie Dimon said he's expecting a kerfuffle in the Treasury market. CEO of America's most important bank. It's not something you want to hear from him.
And in a sense, it's already backward looking because obviously we've seen a kerfuffle.
This is a kerfuffle. Yes.
This I believe this counts.
It's the worst. It's the worst weekly loss. It's the worst weekly loss for the long end of the curve since 1982.
The president said things were getting yippy. A little yippy is what he said. So
seems to track.
I believe kerfuffle is what happens when things get a little yippy. So
fair.
All technical terms that make sense. But yes, the bond market is obviously showing a lot of signs of stress. And again, to me, if you want to distill it down, yes, there's 1,001 theories for this catalyst or that. It's not going to be this catalyst or that. It's going to be the vibe that then creates all kinds of symptoms. And the vibe is surging term premium. People are uncertain, and that's having all manner of knock-on consequences, be it some failed funds perhaps in Japan or some holders of treasuries overseas getting iffy.
White House says that Treasury Secretary Besson is keeping a very close eye on the bond market. Just went across the news wires a minute ago.
Who over there told them how job owning works? Was it Besson? He would know.
Okay, so kind of you're seeing the market here, right? The 10-year is approaching 4.5%. 30 years are melting off a little bit. You're getting comments from the White House about, they're trying to defend this. They're trying to use jawboning to get the market to back off the higher yields. What they are missing is the fact that it's their policies that are driving the yields higher. And so we can try to jawbone this all we want. You're going to have to de-escalate with China. That's the only off-ramp.
And how poetic, because of course the story of China in the past 2 years has been that jawboning without concrete action doesn't work. Because everything that China has done to try to talk consumers and businesses over there into restarting the economy, all of it has failed. They've put forward all kinds of stimulus programs and these incentives and those incentives, but no demand is going through the economy still because they're waiting for the government to actually act, to put some skin in the game, to spend their own money, to boost demand. And how poetic that this administration is trying to jawbone markets, but that window has probably closed. You need to have credibility with markets. And I'm not suggesting the administration doesn't have credibility. I'm suggesting they don't currently have credibility with markets. Because clearly the markets are very upset at their actions, and clearly they keep moving in a way that says, we don't trust you with your hands on the wheel. Show us something that we can take home. Show us something we can give you some props for. Sort of like the announcement this week where, clearly sentiment unclenched, where the appearance of the put in the bond market showed up and the market said, see, there you go. Do that. And so you can't jawbone if the market doesn't believe you. You need to start doing things so the market believes you because it wants to. The market wants to believe the administration. It wants to go up.
Boston Fed President Collins says that the Federal Reserve is absolutely ready to help stabilize markets if needed, if the conditions become disorderly. So, well, that sets up a really interesting set of incentives, right? If you want the Fed to step in, it sounds like we need a little bit more trouble in the bond market.
Show me disorderly.
It's like, we're not disorderly right now. We're getting there. But that seems
funny because the bond market hears something like that, and you know this, when policy officials speak indelicately in a way that challenges the markets to put up, markets' usual response is, right then, hold my beer.
It's like Commerce Secretary Lutnick saying they want to help the economy explode.
Okay. All right.
Please use different words.
Markets love stuff like this. They absolutely love to be goaded and to say, oh, you don't think we can go there? Okay. Let's see.
All of this conversation, of course, is good for gold.
Yes. Very annoyed. Very annoyed.
I'm not.
I'm sure not.
I'm sure
not. But I'm annoyed because I am not long, having been bullish since the beginning of the year and have basically missed the boat on about 75%, maybe 70% of this move. And now it seems to be getting a little yippy, to use the president's term.
It's an interesting dynamic now. Gold in the GCM5 and the GCQ5 contracts surged up to fresh all-time highs here today. It's a dramatic turnaround for gold prices, which just at the start of this week, we're dipping below 3,000.
Yes.
We're up nearly 9% this week from the lows in gold prices. For those that have been playing along at home, we saw that Morningstar candlestick pattern earlier this session, right up against the uptrend from the yearly uptrend, so to speak. And it carried us back through former resistance, which one might argue would be support. It was kind of a all clear signal that maybe the rally was going to begin again. Prior to Liberation Day, we had rolled out our call exposure here in gold to further out of the money with more duration. Just keeping in mind that if we went into some sort of crazy event. How could you model this out? At least we had something in our pocket longer term. It was tough the first few days, but that's why you kind of let things play out. So right now, gold is doing what one might hope it would do. Rallying with volatility expanding makes those calls feel a little bit better. I would not fade this. I've been saying this all year long, though, right?
No, you can't.
Like there's a specific behavior and cadence to how products act under certain circumstances. And the circumstances that we've been in is that gold tends to rally with volatility. So if you're selling calls in gold or in silver, you better not be doing it when volatility is operating from a low starting point. Now, 105.8 IVR is all well and good. If you're going to try to capture and harvest the volatility here and you're not trading it directionally, I think it's just best to go directionally neutral on it, not just to try to sell upside calls, because those are expensive and they are getting tagged right now. Go with the flow or fade the vol. Just don't fade the directional move.
Yeah, I mean, I think one of the more interesting things here, right, is that gold is not doing this because more rate cuts are going into the outlook. It's not doing this because yields are moving down. They're not. We're actually seeing bonds and gold move in very divergent ways. Yields and gold are going up at the same time, and in explosive fashion. This is what I've been kind of describing as the gold war trade. The thing that happens when markets reflexively just buy gold because they don't have any better ideas. When there is so much uncertainty that you go, you know what, I'm just going to park a bunch of capital in here because maybe in the event that we skate closer to Armageddon than anybody's comfortable with, there'll be a panic bid here. And we do have a panic bid. So to me, the rise in term premium in the bonds and the blanket selling of dollar assets tied into it is really what the catalyst is here for gold. On the one hand, obviously, it's been incredibly successful if you've been long. On the other hand, any kind of unclenching of this risk, the kind of thing that might, for example, get the bonds to go higher, counterintuitively might also start deflating gold. Not because the longer-term catalysts for gold have changed. We are still looking at a big rate cut cycle. We are still looking at recession risk. We are still looking at a dollar that's likely to weaken against that backdrop and yields that are likely to come in, all of which is structurally good for gold. But to the extent that it is not a creature of those things here and is more a creature of the term premium uncertainty, you could have a real flush for reasons that don't readily make sense because the structural factors would be gold supportive under almost any other circumstances. It's sort of like when you see gold surge on the breakout of the war in Ukraine and then fall back apart even though the war is still ongoing. Nothing has changed. But that initial uncertainty of, I have no clue, the fog is thick. One thing I can do is buy gold and hope for the best. If the fog settles and you see a little bit through, bonds start to unclench, maybe the dollar stops going down quite so fast, you might actually see gold take that as a negative cue, as a temporary development.
Mm-hmm.
And so it's important, I think, given the character of this rally, to be cautious after all of this, after all of this rallying. It could come in and retrace on you for reasons that are unconventional.
Everyone knows the gold-silver ratio has blown out to historic levels that are typically only seen during times of war. Silver has some catching up to do, of course, up 4.07% here today, back to $32 an ounce.
Over $100 the ratio here.
That's crazy.
Almost 101.
You don't really see that often.
No.
We've retraced half the silver. I've been holding on long this whole time, taking a punch after punch in the face last week. Mm-hmm. But that's, again, why at the end of March we rolled. I'm not thrilled that I wrote it down. Of course, much would have preferred to have been out entirely and pick it up fresh at 28 or 29. Alas, this is where we are, so I'm retaining my long metals exposure here. It seems prudent. If the world that we grew up in and loved, Ilya, is dead, gold and silver seem like nice intermediaries to have.
Yes. May
Being
2020 was the last time that the gold-silver ratio was anywhere here. If anybody can remember, what was going on in May 2020? Oh, yes, the entire world economy was shut off.
Right. Copper here bounces back too. I think it's easy to say in hindsight that this is kind of confirmation for one of our long-standing theories, just perhaps on an accelerated timeline. We've talked about what happens if Russia sanctions end. Will all that money that's been locked away stay in the Western financial system, or do we think they'll move it elsewhere? And you don't have many other options to move it elsewhere. Russia doesn't have enough trade with China to justify keeping it all in yuan. It certainly doesn't want to just keep it in ruble. So it's going to have to put into something else to diversify its reserves when that money is repatriated. And in turn, it probably means that hard assets like gold, copper, silver would be in the purview. So now that we've gone away from like the liquidation phase of this cycle where we were when everything that wasn't nailed down was getting sold a few sessions back, you're now seeing that the things bouncing back the hardest are the hard metal commodities. You're getting the metals ripping. Copper is up, what, 12% off the lows this week? So is gold. So is silver. There's a clear, now that the shock has settled, we've long said, if you look through historical crises in markets, gold and silver don't do well initially because people are raising capital. But once the capital's been raised and it looks like, okay, we kind of have a direction, we know where policymakers are going with this, gold and silver tend to outperform everything else. That's right. Maybe we've done that first part where we've done the flush. We've reset the table. Now that capital's coming back in, it's going to help reinforce this longer-term uptrend that we've been riding here.
It could be. I would love a pullback. I want to be long all kinds of metals exposure, and gold is really the one that I'm most interested in. I still don't love copper as a trading vehicle. I like everything that it shows as an indicator. It's incredibly useful to look at. But if you're trying to manage risk in this volatility especially, I mean, I don't like copper as a trading vehicle in normal times. In these times, I mean, the sell-offs are just absolutely shocking. But
sorry to interrupt you. There's been a decent-sized turn here in equity markets.
Oh, here we go.
Collins' comments come in saying the Fed is going to be willing to provide help.
It's what the markets wanted.
Up 1.76% here in ES. The NASDAQ is now at 1.63%. Even the Russell, which was the laggard, up over 1% here. So you have in the past hour, right, we read off comments from the White House saying that the Treasury is eyeing the bond market again.
Yeah.
We have comments now from the Fed saying that they're here to stand by and provide liquidity if the market demands it. Bonds here are getting a little bit of a bounce. This is a 5-minute chart. So over the past 15 minutes, right, up from under 113, 112.26. We're now back up half a point. Quick rally there playing out.
Yeah.
And same thing with stocks. NASDAQ here, which was down, was up a little under 1%. Now up at session highs once more here. So Ilya, there's you got to pay attention to these headlines. We talk about the market, how if you looked at the straddles here for the S&P 500, even through the end of the day, it could go to 5,400. It could go back down to 5,260 or so. It seems like that we did hit 5,400 again on these remarks. It's just the situation we're in right now. You have to anticipate there are going to be big swings very quickly if you're scalping in and out of these guys right now. And so there's a lot of convexity that can be working against you if you're on the wrong side of the trade.
Yeah. I mean, this is why you don't, I think, get cavalier putting on positions now going into the weekend. Look at the jumpiness of markets around these headlines. Imagine how many headlines are going to come out over the weekend. All kinds of members of the administration will no doubt be on all the weekend shows. There'll be chatter galore. Europe's going to say all manner of things. We're going to say all manner of things. Officials everywhere. Von der Leyen was out there today out of Europe. there's going to be a lot of weekend risk here. And so how this thing opens, I mean, I'm looking forward to first call on Sunday at the futures open and as APAC markets wake up, because there's going to be a bunch of stuff that happens over the weekend while markets are closed. It behooves us to proceed carefully and to size down and to really wait for confirmation, because what kind of gap there is and which direction that gap is, who's to say?
I couldn't help notice a little bit of gentle trolling from the Financial Times in the link to their story about the Fed being willing to provide liquidity. Now, if you go to the story from their website, it geotags you with, buy a subscription for $1 per month. But if you click on the link they tweeted out, the subscription is automatically set to $1 Canadian. They just don't want to accept the greenback right now, Ellie. It's too darn volatile. Why would you want to accept a depreciating currency, right? Oh, gosh. Energy's calming down here in the market. We see crude oil is now up by 2.6%. Some of that rally is obviously coming on the back of these comments from both the White House regarding eyeing the bond market and here the Fed telling us they're willing to provide support. Oil up nearly 1% since the start of the year. This is a 1-minute chart. So, yeah, we're up about 1% here since the top of the hour. We take a step back and look at that daily. Likewise, we talk about being in getting close to a supply destruction zone in the market as you dip into the lower 50s. I'm hoping that we had another pullback here. Wednesday may have been it. I thought we might get a little bit more where we can get a dip down to like 56 or 57 to start thinking about selling some put spreads. Maybe the turn's coming. We could get above the 1-week moving average on a closing basis for the first time since April 2nd. Could get a little bit of a squeeze here. What are you thinking about oil, though? Because I know you've been trading this mostly from the short side here recently.
Yeah, and I'm getting a little bit concerned here. We're going to see how this goes, but if you look at even just the current active contract, you can start to see a bit of positive divergence on the momentum studies here, and what you're carving out, I dare say, is starting to look a bit head and shoulders-ish on shorter-term time frames. So if you look at, let's say, a 4-hour and 8-hour, you can kind of see where the head and shoulders comes together. And with divergence on sentiment studies, this is starting to look like maybe it's bottoming. I don't have a whole ton of exposure here, just a little baby put vertical that's not really doing a whole lot. On the other hand, I have a dollar short that's really working. So I might do some cleanup here ahead of the weekend, sort of taking in this idea that maybe there is significant gap risk and just take things off. If, in fact, crude oil is going to come back down in a lasting way, there is very good reason to think that it is. If we look at a weekly chart, we can kind of see what's going on. Then you can always put it back on. But if you look at a weekly chart of the continuous crude oil contract, you can see the technical damage that we're about to have this week is really very critical. You're about to break a range bottom that you have not really challenged in years. And so I'm okay still betting on the short side. I'm just not sure that I want to be there through the weekend. You could have a bounce to retest here, and the break will be just as valid. So I'm trying to be very cautious.
Natural gas was having a nightmare of a session earlier. It's now up a little bit here. It's been a pretty terrible week for natural gas. But again, if tariffs are in place, we've erected these trade barriers, then as the world's biggest producer of natural gas, we're just flooding the domestic market with it. It puts a lot of pressure to the downside. Removing the tariffs obviously helps with the supporting price here in the short term. It's not in a demand or supply destruction territory yet for LNG, but we could be getting there soon. Ilya, I don't have anything on there. you and I have been going back and forth about de-dollarization. You don't think it's happening. I had an exchange with Brent Johnson, Santiago Fund, on Twitter last night regarding this. For those that don't remember, several years ago, Victor Jones and I had a conversation with him on YouTube. It was one of the best performing episodes we ever had. It was like 120,000 views. So there's a chance that some people listening to this can recollect that conversation. I was asking Brent, do recent events challenge the dollar milkshake theory, right? Are we? And he basically said no. You just likewise earlier in the session said that you don't necessarily see that playing out either, although the euro here, what a freaking tear this has been on, man.
I mean, yeah.
115 earlier today. We've added from low to high about 5 cents this week in the currency alone. This is a meltdown of the dollar in epic proportions.
Yes, I mean, my average entry long on the euro here is, let's see, 110.15. So yeah, I mean,
this is one of those rare. This is one of those rare occasions where people can't rely on the typical, the typical measuring sticks of how FX should perform.
Yes.
Only insofar as developed market economies and their currencies typically trade on rate differentials.
Yes.
The dollar has not been trading along rate differential lines for the past week. It's trading more like an emerging market currency where higher yields indicate stress within the system itself.
Sovereign risk. Sovereign risk. The reason that people were scratching their heads going, wait a minute, the mortgage crisis is in the U.S. How in the world is it that the dollar is screaming higher from 160 euro to 118 in 2008? How does that make any sense? And the answer is very simple. People are cashing out, and when you want to cash out, what's your cash of choice? The most liquid, dependable, easy to move around in form of cash. Because at some point, the chaos will be over, and you're going to want to redeploy. So it's got to be something that takes in a bunch of liquidity and then can have a bunch of liquidity leave without going crazy. So, okay, makes sense. But those very same qualities are what people are less sure of in the dollar, and they're shunning them. Because not because they've decided that the dollar is broken, but because they're not sure. And I think ultimately you're going to find out that it's not broken, if only because there isn't an alternative. But in the meantime, it makes perfect sense that there would be this outpouring. And moreover, even when the chaos unclenches, it makes sense that the outpouring continues, because then you just get into regular, the Fed's going to cut rates, there's going to be a recession, Europe is spending a ton on defense, we're retrenching on fiscal spending, yield differentials are only likelier to move further in the dollar's bad side column, not less. You're only going to get a more dollar negative story as things unclench, because then you just get to textbook dollar weakness. So it's currently behaving like we're in the middle of a mild currency crisis. And there isn't a currency crisis per se. What there is uncertainty about whether that's even a possibility, which wasn't even a point of discussion for decades until this week. But obviously, we're having the discussion. If you look at the bond market and you look at the dollar. And I think it settles with people going, listen, you can have whatever currency crisis you want, but there isn't liquidity and depth like the dollar anywhere else. So tell me an alternative, and then I'll tell you where I'm going.
Gold.
Not even close. Not even.
I'll see.
But
we're going back to the gold standard.
Unless you get you some steel wool and you go into a supermarket trying to shave some shavings off your gold bar to buy milk next time. No. So
that's what Brent basically said. He goes, listen, like, you'll know it's can you go to your bank and pay your mortgage in anything else other than dollars right now?
Right.
That kind of put like direct and concise, as I said, to wrap up that conversation. Elliot, we need to wrap this up here though, because we have Dr. Jim waiting in the wings. Monday and over the weekend, there is some China risk. I suppose the data are due out tomorrow. They tend to delay these kind of things. Even if they do come out, do we care about data that's in the rearview mirror? That's pre-tariff. Probably
if it's
not.
really bad, yeah, because then we know it'll get worse.
Fed speakers, though, lots of them on Monday. Lots of them to try to calm the market down. Barkin, Waller, Harker,
Everybody
and Bostic.
be cool versions 1, 2, 3, and 4.
That's effectively it. Ilya, you and I are done here for the rest of today, which means we're done here for the rest of this week. You'll be back on Sunday for First Call. I'll see everyone again with you on Monday for Futures Power Hour. So with that, thanks again for tuning in. It's been a wild week. We've certainly caught some of the big moves during our session here. Hopefully you've been able to make some money along the way. See you next time. Good luck trading. For Ilya Spivak, I've been Chris Vecchio. Dr. Jim Schultz with From Theory to Practice coming up next here on Tasty Live.
Godspeed, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Man, I don't have a single clue what that might be. Maybe today we'll figure it out, but I would not hold out on that becoming reality anytime soon. So welcome to the show. Welcome to the broadcast. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion if it is real time right around 2 o'clock Eastern time on Friday, April 11th. And I can't believe it, but somehow, some way, we survived the most important PPI print of our lifetimes. And not only that, but I mean, you thought CPI was cold. Man, this morning's PPI, man, that made the North Pole look like Rio de Janeiro. Like that thing was frigid. And the market loves it. Right, you got the Fed's going to swoop in and give it, the liquidity that it needs, the QE infinity that it needs. Everybody's happy. You got E-mini S&Ps up 1 million. So, Paul, bring us in here. Let's take a look at those E-mini S&Ps. Well, they're a little bit off of 1 million now, only up 91. E-mini S&Ps up 92 on the day. You've got the risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, up 330. Got the Boomers up 655. You've got the Russell 2000 Futures Index up 20. You got bonds down, 16, but man, they were down a whole lot more. And I was assured by the internet last night that it was over. Like, I was assured by the internet that you've got China selling bonds, you've got Japan selling bonds, you got Johnny Pools 47 selling some bonds. Like, it's over, it's done with. And it's not either one of those things, as bonds are pretty much hanging in there. Pretty normal day for, the ZB market, up a little, down a little. It's like, 16 ticks here, 16 ticks there. It doesn't really matter. I'm not so sure. You got oil up $1.50 on the day. And then, of course, you've got gold. Man, look at this thing. Look at this thing. Gold up another 76. Up another 76. That's crazy, man. That is some crazy, crazy stuff. It's a good thing nobody told you guys to get short gold back at 3,000 or something crazy like that. And so gold up 76, man. It's working on its third straight 100-point day. It probably won't get there today because in the metals market, like, the afternoons are typically pretty slow. But, we are just, guys, we are one Trump tweet away from ES up 250, right? Gold up 115. Just one Trump truth away from this whole thing continuing in the direction that it's going, with gold for 3 straight days up 100. Crazy stuff. Of course, you've got silver. If we look at silver up $1.26. And so, the Hunt brothers can take a weekend off of slanging pizza slices out the back door and maybe focus on what they do best, which, of course, is corner the silver market. And so silver at 32.03, looking pretty strong, looking pretty good. You got volatility. Pretty interesting day for volatility because the market is strong. It hasn't been strong all day. It was, kind of weak this morning. We can take a look at that here in just a couple of minutes. But volatility is also strong. This market is so strong that it is lifting not only the equities, not only the metals, not only the Bitcoin bros, got Bitcoin up 3,000 today. It is also lifting volatility itself. Volatility futures up 40 cents, up to 29.70. And then you've got the old spot volatility, the old VIX. Okay, it's down now, but it was actually up right before the show. Now, it was only up like 30 or 40 cents, but still, to not have volatility get creamed on a day like today, that's pretty surprising. Like, this is a pretty big up move. It's not 2,100 points in the NASDAQ. And so, we got to obviously, contextualize this thing correctly. But still, you've got a few hundred points in the NASDAQ. You've got, 100 points in the EMA S&Ps. That's a pretty sizable day, to the upside. Normally on a day like that, you would expect volatility to get crushed, and it's not. It's hanging in there. Does that mean anything? I don't know. I don't think that it does necessarily. But I'll let the volatility bros and bro sets handle that one for me. And then for the individual stocks, you can bet your bottom biscuit we're going to be taking ourselves a nice lengthy victory lap on this JP Morgan expecting move butterfly here in just a minute. But we'll build up a little bit of drama, not do that right away. But it's looking pretty good so far. But if you look down the list at some of the individual names that we all know and we all love, you've got Apple up $7, up to $197. You've got Amazon up $2, up to $183. You've got, Baidu. Baidu, man, they're about to get delisted. Baidu's going to be gone. Maybe Baidu gone. Baba gone. Like, it's all going to be gone like this weekend. Trump's thinking about it. You never know. And with him, do you really know? Man, who has a clue what's going to happen? I don't know. I'm not even sure that he does. But if we go on down the list, Meta's actually down today. Meta down $5. Okay. You've got Microsoft up 6. You got Netflix down 4. That's interesting. Interesting that Netflix is a little bit weak today. I'm surprised by that. Got Google up 350. That makes sense. And then if we go on down the list even more, you've got, everybody's darling Tesla down 360. And then you've got, Snapchat hanging in there, still in business. Pretty surprising. Up 12 cents. And so, yeah, obviously the market's strong. Most of the individual names are going to follow suit. But again, it's not a one-for-one mapping. You've got, individual stock, idiosyncratic risk that's going to cause certain stocks to not necessarily follow the index. They may do better. They may do worse. Today you see Tesla's doing worse. Meta's doing worse. Are there reasons for that? Probably. If you dig under the hood, you'll say, oh, it's X or, oh, it's Y. The problem is you never know what the market's going to latch onto in any given moment. Like on any given Sunday, for my Willie Beeman fans that might be watching the show, you don't know what's going to happen. Like, you have no idea what's going to happen. Sure, you can turn on your invisible juice and escape the pocket, but you don't know what's waiting for you. You don't know if it's a corner blitz, is it a linebacker blitz? Like, you have no idea what's coming. So anyway, I digress. And so market looking pretty strong. Yeah, I mean, I was having some fun last night when bonds were crashing. And for those of you that follow me on Twitter or X, I'm at Jay Schultz F3 if you want to connect on there. It's always a good time. Maybe sometimes it's a good time. But last night when bonds were crashing, just to have a little bit of fun, I was like, hey, they're going to be green tomorrow. They're going to be green tomorrow. And I don't know. Like, I have no idea. I mean, obviously I'm texting Powell, individually and personally, but still, he wasn't really letting me know what was going to happen. He didn't tell me what Collins was going to say today. He's usually pretty tight-lipped about that. We usually just talk about like training and, the Grateful Dead and things like that. But I was just like, well, let's have a little bit of fun. And let's say bonds will be green tomorrow. And it looks like I might actually be right on that. Bonds are now only down 17 ticks, which again, that's a pretty normal ho-hum day. Like, I'm going to go ahead and take a victory lap on that. Like, sure, it's not technically green, but man, according to the internet last night, like, bonds were going to be 109. Bonds were going to be 107. Like, they were going to have to wake Powell up at 2:30 for, infinity QE in the middle of the night. And so they didn't have to do that. And so bonds hanging in there pretty well. Market loves it. You love it. I love it. Everybody loves it. So, all right. What I want to do, though, is, of course, I want to get to you guys right on the second half of the show or thereabouts. Man, I see people in the house, and I just appreciate you guys. I appreciate you guys so much. Robert's in the house. Theta Trader's in the house. Grumpy Mike's in the house. Paul Heyman. Kimberly's in the house. Brian's in the house. Richard Todd's in the house. James Bond number 4 in the house. Mount Go Rail. Emmett Morrison in the house. Sergio in the house. Daniel Rooney and Daniel Perkins in the house, and many others that I skipped over. But let's talk about a couple of things. So I'm going to do JP Morgan in just a second because obviously this thing expires in just a couple of hours. So I want to go ahead and book these profits and kind of be done with this. But if we talk about MES and MNQ, so our two strangles that we've been, we adjusted MES, but we held tight with MNQ. And it turns out that they've both been fine decisions. Like, it turns out, obviously, the market strength today is helping us quite a bit. And so if you look at MES, we're at 5,400, 5,500 on our strikes for the strangle. And so you've got MES right now, or ES right at 5,390. It was just over 5,400 just a second ago. And so this is a pretty good spot for this strangle. Obviously, if it was up another 50 or 60 points, that would be even better. But again, guys, we're one Trump tweet away. We're one like thought of a Trump tweet. We don't even need the actual tweet. We just need, like, could he possibly tweet? That's 40 points on the ES right there. And that's all we need, man. That's all we need to center this guy up really, really nicely. And so I'm not going to do anything here because, obviously we've been absorbing immense amounts of pain to this point. And so I'm going to sit tight and do nothing on this trade. You can see we're down a couple hundred points on the trade, which is not amazing, but this is where the size is so critical. This is where making sure that you're sized correctly is so critical to your success as a premium seller, but more specifically, a high volatility premium seller. Because, guys, you have to remember, if I could wax poetic I'll have you out the door in no less than 11 minutes. When we sell volatility, and volatility is high, and volatility has expanded, you have to keep in mind that volatility means something. It's not just a number on the screen. It's not just some metric that has no connection to reality, right? It's not just some like line item in a market measure study that's like, oh, like that's the secret sauce. Like, I've always wondered what Dr. Jim was putting in his chicken rub, but now I know it's brown sugar, which, by the way, it is brown sugar, and that's the thing that changes everything. But when you're looking at these market measures, these option jives, like whatever, and it's like, hey, you wait for IVR to elevate. You wait for implied volatility to expand. And then you sell premium, and everybody goes home happy. Nobody gets hurt. You have to understand that volatility expansion means something. That volatility, like, forget about some of the math and the stats and even some of the empirical findings. Just think about volatility, what it means in a general sense. Like in a just common parlance. It means things are going to be wilder. It means things are going to be crazier. And so that is indeed what you are signing up for. Now, this is not to discount what all the studies show, not at all, actually. It's just to make sure that you have a fuller picture. It's just to make sure that you understand that, when the VIX is at 40, the VIX is at 35, the VIX is at 54, like that means something. And so you've got to buckle up and get ready. And so again, I've said this a lot the last few days because I think it's so important. When things like this happen, you get exposed. when things like this happen, all the lights are on, there's nowhere to hide. Like now you know, like, okay, I actually feel okay with my position size. Sure, you're probably getting hurt. Sure, you're probably showing some negative P&L. I mean, most of us are, but you're like, hey, I'm okay. I don't have to necessarily deviate from my kind of, pre-planned adjustment protocols. I can just follow the pathway forward through the forest that I had outlined all along. I can follow the map that I've created when the seas were calm and everything was fine. But then again, if all of a sudden you're exposed and you're like, wait a minute, I'm maybe way too big. Like, wait a minute, maybe I'm not as small as I should be. Then that's a whole different type of discussion that you need to have in a whole different type of situation where you're plugging leaks, you're closing positions, you're freeing up buying power. I mean, that's a bad spot to be in. We've all been there. We've all been there. And if you're just starting out and you've not been there yet, you are going to go there. You are going to get there. It's almost like a rite of passage in a lot of ways. It's almost like I've not met a single trader, not a single one, who's just gone wire to wire and never had like difficulty, never had like self-inflicted wounds, like self-inflicted problems, like things that could be easily avoided if you had a better understanding on risk management, position sizing, high volatility, what that actually means. But again, and I say this a lot too, but it's so important to keep repeating these things because they're critical to your success as a trader. It's one thing for me to tell you what high volatility is going to feel like. It's one thing for me to tell you when IVRs are pinned at 100 across the board, hey, here is what to expect. Hey, you might want to look out for X. Hey, kind of keep your eyes peeled for Y. Like, it's one thing for me to sit here, right, and say these things. It's a whole nother thing for you to be in the arena experiencing it, for you to be in the arena actually absorbing it, actually having to make real-time decisions under duress with real money on the line. That's a whole different thing. That's a whole different thing. And the only way for you to get where you're trying to go, if where you're trying to go involves any type of profitability, consistency, predictability with your results over time, things like that, you have to experience it. You have to. It's kind of like, in fact, it's exactly like having children. 100%. Exactly like having children, right? Like, if you've had children, you know exactly what I'm saying. They can tell you all they want to tell you beforehand. Like, you can read all the books, you can listen to the podcast, you can go to the classes, you can do all that stuff. But man, once the stork drops that baby off on your doorstep, everything changes. Now it's like, wow, it actually happened. I have no idea what I'm doing. I have no idea what I'm doing. Like, for those of you that have multiple children, remember back to when you had your first child. You had no clue what was going on. Zero clue. It's the same thing here, right? It's the same thing here. But then, repetition builds mastery. Like, you're selling premium, you get in there, you put in the reps, you're used to it, right? You're kind of building that rut through the forest. And it's the same thing. You have multiple kids. You have one, it's like, okay, this is crazy. You have two, it's like, all right, I think I got it figured out. It's like, you have three, it's like, they can fend for themselves. It's like, hey, Jim, your daughter is eating your pizza off the floor. I'm like, oh, it's fine. It's only been there a few hours. It'll be fine. Right? It's just totally different. It's totally different when you have multiple children. And those of you know exactly what I'm talking about if you've had multiple children. But anyway, I digress. It's a Friday, man. It's a Friday. You got the market up $1 million. Everybody's happy. Even bonds are up. Bonds are crashing now, though, back to 113.06. And so maybe I'll end up being wrong on my prediction. But anyway, let's go into JP Morgan. Let's do something actually trading related. And so I think here with JP Morgan, we made looks like we're going to make about $3.50 on the trade, maybe $3.30 on the trade or thereabouts. You can see it right here. We bought the butterfly for $2.44. I don't know what JP Morgan said this morning. I don't know what Jamie Dimon said this morning. I have no idea, but the market likes the results. And apparently they believe that we are going to sidestep the apocalypse, at least for the weekend. And so that means that we're going to be able to take out a few bucks out of this JP Morgan expected move butterfly. That's pretty nice. And again, this is one of the nice things about doing expected move butterflies that are only a couple of days or even just an overnight play from a timing standpoint and a duration standpoint. It just makes it easier to make money if you get the move right. Now, of course, you have to get the move right, which that's no small feat. Nobody knows what's going to happen. Like, nobody has any idea what's going to happen. And so we got lucky getting the move right, playing JP Morgan to the upside. And so now I think we close it down. I think we highlight all the legs, we right click, we close position, we close the full position, And it looks like, again, we're going to be able to close it for about a $5.59 credit or thereabouts. So let's do that and see if we can get filled really quick. Boom, there you go. Filled at 559. So, all right. So JP Morgan over and done with. It's almost like it never happened, other than the fact that we just financed Bonefish. Was that $3? So it's 3 option dollars, which is 300 actual dollars. Man, that's 4 Bonefishes right there. That's 4 Bonefishes. Like, I think you might even be able to get a franchise for $400, actually. So I was really thinking about the meal, but then I'm like, I don't know. You might be able to get a little franchise deal for just a few $100, starter pack. And so, yeah, that's going to be pretty fun. Autumn has no idea, so she's going to be very excited tonight. And so, I can't do it tonight. You guys know what I'm doing tonight? You guys know what I'm doing after the market closes? I'm putting together a swing set. So I'm not doing it myself. There's no way I can't do that myself. Like, I'm not a hammer guy. I'm not an Allen wrench guy. I'm not any type of wrench guy. I'm a hey man, like, do you need me to move that box for you type of guy. I'm like a hey man, like, can I throw that trash away for you guy? Like, that's what I am. So I got one of my buddies here who's very handy, extremely handy. In fact, he's so handy. He wanted to get. I think he might even be out there right now. I think he might have, because I told him, I said, hey, man, I can't get started till after 4. He's like, hey, man, I'll get started before that. He's like, I'll get done about 2:30 on Fridays. I'm just going to come over and get started. He's like, I probably don't even need you anyway. I'm like, these are the type of friends that you need to have. I'm like, this is what I'm saying. And so my boy is going to maybe put together the whole thing before I even get done with the show. I don't know. So we'll have to wait and see. But so no Bonefish tonight. That'll have to wait. But the rest of the positions, believe it or not, nothing's really changed from yesterday. So I don't need to really address anything. I mean, the market's up, and that's going to be helping most of our positions. And so there's nothing to do that requires really anything for us to talk about or even pontificate on. So I want to go to you guys. Man, I want to see you guys in the middle of the chat. And let's go ahead and where are you guys at? Let me see if I can figure out somebody to surprise and delight in the middle of the chat. I got it. Here we go. I'm just grabbing one at random. Obviously, I mean, I'm just trying to find something that I think is either, it's a question that I think, could be helpful, or, it's a funny comment or whatever. I'm picking something at random, and I see Ranch right in the middle. Ranch says, hello, Dr. Jim. I'm eyeing a $10 wide bear call spread. So that'd be a short call spread. It's also referred to as a bear call spread. A $10 wide bear call spread in the SPY 550, 540. 6 days to go. I like when the max gain is like 80% of the buying pop BPE break-even point. I'm not sure what BPE means in this context. Like that. So 550, 540, a bear call spread. Are you buying it or selling it? Where does SPY? Yeah, you're selling it. So, but the way you wrote it made it weird. You got to be selling the 540 and buying the 550. Right. So you're selling the call spread, I'm assuming. And so you're going 6 days out. So I already don't love it because you don't have a lot of time here. And the thing about selling premium is this is when, going to like 45 days makes a lot of sense because, at least a few weeks. Right. I like the 45-day entry point, but I'm open-minded to maybe, something a little bit shorter term, especially if it's defined risk. But when you're choosing something like in the front week, or even like a 0 DTE, I mean, I understand that there's some very helpful research on this and there's good reference points if you want to consider this. It doesn't make sense to me personally. It doesn't make sense to me professionally. It doesn't make sense to me emotionally to sell premium in such a short time frame, because the thing that's really going to help you on a short premium position is going to be, the reliability of the first half of the cycle. It's going to be the fact that, from like 45 to 21, let's say, you're going to oftentimes find that to be a fairly smooth ride. Not every time, of course, and sometimes it's going to be totally crazy, especially with the VIX at 40, right? Like, I understand that. But over time and over enough repetitions, you're going to find that 45 to 21 is a rather smooth journey relative to what you might find yourself in 21 to 0 or 6 to 0, like what you're suggesting here, Ranch. And so if you go to 6 days out, I'll take a look at it though, because we've already come so far. If I sell a 540 call and then I buy a 550, you're only going to pick up what? All right, so you're picking up 40% of the width of the strikes, which is good. That's really, really good. And that's largely going to be because the IV rank in SPY is so high. I mean, the IV rank is still 73, so it's not the 113 that we had, a couple days ago. But that also meant that ES was at, 48.50 or whatever. And so, it's gimmies and gotchas, man. But 73 on the IVR is still pretty solid for selling premium. And so this is a really, really, really good trade from a premium setup. Like, I like the fact that you're collecting 40% the width of the strikes. I like the fact that, you're risking $1.50 to make $1. Obviously, you're risking $600 to make $400, but if we just standardize it on a per dollar basis, I like that. Like, I typically get into my own vertical spreads right around this level, looking to pick up around 40% the width of the strikes. Again, you've got to do what makes the most sense to you there, Ranch. What I would consider, though, let's look at a similar trade in the 45-day cycle. So if I clear this out and I go to not even 45, let's go to May with 35. We don't have to go to June with 70. Like, we don't have to do leaps here on the show. Like, we can keep this thing, reasonable. If I go to May 16th, 35 days ago, I'm going to find, let's look and see. So SPY was 532, or is 532, I should say. And the 6-day cycle, you sold a 540 and bought a 550, and you collected about 40% the width of the strikes. Let's take a look at how much further you can move up the chain in strikes and still collect 40% the width of the strikes. I think maybe you're going to be surprised. Now, I didn't look at this beforehand. I don't know. Maybe we're both going to be surprised. I'm not sure. But let's set up the same trade. But now I'm in the May cycle with 35 days ago. So the 540, 550. So if you do the same trade with the same strikes, but now you're 35 days away, you're actually collecting more than 50% the width of the strikes for a probability that's greater than 50%. That doesn't make sense. We have just bent all the rules of mathematics. Like, we are living inside the matrix right now. We have to be. Like, this doesn't even make any sense. And so I say that facetiously just because call spreads oftentimes sell rich. Call spreads oftentimes sell expensive like this because of the volatility skew in the marketplace. And put spreads oftentimes sell pretty cheap. And so it's not that uncommon that you see situations like the one that we have here where you're actually getting a really nice price on the call spread when you're able to sell it, and also a pretty decent looking probability to go alongside that. I don't know that we've necessarily bent the rules of mathematics, but we can pretend like we did because it sounds pretty cool. Let's go ahead, though. I want to figure out how much can I move my strikes and get to $4. So I'm going to highlight my 540 and my 550. And let's just keep moving the strikes down. So I'm going to go to 540. I'm going to go to 545, 555. And here, let me just circle the credit. If I go down to 545, 555, I'm still at $5. So we still have quite a journey to take together to get to $4, right? I want to get the same credit that you were looking to get in the 6-day cycle. But you're going to see how much better your probability is, and you're going to see just how much more practical space you have between where the stock is now and where your short strike is. So 545, 555 is a $5 credit, approximately $4.95. Let's go to 550, 560. 550, 560 is 445, so we're still not there yet. Let's go 555, 565. Okay, there it is. We found it. 555, 565. That's another 15 points on the S&P, on the SPY index. That's going to give you so much more buffer to chew through, and you're still getting $3.90. So just a titch under 4, so we could actually tighten it up. We could go 554, 564 to be very exact. And now you're basically right at $4. Looks like about $3.96. And so I would much prefer to see you do a trade like this than do the 6-day cycle, because I just think you're going to have better results over time. Now, you have to kind of, relegate yourself and resign yourself, I guess I should say, to the fact that you can't hit home runs as easily. Like, you're just not going to be able to, just put one in the seats like you would in a 0 DTE or a 7 DTE world. Like, in those type of worlds where things are moving so quickly, you're able to hit, you're able to get bigger hits. You're able to get bigger wins. So you're going to have to kind of let go of that as really even a possibility. But I think from a smoothness standpoint, I think it makes sense. Now, to play devil's advocate to the devil's advocate at this point, maybe you're like, hey, Jim, I kind of want the bigger swings and the bigger hits. Like that's part of my system. That's part of my style. That's actually what I want to do with this. Hey, then, maybe doing what you had originally intended to do is going to make a lot of sense. I don't have a problem with that necessarily because it's what you want to do and you understand what you're signing up for. But you just have to understand what you're giving up to. You are giving up the reliability in the first half of the cycle. So hopefully that helps a little bit there, Ranch. But let's go back to the beginning of the chat, man. So much has happened in the chat. I go all the way back to the beginning. This was like a couple hours ago. Man, can you guys even? So we finally made it to the end of the week, by the way. We have a couple hours to go until the close. But Sunday night, not in 2 days, 5 days ago, Sunday night futures open. Like, when they just squashed them on the open and it looked like it was literally over. And then on Monday, we realized that we are so back. Like it was it was just back to back like that. But that feels like it was 5.5 weeks ago. Like, I don't know, maybe it's just me, but Sunday night, like when they squashed him on the open and everyone was on pins and needles with like, how's the weekend risk with the tariffs? It was kind of the first weekend with the Trump tariffs kind of in place or whatever. That feels like it was about 9.5 weeks ago. And so it was only 5 days ago. And so, and again, we have another weekend coming up, which maybe won't be quite the same, but I have a feeling maybe it will be the same. And so, all right, here we go. Let's see. Brad Glazier's in the house. What's going on there, Brad Glazier? I appreciate you, my friend. Thank you for being here. Thank you so much for being here and being a part of what it is that we are indeed trying to do, whatever that might be. So Sam L's in the house. What's going on there, Sam L? I appreciate you, my friend. You know that I do. Sam L goes on to say a couple comments below. If I see a couple from the same person, I try to group them together. He says, Doc, PPI came in soft. That's basically a macro pre-workout. Market's dry scooping this data and heading straight up. Yeah, it's doing something, man. I think it might be dry scooping it, which of course everybody that is somebody dry scoops their creatine. Like don't be a complete psycho. Like don't be a maniac and dry scoop your protein powder. That doesn't even make any sense. But you should definitely be dry scooping your creatine because it's pretty nasty. So just dry scoop it and then a quick swish of some Powerade Zero and it's over. It's done with. But yeah, the market's doing something. It's liking this and it's heading back up now with bonds around 113. ES up 85, and obviously gold still up $1 million, silver probably still up $1 million, and wow, crazy stuff. And so Grumpy Mike says, "What a mediocre, crappy day." It does kind of feel like ES up 100. It's like, once again, why put pants on, right? Why even start your day? I understand. We've been completely desensitized to like what 100 points in the S&P 500 futures actually means. Like it's, it means a little something. But I appreciate you there, Grumpy Mike. Cynthia's in the house, says, Dr. Jim, thank goodness it's Friday. I agree. Thank goodness it is Friday. Now, I'm not super excited because I got to put together the swing set. But again, I'm going to be in more of like a managerial capacity, more of an advisor role, right? Just kind of sitting back, sipping on a little Diet Pepsi, maybe hand them a wrench, maybe try to find them a washer, whatever that is, some nuts, some bolts, whatever those are, and just try not to get in the way. Basically, I'm just going to try not to get in the way. But I gotta be the hero to my kids. I gotta be out there. I gotta at least like swing the hammer on something and just do something. So at least in my kids' eyes, it's like, wow, Daddy put together that swing set. He's like, you bet your bottom biscuit, your daddy put together that swing set. That is the story that we're gonna run with, and that is the memory that they're gonna have. And so Daniel Rooney in the house, morning, Dr. Jim, selling 0 DTEs on bond funds has never been so lucrative. Yeah, that sounds like an awful idea. Yeah, I wouldn't do that with Tom's money, man. I wouldn't do that with the Batista, the Batista fund, the Batista estate is what I meant to say. That sounds like it's gonna blow up in your face totally. But hey, you do you, man. Daniel Perkins in the house, Dr. Jim. I understand why you call them crash courses. I'm good at the crash part. Yes. Yes, indeed. And you are not alone, my friend. That's why I titled them crash courses, because I fancy myself an expert in the crash part. And so hopefully that came through loud and clear as you went through the course, as it should have. And so let's see. Grumpy Mike says, let me guess, green shirt. No green shirt. I almost went with the purple shirt. I was going to go with this shirt all along. But then I was like, wait a minute, did Powell just save the market? Because I was watching it and I saw bonds went up like a full point in like a minute or two. The market went from up to like 30 to up 100 or whatever. And I'm like, wow, did Powell really do it? I'm like, or did Trump? Did somebody do it? Somebody did something. And then I couldn't gather what actually happened in time to change. And so I kind of let you guys down a little bit. But it wasn't Powell. It was one of his colleagues or whatever, like one of the other Fed officials. Collins, I think, is the one who saved it. And I don't have a Collins shirt. I've got a Powell shirt, which is purple, of course, but Collins, I mean, I'm not sure. He could be a light blue guy. He could be an orange guy. And so I'm not going to assume that he's also purple. And so let's see. Ryan B says Fed bailout. Oof, yeah, that never backfires, right? Like that never backfires. Like don't even worry about it. QE infinity, not going to be a problem at all. Although I will say, with inflation apparently falling off the table now, I mean, it makes sense based on the Fed's own language that for them to be more aggressive with cutting rates now makes sense. And so, I mean, obviously trade war aside, right? And it's like, delisting Baba aside, it's like that makes sense. Like based on Powell's own language, like before all this got started with tariffs and reciprocal stuff and whatever. And so, I mean, he would be following the playbook that he's laid out from the very beginning. I personally think, and I've said this before, I think Powell has done a masterful job. I really do. I give Powell so much credit. I think he's done a terrific job throughout this whole situation. I think it's been incredibly difficult. I can't even imagine the stress that he might be under. He seems to be taking it pretty well. And so that's good for him. He's probably got quite a bit of, ashwagandha in his daily supplement routine, which he should, of course. And so, yeah, I'm impressed. I'm impressed with what he's been able to do. But let's see. Sergio says, good afternoon, Dr. Jim. How long will this orange swan last? Yes. Yes, the orange swan. Are you the one who emailed me with that? You might be the one who emailed me with that. That was very funny. When I think it was you, Sergio. If it was somebody else, then that other person is equally as clever. Man, that's really, really funny. I don't know. If I had to guess, I'd say maybe another 3.5 years, maybe. And I'm just guessing, right? But maybe till about 2028, I think. And so, I mean, hey, it's just 3.5 years. Like it's going to be over before you know it. It's going to be over before you know it. I saw something come through the internet just the other day, just scrolling through Twitter, wasting time, whatever. And I saw something come through the internet that was really funny. And it had like a funny little video of Ryan Gosling. But it just reminded us all that in 8 months, 2016 will be 10 years ago. And I was like, wow, man, that's wild if you think about it. Like in 8 months, 2016 will be a decade ago. 2016, not 2002, not 2007, not even 2011. 2016 will be 10 years ago in 8 months. And so I'm like, man, that's really, man, I don't know. Crazy stuff. Argent Purr's in the house. Dr. Jim, I found that I like zebras for a small Tasty Bite account. Directional plays, that makes sense because you're getting a lot of capital relief by using the zebra. What are the gimme and gotchas of rolling the strikes as you get a move in the direction that you wanted? Yes. So the gimmies and gotchas, I would never fancy myself to be a zebra expert. Obviously, I'm gonna pawn that off to Liz and Jenny. Even Mike, Nick, and Katie, I think, do an amazing job with zebras. I'm still kind of on the earlier stages of the learning curve when it comes to zebras. But a couple of things to be aware of when it comes to a zebra. Now, you asked specifically about rolling the strike, so I'll just skip right to that part of the answer. So if you do like a call zebra, you're playing the stock to the upside, and the stock does move, and the stock does go higher, and you roll the strikes up, you kind of ratchet the strikes up. You're able to do that for a credit, which ultimately, because when you put a zebra on, it's a debit strategy, right? So if you're able to ratchet the strikes up, then you are going to take some risk off the table, right? So if I ratchet my strikes up for, let's say I paid $8 for a zebra, right? If I ratchet the strikes up for $1.25, then I take $1.25 of total risk off the table. So my effective cost on the zebra is now $6.75. That's the obvious gimme, right? Where's the gotcha? Well, it's kind of there's at least one that kind of has two parts to it that are very closely related. So it's kind of like a 1A, 1B. 1A, you still have risk to the downside, the same risk you had in the beginning. So you were not able to remove the risk completely at all. But also 1B, and I think this is kind of the sneakier part of it. You've now also moved the point of risk closer to where the stock is, because that is literally what you are doing. You are ratcheting up the strikes. You're following the stock. You're chasing the stock, if you will. By doing that, you take risk off the table in one sense, from the standpoint of taking in a credit, reducing what you pay for it. The overall debit outlay on the position goes down. That's good. but you're actually also taking on more risk in a sense, because now you don't have as much distance as you had before you rolled in terms of, what's going to potentially cause you to lose that full debit. So that's how I would view that in just a general sense, without, bringing up a zebra on the screen and things like that. So a couple of things to think about. Maybe that's helpful. I hope that that's at least a little bit helpful. But very good question there, Argent Per. Theta Trader says, Sarah Leon is my guess. Sarah Leon. Curlean, like Herculean is my guess. Greetings and salutations, Dr. Jim et al. Excellent use of et al. Not such a great use of Curlean, because I'm not sure what you mean by that. That sounds like an inside thing that I am very much on the outside of. So I will continue to go on about my business. Emmett Morrison says, hey there, Dr. Jim. When's the new course coming out? That's a great question. And I am still working feverishly on this course. And by feverishly, I mean it's like a very, very small sniffle. We're almost to what I actually literally have. But I meant it there in a figurative way. We are almost done with the actual like the content creation, to where I know what I want to go in each episode. I know where I want it to be. We're going to do this very differently, though. Ryan Gaynor, who's our YouTube guy, he's amazing. He's got some amazing ideas. And I'm not a YouTube expert at all. And so I'm like, hey, let me lean on Ryan's expertise. And he wanted to set this up in a very specific way. And so we've kind of gone back and forth figuring out what that looks like. And now we've settled on a pathway forward through the forest. And we are now on that journey together. And we're almost done with all the content creation. And then after that, then comes like recording, and then comes like, the graphics creation and all the other things that have to happen. But this is probably the most important step. And from my vantage point, it's the hardest step. The step that takes the longest. I mean, the recording takes a long time too, but it's actually the actual content creation and knowing, what do I want to, like, where do I want to put the content surrounding X? Where do I want to put the content surrounding Y? What's the sequence going to be? What's the flow going to be? Because the one thing with all the crash courses, here's a little inside scoop. It was very important to me, since I knew I was going to be the one that was going to be delivering the content. I wanted to make sure that it followed a very specific framework in terms of the flow. Now, the framework wasn't the same for each crash course necessarily, but I had a very clear vision for what I wanted that crash course to be. Like what I wanted the starting point to be, what I wanted the ending point to be, and everything in between. And so I'm very protective of that sequence. I'm very protective of that flow, because having been in the classroom for so many years, I have to give all of my students all the credit for this. I mean, they showed me how they learn. Like, I knew how I personally learned, having gone through undergrad, grad school myself and all that stuff, but that doesn't mean that's how everybody learns. And so I got to see thousands and thousands and thousands of students and how they learn, and they helped me craft my style and understand what I think might be the most effective, or at least, relatively effective methods to teach things to people that might be learning for the very first time. And so being protective of the content like that, it's just taking a lot of time going back and forth. And it's taking a lot of time saying, okay, that's good, that's not good, things like that. And so anyway, you didn't even ask for all that, Emmett, but there you go. You got it. And so I don't know when it'll be released. I would say it's going to be at least another month, probably. So probably not until sometime in May at the earliest would be my guess. But let's see. Mount Go Rail, Dr. Jim, I appreciate your appreciation. I appreciate your appreciation of my comment. Yes, you should. And I appreciate your appreciation of my appreciation. Smoking pork butt to entertain myself while I watch the market do its thing that it is doing. That's a great way to get the weekend started. It's better than building a swing set. Like, I can assure you of that. And so nicely done, my friend. Nicely done indeed. James Bond number 4. Happy Friday, Dr. Jim. I have an SPX 0 DT Iron Condor. 5145, 5150. 5360, 5365 for a credit of $1.55. It does not appear to be working. How do I manage it, or just let it be? Well, Iron Condor is especially $5 wide. It would definitely be a let it be situation under any durations. So that's not just, specific to this being 0 DT. That would be any duration, 45 days to go, 35 days to go, whatever. I would not do anything. But just, I'll take a look at this since you gave me the specific strikes. If I go to SPX, you said 5145. It looks like, well, you're obviously good on the put side. 5150, 5145. Yeah, you're good on the put side. Ooh, yeah, you're getting, the call side is where all the action's happening. And so with SPX, you're at 53.60, 53.65. Yeah, so you're right around a scratch right now, right around a scratch. Personally, I wouldn't do anything. Could you make a case for rolling up the untested side? You could. You absolutely could. You could, because you've gotten everything out of the put side essentially. I would either A, do nothing, or B, just close the put side. I would not roll it in personally. You could though. You could roll it in to pick up a little bit more credit and just get concerned about protecting the upside a little bit more aggressively. I don't have a problem with that necessarily. It's not what I would do. I don't think that you're making like a strategic error or anything like that. I think it's totally fine. But I've just learned that, especially with iron condors, man, set it and forget it just seems to be a really good strategy, in my opinion. Again, both personal and professional, and even emotional. I think it's the way to go. And so I would do nothing. And then just let it go. And don't forget, SPX is cash settled. And so you have the benefit of not having to worry about assignment. Like, if it does finish in the money and you happen to lose track of it, or you can't get to it by the market close or whatever, like, that's fine. It's not really that big of a deal. It's just going to settle to cash one way or another. And so, let's see. Oh, really quick. Sam L says, are we really going to close green on a Friday, Doc? It appears that we are. Or is the market just teasing us before pulling the classic Friday rug pull? Man, I don't know. But again, we are one Trump tweet away from this whole thing changing course, or another 100 points in the EMA S&Ps, 500 points in the NASDAQ. Man, you just got to wait and see what happens for the next hour. But I got to go. I got to get you guys to Jamal. I appreciate you guys. So much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. I got my special guest in the house, a man who, like all of us, has had a tough week because not only are the markets crazy, Denver Nuggets lost their coach, man, and I know he's reeling right about now. I know he's got a lot to say about it. Welcome to the show, Errol Coleman. Before we get into markets, man,
and I'm doing well. Always good to be back on here. You started us on a low note for us Colorado folk. Mr. Mike Malone, our basketball coach that has won us some championships, is thrown under the bus out of nowhere. I mean, I don't even know what to make of it. I don't know if there were some words that went back and forth or different. They wanted different things. I don't know what it was, but I mean, that caught me off guard. We had a bumpy market, and then now we're going to have a bumpy Nuggets season. So a lot of uncertainty this week, no doubt, Jamal. How are we doing, though? How are we doing?
I'm doing well, man. I got no complaints. I find that so crazy that it's the second coach that's been fired in a season where they were doing like they were over 500. It just hasn't happened too often. I don't think we've ever seen a situation where they fire a coach like with 4 games to go and you have one of the best players in the league and you're in one of the top seed. I mean, they were in the 4th spot, so you're one of the top seeded positions in the conference. It's so crazy. I mean, the rumor is like, well, it's not a rumor. What they've been saying is him and the GM didn't get along and they didn't want to pick sides, so they got rid of both those cats. So that's crazy. But still.
I mean, Malone even won a championship for the Nuggets not too long ago. It's not like it's a franchise that has been struggling or what. So I think it caught a lot of people off guard, But nonetheless, we'll see what happens. Playoff time, I'm excited for that. March Madness was exciting too. Did you have a dog in the race?
I did. I did. I did a regular bracket through work or whatever. Nothing came of that, of course. I'm terrible with
I assumed you haven't brought it back up, so I was like, maybe.
Yeah, no. But I did have a dog in the race. I did this Calcutta bracket. Calcutta brackets.
Oh, you mentioned
did one of those?
No, you brought it up last time. Yeah, how was that?
Yeah. So the team we paid the most for was Florida, and they won it all, of course. So it worked out well. We almost doubled our money. Because me and another guy paired up, we almost doubled our money. So,
I need to know what you're buying in the market right now. Let me know what you're buying.
Speaking of markets, we can go to the platform, Paul. I'm trying to keep it simple, man.
Yeah. What do you mean by that? What does that mean?
I mean, when things are down, try and get long. When things go up, try and get a few short things, And I'm not winning all the way. You can see some red on the screen here. I mean, most of those are, if not all of them, most of them, actually, not all of them, but most of them are short put spreads. The Goldman's position is literally just, I bought a put spread for yesterday. I was like, in case, these banks say something so crazy and scary that markets freak out. But other than that, most of these are short put spreads. I mean, this Disney and the money short put spread, Palantir short put spread, like, that's what it is. However, there are, right now, I do have a couple of. I sold a Microsoft call spread maybe on Monday or Tuesday this week. I don't even remember. I'm sure it shows here. Where is it? I'm tripping. Here. I sold that. Yeah, was that? Oh, that might have been. Yeah, on Monday. I did that on Monday. There was another one. A Meta, also kind of the same day. And then when we had the big, huge day on what day was that? Was that Wednesday? Yeah, Wednesday.
I mean, a couple days this week, big, huge days. I think it was Monday.
But I mean,
Wednesday.
Come on,
Yeah.
Wednesday.
Oh, yeah.
First of all,
absolutely.
let me backtrack. You started trading when again?
Started trading options 2021 when I got into options.
So is this probably the craziest environment you've traded in?
I would say so.
Options?
I mean, I remember March of 2020, but I wasn't actively trading large cap stocks at that time. But I remember how volatile things were. So this is my first time being in the weeds of everything with all the uncertainty and all the volatility. The first time actually trading it. So yeah, it is.
I asked that because, for a couple of different reasons, but like, I always say this thing about options, man. Like options, once you realize like the options, you start to figure out, you start to get it. You're like, oh, dude, I can trade in any given environment, right? And then you get those type of environments, and at either one, you kind of get nervous to do what you really want to do sometimes, right? Or two, you do what you want to do, and things work out differently, right? So it's always an interesting education. That's why I say, I've had that happen plenty of times, where I was like, I'm gonna kill in this environment, and then you don't necessarily do it.
100%. And to piggyback off of what you just said, I know a couple of days ago when the market was really in the trenches, I mean, VIX was sitting at about 50. I mean, a perfect environment just to at least sell some more premium, put on a little bit more risk. I did a little bit. And then, in hindsight, I was like, man, why didn't I not take advantage of that a little bit more? Not stick my neck out too far. But in hindsight, the VIX sitting at 50, vol coming in the next day very aggressively. I kind of had those same thoughts. Like, man, I thought I would have been a little bit more aggressive with while managing my risk when those opportunities come. But sometimes you just kind of get caught in the moment of all the craziness. You know what I mean?
Hell yeah. I mean, it gets a little scary sometimes.
Yeah, it does. It does.
Even when you know what you're doing, it gets a little scary. It does.
Yeah.
I got to say, this Wednesday move is one of the craziest moves I had ever seen. Not going to lie, especially when you consider that we were down, fairly decent. Coming into that day, bonds were these treasure. I mean, that night, these 30-year treasury bonds were getting sold down to like 111 and change. And I'm not gonna lie, that kind of scared me because I'm like, oh, this is really bad. They're selling bonds like this. That is either China selling bonds or it was, just people don't want to be. That's one of the safest investments there are. And people are selling them and they were down like almost 2%. I'm like, this is actually kind of scary. Yeah. And I think that's part of the reason why you had the market reaction that we had during the middle of the day next day. Obviously, I think that pushed them to be like, well, we'll pause these tariffs on these people for a while. I don't care what they say. If this was our plan all along, it wasn't your plans to get Treasury sold, and it wasn't your plan to get the dollar sold like that. So I think that created the move. But when that move happened, again, I'm sure all these put spreads started to make money in the count. I was like, I gotta get short. I gotta get short some delta. So the best trade I did of the week was I initially just sold a call spread, which I still have on right now. I sold a call spread in SPY, and then I actually got a little aggressive because I had the long deltas to do it, and I bought a put spread. Not this particular put spread. I actually bought, I think on that day, because we were up so much, I might have bought it might have been the 545, 530. I think it was. That worked out because we dropped the next day. So as you can see right now, I got one queued up. I hope we end up on highs. I hope we go like a whole bunch more higher. I don't know what that means. I mean, it could be 50 handles. It could be 100. I really don't know. If we do, I'm gonna do that again because I got a bunch of different short put spreads. I'm gonna have to be able to like get some short deltas here. So
yeah. Let me ask you this. I know the fake news that was kind of leaked on Monday sent the market into an insane rally and then sold off when it was confirmed it was fake news. And then that rally we were just looking at, that 90-day pause officially came out on Wednesday. Then we skyrocketed 1,000 to 1,500 points. What were your thoughts on all of that? Do you think that was information that just got leaked prematurely? Because I mean, the same news dropped on Wednesday, 2 days later. I know you were just touching on it. What were your thoughts on that?
My thoughts on that initially were, damn, I missed that one because I missed that one
on Monday.
I actually
with the leak.
on Monday I didn't do anything on that one, and I watched everything fade back down, and I got all these short put spreads. I felt like a jackass, So your point, like whether it was fake, no, is it because you're right. Was it something that was leaked early because it was the exact same thing, right?
Less than 48 hours later, right?
I don't know. Do you follow this guy Walter Bloomberg on Twitter?
I don't even
know if he's
I may have seen. If I see the profile picture, I usually recognize him.
Yeah, he's one of the few I remember the name. It's because the reason why I say it is because everybody gosh, where do you start with this? Like this guy. Again, I don't even know if it's a guy. I'm not for sure if it's somebody. I don't know if it's a bot. I don't know. But they tweet basically a lot of Bloomberg stuff. It's essentially tweeting Bloomberg headlines. And so this person, I don't think this person got that from Bloomberg. I don't know. I don't even know how the sequence of it starts. But everybody knows that this guy tweets a lot of Bloomberg headlines. So when that guy tweeted it, he was one of the few that tweeted early. And then it came back down. It was like fake news, and everybody was jumping on this account. Everybody, this. But then a few days later, there's all these memes saying like this dude was so right, and the memes were fucking. I mean, they were hilarious.
So was that an account that was usually known as like a credible source of information? Why that could have played a huge part in the influence? Okay, it's just crazy to see nowadays. It's just crazy to see nowadays. Melvin Capital not considering buzz that was brewing on Reddit, and then they paid the price for that. And then nowadays it's like the market can be influenced by news that's circulating on social media, something we've never seen in the last 10, 20 years. Definitely a change of environment, no doubt.
Especially in environments like this where you got, I mean, it's the liquidity is somewhat low. I know there's a lot of volume happening, but the liquidity at certain areas of the market is fairly low, especially, on that day where it was already sold off pretty hard down there. There really weren't too many buyers. You got some news like that. People jumped in really fast. This market's looking for anything. So, it's been, I don't know about you, but just for as far as trades for me, again, this was one of the better things I did the week, getting short some deltas into the big move. I had earlier in the week, I had it's
a nice one. What was that one?
This one? Yeah, I had a long call option in ZN. Actually, you know what? I take that back. This was one where I closed this last week. I was thinking about selling ball in here, but I haven't done it yet. I had a long call option here literally last Friday. And then I also had one in here. Pretty far upside. Because again, when you look at the chart, it was.
You nailed that one.
Here's the deal. Right. Markets are just, you can't count on anything right now. And so I did have a long call, the 124 call that was making really good money up here. And I think on this day, on 4-3, and you can see the number, you can see the days on where's my put spread? There it is. On 4-3. Yep. Last Thursday, I was long a call out here in this expiration. There was long the 124 call, and I was doing well because bonds were going up, people were getting scared. And then last Thursday, I said, you know what? I just, things are so wild. Gold should be up. It's down. Like this was last week. I'm like, so nothing makes sense. I know how this market can be. I'm going to buy a put spread here, and I'm going to buy the 117, 115 put spread. I'm just going to have this in my back pocket. Even though I have this long call, I'm going to buy a closer term put spread in case things get weird. Sure enough, they did, because then Treasuries start getting sold off as of this week. Boom, boom. And so I closed that, I think, on this day. I closed my long call and I closed my put spread. I closed it all because I'm like, okay, nothing's making sense. I'm closing it all. Right. And so that was another thing that I did. And I kind of like lessened up some risks throughout the week. This was another one. This is when I actually, wow, this is still moving, huh? But dollar's down. I had a call spread in here. I had like I put this on March 13th, the 007, 0071 long call spread. Idea being if, eventually if the dollar drops, this thing's going to take off. That's because, again, this is a situation where everybody's getting scared. They start selling everything, including dollar. And this was another one. And I took it off early in the week. I took it off basically for a scratch. But this is another one that's been taken off throughout the week because dollar's been getting waxed, as we've seen. And to me, it seems like this week has been, even though the stocks are going to end well, most of what's been happening is sell America, right? Sell treasuries, sell dollar, sell stocks. That's kind of scary. I mean, and when you start thinking about everything that's going on across the globe and with China. So, I mean, obviously as Americans, we want that to turn around, but and I never get into political stuff, but when political landscape is sort of infiltrating the stock market, which is what we do, it's kind of hard not to pay attention.
Yeah, 100%. I mean, did gold catch your eye too? Because I know you're talking about the dollar. And I mean, gold, the last 3 days have been ripping to all-time highs. So it seems like this market's being influenced too. Maybe a little bit of fear in the market why gold is spiking. But I mean, gold's in play.
Gold is definitely in play. So I was long call spreads at different times throughout the year. I haven't had anything for a few weeks now. And when I did see this touch this 50-day moving average, I got interested. I'm not going to lie. I did, but I wanted to have capital. And that's the hard part about trading this market. Sometimes it's like old Jamal would have been like, I'm everything I see I'm interested in, I'm trying to get a position on up to the amount of money that I have. And I don't care if I don't have any money on the sidelines. And the newer me, especially largely this is an idea, but I've tried to adopt more since being at Tasty, always having at least some capital to be able to do something in case things get really crazy. This was one of those positions I thought about doing, but I was like, man, I don't know the way they're selling everything. We're selling treasuries, selling dollars, selling stocks. And gold's down. Why that doesn't even make sense to me.
Yeah.
But I don't feel like playing this game. So I didn't buy it. And then these last 3 days, I mean, huge moves, man. $100 almost every day. This would be the only day it wouldn't be 100. But yeah, crazy moves in gold. Look at these ranges, bro.
I know. It's nothing
range,
I've seen before. It's genuinely,
I mean, by the sheer dollar amount, no, I don't think I've ever seen gold move $100. And I've seen some gold do crazy stuff. But again, it's at a different level than it was, when I was trading. Gold was like, I don't even remember, but it was 1,200, 1,500, 1,000.
Yeah.
Did I ever tell you about
volatile, at least.
2008?
No, what happened?
The group that I worked in, huge momentum group, always buying vol, right? Always buying vol, buying calls, selling stock against it, always buying things that we expect to move. And that was these dudes' thought process. The head of the group. I remember one of the guys in our group wasn't the head of the group. One of the guys, probably the third best trader in our group. He's like, man, I'm getting some gold. This market's crazy. It's 2008. The gold standard is like the thing is people everybody's going to run to gold because of fear. I'm going to get some gold. This guy goes, next day he comes back. He has these gold coins. He probably has I don't know, $1,000 worth of those. Second best trader in our group. He's like, nah, I'm going to get some gold, right? So he goes, next day he comes back. He has these the Indian head coins, which are 0.99999 whatever, right? Percent. I'm sorry, 99.9999 whatever percent. He gets those, and he gets $5,000 worth of that. And I was like, damn, these. And then the next day, leader of the group comes in. I got some gold, boys. He had a gold bar. Never seen a gold bar in my life, bro.
Yeah, a real
gold bar, real one.
Bar.
Everybody's passing it around, feeling it. He got 10 G's worth of gold. You know what I mean? They'd be like, what?
Yeah.
This is crazy. So that was wild to see that happen.
Yeah, and that was during 2008, purchasing that gold because of the uncertainty during that housing crisis.
Yeah. Just, because again, he was one of the smartest guys I ever worked with. He was already, first of all, he was always kind of a bearish guy anyway. When all of this was starting to happen in 2008, he already had all these different theories and thought processes. And he knew about, sort of the CDOs and all the other, sort of debt obligations and different debt instruments that were being used that probably most people didn't really understand yet. He knew that they were using that, and sooner or later that a lot of people were going to have to capitulate on a lot of these stocks, particularly the banking stocks were going to get rocked. And, names like AIG at the time, I don't think anybody realized how much they were involved in all of these other companies, on the insurance side and sell insurance and then collect it. It was just crazy. So he was fully aware of all of it, and he was figuring gold was going to take off, and sure enough, it did. But, that's 2008. That's very different than now.
Yeah, I mean, speaking of 2008, coming into 2025 and what we're seeing now, how are you positioning yourself, differently than 2008 when things were hitting the fan?
Well,
I know you were kind of just talking about old Jamal having more on the sidelines to take care of opportunity. I know you kind of touched on that too.
Yeah, I mean, I think that's honestly the biggest thing. Like, first of all, I mean, a lot of the stuff that has happened recently keeps conjuring up memories of, and not memories per se, but just like, VIX numbers and ranges, and like all these things conjure up like 2008, 2020. They're all very different. That's the one big thing, right? Like the 2008 obviously was banking crisis. It has nothing to do with this. Very different time too. Market would drop in 2008. Equity markets would drop, and the bank stocks would be dropping, and oil names would go up, and then the next day it would be vice versa. So different trading environments too. As much as people start talking about, oh, this is like 2020 and 2008, it's not. Obviously 2020 was a global pandemic that nobody saw coming. Very different. This has been somewhat of a government inflicted wound by the market, right? So it's totally different. And as far as how I position myself, I think, Errol, that's the number one thing. Just trying to have some cash, man. Like, again, I see something that looks so interesting. Even this morning, I was interested in getting long bonds again because this went down to 111 and change. And I said to myself, it goes down to 111 and change. I'm interested, and it did. And that's why I had that put spread queued up earlier for ZN, because I was like, okay, these balls are high, I should sell. And then I was like, I'm just gonna wait. Like I'm waiting for at this point where we are, I'm waiting for the fat juicy pitch to cross the plate and then try to hit the home run.
I like that.
Other than that, I mean, I got my short put spreads. I'm already long the market that's down 20%. Well, I don't know, 12 to 11% at this point on the year. I'm already doing that. If we rocket higher, if we're above 5,500 again, that gives me the ability to get short some delta. But right now, I'm not doing anything, and I'm just trying to keep some cash available for even if it's two trades. Those two trades are going to be good ones. So
yeah. I mean, I'm in a similar boat. I mean, I could deploy more capital. I have a lot of long delta on right now, so I'm in one of those positions where over the last week, everything was looking attractive. IV was high on everything. There was a lot of premium to sell. And honestly, every chart kind of looked the same. Everything looked like I was trading the same underlying in terms of what the chart was looking like. So I just really try not to overextend myself on that long delta, but still being prepared to, deploy more capital if need be. But, if we get a little bit of a bounce, I'm going to take advantage of that, snag some of that long delta off of the table, because I do have I'm definitely leaning a lot more long in the portfolio than anything else. So things like Tesla, SPY, QQQ, even good old PayPal. I returned to PayPal. So IBIT and a little bit of the micros on NASDAQ too. But IBIT, with the rally that we've seen over the last week too, it was one of those positions where it kind of snapped back to break even. And I was kind of in a weird spot. It's like, you ever in a trade where you kind of get a get out of free jail card? So it's like you were down so much on the position. Now we're sitting at break even. You still have more time, so you can make the decision if you want to cut the trade now, redeploy the capital elsewhere, or, ride this one out. So got some exposure to the crypto market too. Ended up leaving it on just to, be able to get that exposure. But other than that, leaning a lot of long delta, being prepared to deploy more capital, kind of in the same boat, a lot of long delta.
I feel like a lot of people are in the same boat, honestly. I think a lot of people are in the same boat. A lot of people are long. I don't think, and I don't think they get short here at 5,400. That's why I think we're kind of drifting higher. I think if anything, 5,500 will be another challenging level, because that was, basically around where we were the other day. So I'm fully prepared and expecting for that. Because again, we closed. Come on, wake up, little buddy. That was high, 5,500 basically, where we closed after that big move. Opened there that day and then fell back down. And I think this day is just kind of a recovery. And I don't necessarily, I don't know. I could see two scenarios to this day. I could see if it doesn't, maybe we close around here, or a couple of scenarios could happen, but I don't think the scenario where we sell off because we don't necessarily go to 5,500 happens. Sometimes that happens. Like, we tried to make it to 5,500. Now we're in between. I mean, maybe the market is just exhausted on this week, and it starts to settle down. Because again, talk about ranges. I think I saw something at one point this week where we've never had 5 days in a row with like 5.5% ranges, and I think this was 1, 2, 3, 4, and 5 on those days. So. Yeah, just wild. And I think a lot of people are long delta, and I don't think a lot of people are looking to get too short here or get, to sell.
Yeah, we'll see if this fake rally holds. I know the tariffs are going back and forth right now. Man, I don't know. I'm putting it out there. If China doesn't fold, will we see new lows? I think we'll see some real fear in the market if we were to get that. But until then, I'll trade what the market gives us.
I know. That's why I'm tempted to like get one sort of like put spread somewhere, just on the idea of, and maybe for Friday. Actually, not Friday. I'm tripping. It's Thursday. By the way, Thursday is expiration this week. There's no expiration Friday because we have Good Friday next Friday. So it is fascinating as far as that. We do have a big expiration this week on Wednesday, and then we got expiration on Thursday. So that's going to make for a weird week.
Oh, yeah, most definitely. We'll manage these.
And some earnings.
Yeah. I'm going to be holding long through the Tesla earnings. I really wanted to get some exposure to Tesla. Right now, Tesla's like volatility on crack. I mean, before the tariff news, Tesla's already known as one of the volatile stocks. So long ahead of earnings, I'll adjust if need be. But I'm excited for this earnings cycle. I think it's going to be really telling, considering all the mania going on the last couple of weeks in the market.
I totally agree, man. I think you're right. That's exactly what's going to happen, and everybody's going to be talking tariffs. Errol, as always, man, great to have you on, bro, and I'll see you again soon.
Absolutely, brother. Thank you.
Folks, thanks for watching. As always, be smart, be patient, trade them small, and trade them often. We'll see you.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hey everybody, Tim Knight here. Well, it's the end of an incredible 2 weeks. We've got a very green day on our hands, and kind of the first big green day we've had without any, exogenous reason. I mean, it just kind of went up. People are calming down. People are getting less scared. There was no big, horrible news dropped or anything like that. And I've been trying to think of like how the situation has changed. So we have a very different market on our hands. And here's kind of an analogy or a metaphor that I've thought of. Imagine it was your task to build a bunch of wooden cubes just out of lumber, so square, racing pieces, just build cubes. And you had this huge field, like a football field, just full of 2x4s. It's all just laying flat. Well, that's a lot of work. You're by yourself. You've got your wood, you've got your nails, everything's just all asunder. And that's your task. And then a whirlwind comes and you take shelter. Maybe you're up in the broadcast booth and you're watching what's going on below. And all this chaos happens. Wood and nails and mayhem. And after a couple of weeks, it calms down and you carefully leave the broadcasting booth and head back into the field. And it's a mess. There's lumber all over the place. It's just an absolute mess. But you notice, wait a second, there's a few, they're not quite cubes yet, but they're on their way. There's a partially created one there, and there's a partially created one there, and that one just only needs a couple of pieces of lumber, and it'll be done. And you look around, and it's like a miracle. Wow, the landscape's changed. I can really work with something like this now, and this is a lot easier than it was before. That's what I think has happened, at least in my own world, because when the market was, at or near lifetime highs, and it was just kind of blue sky above, it's very hard to work with because the only strategy is, well, buy stock and just hope it keeps going up higher. And plenty of people were doing that on February 18, February 19, and it stopped going up and it started going down, feeling very unfamiliar to them because we haven't had a real bear market in 17 years. We haven't had a real bear market in 17 years. And for me, yeah, the market's really green today. I love it. It's terrific. I'm having a good day anyway, even though I'm completely short. These are very robust positions, but the market is up, but the landscape has changed. The environment has changed. This is an opportunity-rich environment. I could not have said that in the middle of February, except in as much as valuations were insane. But they always trot out the old John Kenneth Galbraith's quote about the market can stay irrational longer than you can stay solvent, and that's true. The landscape has changed. Tariffs, no tariffs, news, no news, China, it doesn't matter. This environment has changed. We're in a different market now. And I'm seeing all these partially created cubes around, and I intend to finish them. So this is a stock picker's market. It was not before. It used to be correlation equals 1.0. Everything went up and down together. It's not that way anymore. The market is raging higher now. The ES is up about 100 points. The NQ is up 356. The YM's up 665. These are big gains. And a lot of my shorts are still down, not a lot, but they're still defying it. So this is a stock picker's market. You can actually defy the general trend with well-chosen patterns. So that's kind of in my head what's happened. It was an utterly different market based on what's happened over the past couple of weeks. And I'm less worried now about some crazy weekend announcement because crazy weekend announcements typically come when the world is falling apart. I don't think they're going to meet on Sunday and say, well, everything was up 2%. What are we going to do about this? No, it's like, okay, cool. We're past that storm. But I don't think we are. So let's jump in. I've spent a third of my show yammering, but I really wanted to get that picture in your heads. Let's swiftly go through the charts I've got. And we're basically in recovery mode. No surprise. Things kind of bottomed out, really Sunday night. And from a cash perspective on Monday morning. So we're in recovery mode. So there's the spider fighting their way back to, perhaps as high as this gap. Okay, which direction am I going? IWM, the small caps, they made our target and then some. They're pushing their way back. And there's, maybe to here, maybe even as high as here. The gap is higher on this one. EFA, we've already pushed past this level. Let's just get rid of it. That was the high on Wednesday. We have bested that. So goodbye. So the gap is up here. And let me emphasize, so that would be a logical place to get short again. That's one of those partially constructed cubes. It's just waiting for it. When we were here, what are you going to do with that? Buy it and hope. That's it. Buy and hope. Now you got something to work with. It's like, all right, maybe you're long already, but I'm going to get out when it gets to here. I'll go short when it gets there, et cetera. You've got like the answer sheet in front of you. Here's Apple. It has been blasting higher, but look, it's quite close to its gap already and quite close to this exceptionally long, like a quarter century long trend line, the midline of this channel. Will it stop there? Well, maybe. If it keeps going, it's got a couple of cents below. The highest I think it could possibly go is up here. But, it's all kind of laid out. Think of these as our 2x4s that are sort of laid out for us so we know kind of what to expect. Actually, this is the Mag 7. We're just going to bang through the Mag 7 real quick. So that's the first one. Amazon, another Mag 7 member. And in each of these cases, I've drawn, be a little more generous there, kind of some limits on the lift. The most boring by far of these, Alphabet. It's so boring I don't even have a line on this one, but let's put one down just to be nice. So there's a line on that one. Meta, which is down a little bit. So that's pretty weak performance in the face of this huge rally. But yeah, so that's what Meta looks like. Microsoft, here too, we've got a pretty decent line, which, that that line is anchored to Wednesday's high. Maybe it'll get higher. If it does, I'll scooch it higher as necessary. But the real top is this pink zone right here. NVIDIA, zooming in on this, and it's pushing up towards, it's not even quite up. It's not even close to its Wednesday high. So relatively weak with that in mind, but still up 2.5%. And the last of the Mag 7 here, probably the least magnificent of all, Tesla, which, wouldn't you know it, is right on our Fibonacci right there. So it's just kind of hanging out around 250. So that's the Mag 7. A lot of those long-term bearish charts have swooned mightily. Of course, they're fighting back just as mightily now, like CC. This is a beautiful long-term pattern. Neighbors talked about this a lot in terms of a fractal, this being a miniature version of this. And, it's worked out great because it fell from 68 down to 28. But, they're fighting back now. And if we do get a sustained rally, of course, the ones that were battered the most probably will bite back the most. Well, our champion gold keeps winning medals. It's just doing amazing. The front month on gold, about $70. It's been unrelenting. Gold has moved from October 2023 of about $1,800. We're up approaching 3,300 before long. I mean, it's almost going to double, at this rate, just from October 2023. Just an amazing chart. I've kind of given up even trying to get cute and short this thing. This is like Hercules. It's amazing. And of course, the miners are doing well too. Here's a couple of individual ones. This is DRD, up almost 7%, having broken out of this nice little base. And here's Fortuna, FSM, which itself is breaking above this base. So gold miners, the standout sector right now. One long idea I offered, which has plenty to go if this rally has any set of legs, is Novo Nordisk NVO. It had tagged and got a teeny bit below this very long-term trend line. This trend line goes back almost a quarter century. And this had tumbled from this top all the way down to here and bottomed to this week. So that nice little base there, that could rally from that base there, that very low level compared to its recent history. And this is just to illustrate, because a lot of oil and gas producers got really smacked. And if they rally, there's it's not long-term bullish at all, but the fall was fast and furious. And so it could easily kind of fight its way back, perhaps to the gap and maybe even up to the higher gap right there. And as another example, a little better known, Schlumberger, SLB. This had just slipped real fast from around 42 down to 31. So it lost about a quarter. It's a huge company, a quarter of its value. And that's kind of mounting an attack to come back in the other direction. So the prospects are all there. One item that I still think is a very interesting setup on the short side in ETF land is utilities, XLU. We've talked about this diamond, which I've lazily marked with that blue oval right there. And this was a very interesting one. The last rally this had was back on the 3rd of April. It went from about 80 down, of course, on Wednesday was the low, from 80 to about 71. So it lost about an eighth, about 12% of its value in just a few days, which, this is the Dow Utilities. This is 12% is enormous. And since then, it has rallied mightily up to, and it's kind of might be just coincidence, but this line here is anchored to this low on the 25th of March, and today's high, it comes real close. Let's see. The low on this is 76.56. The high today, if this data is right, 76.56. Woo! Well, miracles never cease. That's pretty cool, isn't it? So that might be ready right this second. I don't know. I've gotten burned a few times recently by XLU. I'm a little skittish about it. I think I'll just wait till Monday on that one. And an individual utility, which I am already short, which is behaving itself a little better, it's down, is NEE, Nextera. And we've got a nice clean stop on this one right there, 67.79. gosh, oh my God, I'll have to slow down my voice. I've actually got bonus time here. Okay, well, let's continue with, just got a couple of 3 symbols left. One item, which is sedate, calm, cool, collected. If you're looking for a interesting, I think very low risk perspective bearish setup, is none other than PepsiCo. Obviously you're not going to wake up one morning and find this up 40%. This is an ancient company. For a soft drink maker, it's pretty richly valued, 20.6 PE on this. And in my estimation, around 148 or so is a good stop loss on this. But this is it's an interesting little top right here. Let's paint it out, be a little more clear with each other. Something like that. So, if you look at Coke or Walmart, those don't look toppy to me. This one does. And it's broken its trend line. Not only that, the trend line goes back to, the Pleistocene, March 1980. It might go back more, I just don't have the data. So this is just an interesting, like I say, I think low risk, pretty appealing risk reward ratio in a long term. So Pepsi, take the Pepsi challenge. Okay, so VIX is an interesting critter too, because, until recently, getting the VIX up to like 28 was thrilling, because it was like mired down in 12 and 13. And so, the couple of times it got up to the upper 20s, like cause for enormous celebration. Well, we've beaten that one, because for a while there, the most pops we got here were like in the low 20s. And then late last year, we got up to 28. And then not too long ago, just last month, we got up to the high 20s, and that was the big deal. And I had estimated probably a couple of weeks before things would get fun again. And we bottomed out with a 16 handle down here on the 26, and then the wheels fell off. So kind of begs the question, well, now what? How long is it going to take for this to burn off? Well, I could say easily, a couple of weeks, just like last time. It is important to note that something this explosive, it's a much tougher read as opposed to the kind of cool little sine waves we were seeing before. But like I said, with my little stadium lumber metaphor, maybe the world's so different, there's no point in estimating whether it's going to be 2 weeks or something like that. But we've got a very lofty VIX, which is why, by the way, and I've mentioned this, for any bearish setups I've got, it's just short sales. I mean, I've said many times, you folks are more sophisticated traders than I am. I'm a simple soul. I either buy puts or short the stock. I own a few puts still. Their intrinsic value is like 98%. So volatility could plunge, and I don't really care that much. But I'm not scurrying around with short setups buying options related to them. They're just short sales, which has its own advantages, of course, as well. So you know what? That's a pretty good place to end. So let's get some rest this weekend. Hope you've been doing all right. It's been an insane market. But thanks for joining me, and I'll see you on Monday for more. Bye-bye.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got No Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm. Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get to.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball game. It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the last call, my friend. And the last call, what a call it is. Even the S&Ps are up 96 handles, Sodnoff. And volatility, for the first time today, is unchanged. Up 5 cents. There you go.
All I can tell you is, the near-term volatility, which is VXM, is basically unchanged. But the longer-term volatility going out to like July, it's down. It's down about. It's down almost 2.5–3%, and the VIX, which is kind of confusing most people, is down like $3.50 or something.
Correct. $3.44, almost 10%.
Yeah, but go ahead. I'm just going to caution people to don't start looking at the VIX forward curve and start to think, oh man, volatility is just going to get crushed, because anytime volatility is in backwardation, which it is now, which means the front month is higher than the back month, of course it's going to go down over time. So it's not like there's nothing weird happening. If you want to talk about, volatility was as stubborn as I have ever seen it today. I mean, this was the ultimate case in stubbornness. Wouldn't you agree with that?
Oh, 100% agree. But you know what? Expected.
today, Tony, was one of the first days that you could argue that the SPOOs led volatility and not the other way around.
Yeah,
because if you had watched volatility all day, the thought was we're crashing.
Yep. Yeah.
And
yes, 100%.
volatility has been a very good leading indicator. And the sense that every one of us got today was that, oh my God, this is going to get ugly at some point. And it was actually the S&Ps that carried this market and turned around. The NASDAQ's been strong all day, but the Russell was like a death trade. The Dow did not look good either. And finally the S&Ps turned around. And when that all happened, volatility begrudgingly came with it. And I haven't seen the market lead volatility this entire move. I don't know if it means anything. I don't know if it means maybe there's a short-term bottom in place. I'm not sure what it means. But I would say you could argue today that there was a little bit of change in leadership to the upside.
Leadership, you mean that volatility is not going to be the leader anymore?
Well, just that the S&Ps
I think it just took a break. You're going into a weekend. A lot of stuff can come out. Anything can happen. You're going to get paid for holding positions going into Monday if none of those events happen, and you're going to have your work cut out for you, or at least not get paid as much. But man, it all has to go to parity to expiration. Now there is 34 or 35 days to expiration till May, so you got a lot of baseball to play, Sadnov. A lot of baseball.
Yeah, I think that to tape action today, there's 4 days left in April, and I think the tape action today made me think. And listen, I'm just a expiration junkie. I always say I'm a trading junkie, but the reality is, throughout the years, I have done my best work in the last couple of days as you get close to expiration, and I don't trade as much front month stuff now as we used to, but I do like trading expiration week. Just the sense of it, because the urgency of it and stuff like that. Sure. And I did not get the sense in March triple witching that it was going to be a bullish, week. And we thought early in the week it would be bullish, late in the week it would be bearish, and that's exactly how it played out. I get a different sense this time that today was the first time I think the sellers got a little bit tired. They might have exhausted some of the sellers today. And I think that, it took a long time for volatility to roll over, but there were some signs of a few reversals out there. I'll bring up just a couple things, and you're going to think some of these are weird, but crude oil looked a little bit stronger than it has in this entire move. Bitcoin rallied all afternoon.
I mean, this is the first time crude oil it has been up, Tom. It's up 2.5%. I mean,
I understand. I'm just giving you my things that I've been watching. Crude oil rallied a little bit. Bitcoin got strong. These are like the peripheral assets that people come for when they feel a little more comfortable. Silver had its first uptick over gold in like 3 weeks. I am so bearish on gold for next week. I sold some extra futures. I'll probably sell some more futures before the close. I'm going home very short gold. I don't know why. I just feel like it is the most overpriced, absolutely the most overpriced asset out there. Bonds were in, you could argue earlier in the day that the bond market looked like it was in crash mode. At 10 o'clock this morning, it's down 2 full handles. It hasn't had an uptick, basically, except for that little, the tariff pause. Hasn't had an uptick other than that. And it really looked bad. And there was heavy selling. And then all of a sudden, the selling dried up. Bond's only down 11 right now. I would say, if you're a bond trader, that's a huge freaking win. Huge.
Yeah, sure. No doubt. No doubt. I will give you that too.
And all the indices turned around and went higher. I mean, there are some stocks like Meta and Tesla and Reddit and Palantir. I mean, there are some red stocks on your screen today. Netflix is still red. But what I will say is if you look at your P&L on most of your short premium positions, it did not look pretty this morning. I can tell you from my own. I mean, I know how everybody, like my own P&L was down big this morning, and now it's up big this afternoon. So there was a huge reversal.
Most definitely, no doubt about it, Tom. Yeah, I have everything you've said is spot on as far as I'm concerned.
And those are just like observations. Just 2 quick mentions too. I don't know if anybody wants to play earnings or anything, but I did put a really small position on in Goldman Sachs. It has earnings before the opening on Monday. So I would consider Goldman Sachs to be a 2.5-star liquidity. I don't even think it's 3 stars. So I don't think Goldman is a great trading vehicle. I think it's okay. And if you want to trade it, you can.
Yeah,
stay
markets
super
are not.
small.
Markets are a little wide.
No,
I mean, it is almost a $500 stock.
Yeah,
but sure.
I would give it 2.5 to 2.75 stars on a 4-star liquidity, meter. I would say here's the interesting thing for next week: the expected move for April, which has what I say 4 days left, right?
Yep.
The expected move for April with 4 days left is
$33.
$33. You can
Almost
go
34. But yeah,
you can go 2 times the expected move in April, because that's what I did, and you can collect almost $3.60. Does that seem like a lot to you? It does to me.
Yeah, I mean it's a lot of buying power to use for an earnings trade, but you are going shorter dated. Remember we talked a little bit earlier this morning about how these earning trades, and you're in the monthly options. You're going shorter dated here. I don't think you'll get that opportunity in a quote unquote bank stock unless we were in the kind of environment we're in right now. So I say it's the right thing.
I agree with you. Just some other observations if you want to know how crazy volatile this market is. And they did take a little vol out today, but the VIX 1 day for Monday is still 50.
Yeah, it's crazy.
50. Yeah,
it's crazy.
mean, these are numbers like we were talking about VIX 1 day at 9. VIX 1 day at 8 before, and now we're talking about VIX 1 day at 50. I mean, this is just
I could use a week of 9, and then we can go back to 50 if we could do that. Can you make that happen?
I can't. I've tried.
I didn't think so.
I've absolutely tried. For me today personally, the biggest loser we had for the second or third straight day was gold. I mean, and I don't even have that big gold position on, but this week, just to give you an idea how much gold's up this week, one day it was up 110, the next day it was up 120, and today it's up 70. These are absolutely massive moves. In 3 days, it's up $300.
And really without a pullback on those 3 days.
Not even like $20.
You had 3 down days, you had 3 up days. I mean,
not even $20. We have the gold silver ratio on, meaning we're short gold, long silver. We also have on some naked gold contracts. And then lastly, we have on we have some naked gold contracts, and lastly, we have on a bunch of strangles, of which we are leaning short. But these things are. This is crazy stuff. Like you're talking, you're talking. It's crazy time. I'm gonna get a little bit shorter here on the close in gold. I don't know why. I'm probably asking for trouble.
You will probably regret it.
I'm gonna probably regret it because every time I get a bug up my butt like this, I'm gonna get a little more short in gold and I'm gonna get a little more short in GLD because I've lost so much money in there this week that I'm not adding to contracts. I'm just narrowing my call side.
Okie dokie.
Yes. I'm not going to love myself in the morning for this either. That's all I can tell you. I'm not proud of myself here. I haven't had a winner in there in like a week. So, and every day it's my biggest loser. As far as winners go today, man, everything. The only losers were gold for us. Everything was a winner. Oh, I take that back. We did lose in the euro. The euro was and bonds. I'm sorry. I spoke too quick. We lost in bonds and we did lose in the euro. Only in commodities today. We didn't lose anything in equities. The euro just blew out of the upside this week. Absolutely blew out the upside. And it's probably the biggest 1 week move I've seen. And bonds, bonds were just short premium, but the premium, it just exploded in there. Do you know the bond IVR today? I don't know if you looked at it. It's 96 right now. It was 125. It was 125.
I got more emails about bonds today than I typically do. It's not usually.
No, of course not. 125. I have not seen, Tesla can get to 150,
Right.
in crazy moves. NVIDIA can get to 125 intraday. Bonds, like what the hell,
I know. And an Ivy rank of 95. I mean, you don't see that every day.
No, but it was 125 during the day. It was insane.
I know. No, I get it. I get it. Yeah.
It was absolutely insane. So this has been, we're finishing up a wild week. The game plan this week was to come back after last week, and I guess in the end we came back a lot from last week. We didn't get it all back.
No, not all of it.
Nope, not all of it. We came back nicely, probably better than I thought a week ago. But we did not get it all back.
No.
But a pretty wild week. Tony and I answered emails for.
Oh my God!
We answered phone calls all week. Yeah. It was a lot of fun. It was a lot of emails. It was a lot of fun. Hopefully next week's more normal.
Yes. Hopefully next week is more normal. 100% agree. That's what I want to see too.
Next week is a short week because Friday is Good Friday, so expiration's on Thursday. Very rare. And it's also really rare to have Netflix earnings on expiration. I have a Netflix position on. I don't know if it's going to come in or not prior to earnings. But next week is going to be, I don't know if there's other earnings either, but next week's going to be pretty damn interesting. Shortened week, heightened volatility, expiration, let's go.
Yeah, let's go. Netflix still got an Ivy rank of 71, back in the middle of its most recent range. It's, listen, Tom, you remember even the S&Ps. I mean, we've had quite a move here, up and down. We're about a 50% retracement. So all bets are on right here. Like, you've got those who are saying we made a capitulation low. Volume is back more towards normal than it has been in recent days. I mean, you look at even the S&Ps, 1.5, much more normal than 2+ that we've been having.
You could argue today was exhaustion. Trader exhaustion. I feel like I traded a third the number of trades today than I did 2 days ago, and much less than I did yesterday. So I think it was a little bit of trader exhaustion today. It was almost like up 96 was a relief rally in the S&Ps.
Agreed. I will give you that too.
Do you ever think you would say up 96 and you're inside the range?
No, not no, sir. No, I'll just go with no.
Up 96 and well within the expected move today, which was 135. So, I mean, we had a range of outside 135, but we're closing inside that range, which is I hard to say this, but a good day for the zeros. It worked. But it took a lot of balls to lay those out there today. That's all.
Oh, it sure did. Unbelievable. Oh, well, a wonderful week, a crazy week, a lot of things said, a lot of opportunities missed, a lot of opportunities gained. You
can't beat yourself up on opportunities missed because
you have to. You always think you could do better, and when you don't do well, you always feel like you didn't perform right. I mean, there were some crazy opportunities, and I told you I got chopped up 2 days in a row. I mean, it ain't easy out here. That's for sure.
Yeah.
Tesla's still down today. You mentioned Reddit already. Reddit's down today. But you had your players today, the upside. You got Apple back up $8. You had JP Morgan for earnings was up 10, but MSTR up $27. We haven't talked about Bitcoin hanging in there up over $4,000.
Bitcoin was really strong. So going back to last night's earnings. So I did JP Morgan and I did Morgan Stanley, and on the opening they were well within the range, but volatility was up so much that we didn't make any money. But I kept it on for a couple of hours, and about 3 or 4 hours later they each came in by well over a full point. So I took them off when JP Morgan was up like 6, and when Morgan Stanley was up, I want to say $1. I don't know where it is now. I haven't looked, but I closed them out. Yeah. And
Morgan
so,
Stanley's up almost to $1.90 or so.
And so I closed them both out, and they both came in. JP Morgan came in about almost $1.50, and Morgan Stanley came in $1. So the earnings plays were worth it, but they didn't come in on the opening. I think got a better chance than maybe on Goldman. In Goldman, I just sold a 2 times the expected move, weekly strangle, and we'll see what happens there. I think there'll be a few nerves over the weekend, but I don't think it'll be anything like it was last weekend.
I hope you're right. That's all I'll say that far. I hope you're right.
I missed last Sunday night show because I was on the road, but this Sunday night we'll be back. So I'll be doing the show on Sunday night with Victor Jones, who joined Tony and myself this morning. But I'll be on with Victor on Sunday night, along with Pete Momat and Ilya Spivak. So the 4 of us will be on. The show starts at 4:55. I know it's a weird time, Central Time. 4:55 Central Time. That will coincide with the last 5 holes of the Masters. So, I mean, you don't want to watch the Masters. So that's our competition on Sunday night. But 4:55 to about 5:35 on Sunday night. So let's see. We had our largest audience ever last Sunday night, and hopefully, we'll bring a lot of stuff to the table. This week was the busiest week ever at Tasty Live, and that's because we talked to customers all week, and I thought that was kind of cool. And hopefully,
and I think it was important. I think it was appreciated too.
We didn't give any trade ideas this week. It was kind of more of just adjustments and things like that. We covered a lot of topics all week, and we have a lot of really good research that's backed up and on the table right now. So we have lots of stuff to do, but it was all in all, we navigated through. These are the tough weeks. You got to deal with these when they happen every couple of years, and you just got to get past them. It might take a couple of weeks or a couple of months to get everything back, and then you just move forward.
Not political, just asking you. KWeb, a Chinese ETF up today. And I know the whole market's up, but usually they don't come for these pigs. BABA up $3 and change. Yeah. Baidu up. You think that's encouraging for maybe some change in the stance?
No, I just think it's not, the concept of the chatter about like delisting Chinese stocks is so stupid. Let's end that let's end that discussion right now. That's not even, relevant. If you did want to get back at China, wouldn't it make more sense to list all the Chinese companies in the U.S., not kick them out? Wouldn't you want all their business?
All the business, bring all the boys to the yard.
Wouldn't you want all that market cap and wealth to trade in, on the U.S. exchanges? Wouldn't that be the biggest kick in the butt? I don't know. Sometimes I wonder how politicians even think. How stupid can you be? Why do you want to kick these companies out? What you really want to do is you want to bring them all in, and you want to control. You want to control the regulatory environment within which they play. You want to bring all that money into this country. Why would you want to kick it out? Doesn't make any sense.
Right.
And so, no, I also think that, sometimes cooler heads prevail. And I think that's the situation here. As much as, listen, BABA is good for the American consumer. Baidu is good for the American consumer. So is KWeb. So is PDD. Let's face it. These are consumer friendly companies that lower our costs for everything else.
Makes sense, right?
Yeah. I mean, but let's at least, at the very least, bring all that capital to the U.S., bring all that liquidity to the U.S. Doesn't it say something globally if you're a Chinese company and you're in the middle of a trade war with the U.S., doesn't it say something that you want to list your company in the U.S.? That's a statement right there. I would be way more worried if they said, if they said we're leaving,
right.
That would bother me more because, listen, Baidu and Baba listed in the U.S. is definitely has been good to us over the years as far as, another opportunity for profits. We're profitable in those stocks over the last, 5 years, easily, very profitable. So, I don't want those companies to go away.
Right.
I don't know where FXI is trading. I haven't traded it in a while, but
I haven't traded FXI.
It was like $31 or something last time I looked.
33, but it's up $1.30 today. So you were right on the nose.
Yeah.
Are we limping into the close up 93.4?
No, we're just settling into the close. I don't think this is a limp. I think it's more of
I don't think it's a limp either. I think we're settling in is a good way to put it. Volatility finally contracting a little bit down 30 cents, but a nothing move for today's move.
I agree with you. I think this is I actually think this is a very good close for the bulls. This is one of those closes where they didn't sell off $50. They didn't scare you into the weekend. I'm not saying that.
There were plenty of scares, Tom, but yeah, I understand.
Early in the day.
Yep.
But they're not closing bonds down 2 points. They're not like, they're not selling a lot. Like they're buying Tesla here into the close. They're bidding up stocks. They're not taking them down. I think this is a pretty healthy close. Pretty healthy close for the stock market. And I look at this probably as a kind of a positive sign. I mean, yesterday's close, we were down 200. It looked crappy.
Yeah, right. You're 100% correct. No argument from me.
Yeah, I look at this as it's, fairly positive. I like it when they don't take every offer on the close. They just kind of close them right in the middle of the range. It feels so much more organic to me.
It does, but you still had big moves today. Silver 4%, gold 2%. I mean, Euro was still good.
Oh, you're
still bid. I mean, you still had some big movement here today. I mean, Euro's off of its highs, but you still have big movement.
Damn straight. I expect the Euro to pull back next week, and I expect gold to pull back next week.
Well, if gold's going to pull back and the Euro's going to pull back, you would expect bonds to stay a little bit bid also, and then kind of bullish for the market, right? I mean, with that stance, or you look at them all as individuals now because, everything seems to be its own individual.
Yeah. Well, there we go. It's pretty much a dead smack in the middle. Nothing closed right where we were trading, and I think this is a good close for most people.
This was ring the bell. I'm tired. You're right. This is exactly what it was.
This was an exhaustion bell. Let's take a quick break and we'll see you Sunday night. That's what we're going to do.
We certainly will. If it was a fight, they'd stop it. We'll take a quick 90-second break, come back. We got more Tasty Live. Immediately found these messages on Sunday. Peace.